Yeah, you're live, Bobby. Break leg.
All right. Hello, everyone. Good morning, good afternoon, good evening, good night, depending where you are. Today is the Global Online Active Traders Summit that we are hosting. We have several fantastic speakers from all over that are going to be here to talk to you about the markets and some of their proven trading techniques and tips and tricks that they've been able to utilize over the years. I'm Bobby Hiller. I'm going to be the host today. I'm with Metastock Software. All of the speakers today are partners of Metastock. They utilize our charting and analytics services to kind of help them with some of their trading analysis. Before we dive too deep into things today, I do quickly have to go over the legal disclaimer, and then we'll get right into things. So this demonstration, it's designed to instruct you on using Metastock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security. So now that that's kind of out of the way, we'll take a real quick look at today's schedule. So first up, we're going to have Alex. He's already joined with me here on camera, so everyone can say hello to Alex. Then we're going to be going through. We have several speakers. We know that everyone's kind of in different time zones, but we thank you all for being here. If you are not able to attend for the entire event today, we will have a recording available, so you can access the recording. We also had several kind of offers for those of you who are maybe watching on YouTube that didn't register with GoToWebinar. If you visit metastock.com/international-summit, you can register for the event there, as well as opt in to receive some of the bonus offers coming from the speakers today. All right, with that, because I don't want to eat into too much of Alex's time here, I am going to kind of pass things over to him. We've been partnered with Alex for a great number of years. We've done some in-person events with him, but this is the first time we're having him on to do one of these multi-speaker online events with us. So we're really excited to have you here today, Alex. Thanks so much for agreeing to join. I know you have some great materials prepared for us today.
Bobby, thank you so much for the invitation. Everyone at Metastock. I have a lot of, as you mentioned, a lot of material, and probably a bit too much, but I'll go ahead and try to make the most of it.
Fantastic. So I'm going to make you the presenter here. You should get a pop-up asking if you want to share your screen. There Absolutely. We go. I see the MACDV presentation.
Absolutely. Can you see? Can you? Yeah. You can. I've got it in full screen. Can you see it?
Yep, I can see it. It looks good. And
fantastic.
Yeah, so we do also have people watching on YouTube that might have questions as well as in GoToWebinar. Do you want me to relay those to you at the end of the presentation, or?
Yep, let's try to leave it at the end because it won't break up the flow of the presentation.
Perfect. Okay, we can do that. Well, it's all you. So yeah, you have about the next 50 to 55 minutes.
Thank you so much. Thank you so much, Bobby. Jeff, and Metastock, the good people at Metastock. I've known the company for a very long time, and they're excellent people, and they're excellent, and use the excellent software as well. I have a lot of material to show, so I'll go through it as quickly as possible, and perhaps we can have another session. We'll be spending a little more detail. So today's presentation is about an indicator called MACDV, volatility normalized momentum. It's a twice awarded indicator, and we'll be talking about the MACDV and more about it. So Bobby gave us a bit of the risk warning, so I won't bother reading mine as well. I usually don't make any guarantees at my webinars, except one. that you will have losses in trading. So that's the only guarantee you will get out of me from this webinar. And also the second guarantee is I'll try to do my best to share the few things about markets since the past almost, of course, 25 years and I've been trading. So, okay, so what is this topic about? The topic is about momentum. And in specific, we'll be talking about a paper I wrote in 2022, which is this one, the infamous paper called MACTV, Volatility Normalized Momentum. And this paper was awarded, actually, was submitted to 2 competitions, international competitions. The first one was the Charles Dow Award by the esteemed Chartered Market Technicians Association, and which won the first award, the Charles Dow Award, and also the for best research, outstanding research in technical analysis, and also the there is the equivalent one for the National Association of Active Investment Managers, and I also managed to win the same award in the same year for MACDV. So as you can see, there are 2 professional bodies who have reviewed the work and found it of high value, so enough to be awarded. So I would ask you to, give it your have your attention, because what we'll be saying today, it might be actually be worth your time. Okay, so this is how my presentations usually end. So in order to try to keep you awake, I will have some attendance bonuses. The first one, I will give you my awarded paper. I will also send you the MACDV indicators, both the indicator and the histogram. Of course, Jeffrey will be providing you the details of how to exactly do that. And also, I'm also having a MACDV momentum model webinar, which is more advanced of what we will be seeing today. And all you have to do is 2 things. First of all, be awake by the end of the presentation. And secondly, just email me, alex@alexspiroglou.com. So this is all you have to do. Okay, so context before content. Where are we? Where does this whole thing fit in? So let me give you a bit of my philosophy of trading, which is multiple time frame, multiple factor. My style is called MTMF. Why is that? Because I believe that there are, in markets, as you all know, there are different factors affecting it, fundamentals, technicals. You've got different time frames. So I've always believed that each time frame has its own return drivers. There are different factors that affect each time frame which are critical to that. So for example, on the monthly chart, the big factor is the business cycle. On the weekly chart, the big factor is macros, what I call like commitment of traders reports, sentiment, seasonals, intermarket analysis, and so forth. Then I go to the daily chart, and then I look at the technicals. And of course, then I have to trade, pull the trigger. And for that, I use the 4S framework. The 4S framework, which is setup, signal, stop, and size. So how do I put this together into a workflow, into a roadmap, into a learning path to categorize what I have to see in what order? So this is what I call the smart strategy system. Well, first of all, I look at the macros. Macros are the why markets move. It's not a fundamental question. Then I look at the when, which is the technicals, because macros answer the question why, and technicals offer the question when. And then I look at a model, which is putting everything together, which is the how, a system. So this is how it looks like. This is all the factors. Sorry, this is the factors I look at. So for example, for the macros, as I mentioned, intermarkets, commitment of traders report, sentiment, and seasonals. Then for technicals, I look at the trend structure. It's an 8-stage roadmap I created for defining the trend, relative ranker, relative strength, again, very quantified and systematic. Then I look at the MACDV model, and then volatility. This is the core 4 of technicals and market I look at. And then I put everything into a system, which includes the setup, basically why I want to be long or short. Then I look at the signals, stops, and size. So these are the core S4 components part of a trade: setup, signal, stop, and size. So today's topic is about the MACDV model. This is it. So although momentum is an an extremely important factor. I just don't want to be presenting it as the be-all and all of technical analysis. And secondly, also going to be showing you where it is placed. So this is the big picture, context before content. Okay, so each of these factors, when I have to teach it, of course, it has to be very rules-based, very systematic. And so in order to explain it, and this is what we'll be going through for the MacTV, it's broken down in 4 parts. So each of these factors. And I use what to explain it, the TIRE model. TIRE is the acronym for theory. First, I learned out the theory, the theoretical background, the necessary information to understand what this is all about. Then I make indicators or models. R is for rules-based frameworks, rules-based model, and then edge. When then I look at the statistics, examples, and so on and so forth, basically put some numbers to get an understanding of how my rules and the systems are working. So this is the TIE framework, and I use this for each of these aforementioned factors. So let's put it for the MacDV. So theory. Why does this matter to us? I think this is the most important question to begin with. Why does this matter? Why should you be here? All right, what does this matter to you? First of all, I think traders lose. When you have a losing trade, it happens for three reasons. It happens for 3 only reasons. The first of all is the setup is wrong. You're directionally wrong. Just take a quick look at the red arrows on this chart, and you will see that it was short, 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 and these were losing trades. Why? Because they were directionally wrong. The market was in an uptrend, and you were trying to short the market. The second reason, so the setup was wrong. The second reason someone may lose is because of the signal. It's wrong timing. So, which means you may be looking to be long a market, which means your setup was correct, but your signal was wrong. So it was either too late or too early. The third reason why you may have a losing trade is because of your stop. So, for example, your direction was right, your timing was right. This is where the green arrow, but your exit was too late. So your stop. So setup, signal, and stop. Today's topic and the value of momentum is timing. Momentum is about timing. It will help you with the timing of your entries, and also how to pick a correct strategy. So as my friend Ralph Acampora, one of the founders of the CMT Association, said, always listen to mom, momentum. Always listen to your mom, momentum. And today we'll be showing you how to define momentum through the MacDV. Okay, so second part of the theory is what is momentum? Let's try to make sure everyone's on the same page. What is momentum? Okay, let's try to see it through an analogy. Before we go to the analogy, there is a well-known adage in the trading world, which is called the trend is your friend, right? What momentum tells you is how close of a friend that is. Is he a really good mate, or is something casual acquaintance? Does it mean that you have a lot of momentum, or do you have little momentum? So following the trend is important, as we first saw on the setup, which has to be directionally correct, but the timing is a matter of momentum. So let's try to see it through an analogy. This is a map of England. This is where I currently live. I come from Greece, actually. So supposing you are in London, right? And you want to travel north. So that's your direction. That's your trend. Or you travel south towards Southampton or Portsmouth. That's where near I live. So that's a downward direction. So that's bullish or bearish. So that's your direction, the trend. Momentum is your speedometer. So if the car is going north, bullish. If it's going south, it's bearish. The speed that it is going is momentum. So that's your analogy for momentum. It measures speed. So let's try to go from theory to indicators and see like at the momentum indicator taxonomy. If you look at for example, a Metastock technical and the software, you will literally find hundreds and hundreds of momentum and price-based indicators, literally hundreds of them, to the point where I think there are probably more technical indicators than actual traders. So how do you pick one and why? Let's create a basic understanding of of how the technical analysis indicators are organized. There are by and large two types of momentum or price-based indicators. The first one is range bound and normalized. Range bound means they have a scaling from 0 to 100 or minus 100 to 100, but they have a lower and upper limit, and they are normalized. So examples with the RSI, the CCI, stochastics, %B, %R, and so on and so forth. And then you've got unbound and non-normalized. So for example, like the MACD or rate of change, and so on and so forth. So these are the two types of categories of indicators you can have. Now I say I must have used both types, but I'm not 100% happy with either of these. I'm not saying that there is anything, I mean that you're useless, but on the contrary, they're very useful. But there are occasions when either of these doesn't work. So let's look at this and try to evaluate them. Let's create an evaluation scorecard. We will evaluate range bound indicators, and then we'll also evaluate unbound indicators through various criteria. And we'll use the same criteria for both types and see when it is best to use one type of indicator and when it's best to use another type of indicator. What are their pros and cons? So, okay, let's try with range bound indicators, for example, like the stochastics. Everyone, I would assume, probably knows the formula for stochastics. I won't go into the details. I mean, there are probably hundreds of YouTube videos on it. So let's try to see an example. What is the advantage that range bound and normalized indicators have? All right, top chart, S&P 500 futures, and then at the bottom you got the stochastic oscillator. The advantage they have is that they have normalized scaling, which means they go from 0 to 100. That practically means that they are comparable across time. So it's 70%, 80%, 5%, 10%. So it's on a percent basis. So you can go across through time and use the same reading and make some sense of it. So it's normalized. So if it's normalized, the scaling means the values are comparable across time for the same security. You can say get an 80% reading and you can use that across time. You can also compare it across securities, because if one is at 80%, the other one is 20%, it's comparable. And you can also create what they call a life cycle model, momentum life cycle model, which basically, you can say this is when it's overbought, this is oversold, this is going fast, this is going slow, and be objective about it across time and for the same security or across securities. So this is the advantages that range bound normalized indicators have. What are the disadvantages? First of all, the values cannot adapt to trend. Here is an example. Again, same S&P 500. The market is under some very, very strong trend. And look at what happens at the stochastic oscillator. It gets pegged at high values because it has a normalized, and that means a finite range of values it can achieve. As the market is uptrending, as you can see with the green up pointing arrow, the stochastic oscillator has more of like a sideways movement instead of adapting to the trend, which means it cannot expand with the trend. The market goes up, the indicator has higher value. The market goes up, the indicator has higher value. It gets like pegged at high levels. That's, you can get the max value you can have is 100. And the problem with that is it doesn't make sense. The value of the indicator is not indicative of the strength because it gets limited by that. So it's comparable across time, but it's not indicative of the absolute value of the momentum. The second problem it has, the values cannot again adapt to trend. They get prolonged overbought and oversold reading. So again, during strong uptrends, they get pegged at high levels. So you can get overbought, so-called overbought, for a prolonged period of time. For example, in this particular chart, the market was rallying from say November to April, and you were getting overbought signals. Well, actually, it wasn't overbought; it was just strong. But that confused the indicator because it was range bound. It couldn't adapt to the market. So that's the problem with the going back to the indicator evaluation scorecard of range bound indicators. The indicators cannot adapt to trend. When it comes to extreme readings, they get prolonged. I mean, they get pegged at high values, and as such, the divergent signals you get are false. A lot of false signals. So diverse signals. So that's the pros that range bound indicators have, and these are the cons. That's through your indicator evaluation scorecard. Now let's switch to unbound indicators. All right, let's try to see boundless, unbound boundless indicators like the MACD. Unbound indicators. All right, let's take a deep dive on the MACD. Again, I won't be spending too much time on the mechanics of it. I'm sure it's well known, and even for those that are a bit newer to the game, there is plenty of information available. So it was designed by Gerald Appel, created in the 1970s. He received an award for the design of this indicator. So it was and from, if I remember correctly, from a study that I think was done on Bloomberg, it's the second most popular in the technical analysis indicator of all time, after the RSI. So it's been around for a very long time, close to half a century. Well, actually, a bit more than half a century. So the formula, again, it's like a MACD line is a short EMA minus a long EMA. The most usual settings, the default setting is 12 and 26. You've got the signal line, which is an exponential moving average of the MACD line. The default setting is 9. Again, these are not written in stone. And you've got the histogram, which was discovered later, not by Gerald Appel, presented in the Technical Analysis Stocks and Commodities magazine. So it's the MACD line minus the signal line. So it's the fourth derivative of price. So you've got the first derivative of price is the EMAs. MACD line is the second derivative of price. The signal line is the third derivative of price, and the fourth histogram is the fourth derivative of price. So what is the advantage that the MACD or unbound indicators have in general? So the first thing is that they adapt to trend. So here's a classic example. The market, that was the COVID decline. And as you can see, the market was falling, and the MACD was adjusting to the trend. It was falling along with the market. It wasn't getting pegged at low levels. So the more the market was falling, the more the indicator was following it as well. So that's the advantage that unbound indicators have. They are limitless, at least in theory, as to how much they can expand. And also, you don't get prolonged extreme readings, because they adjust with the market. So in this particular example, after the rebound, you can see the market was getting overbought, so to speak, on the stochastic oscillator, and you will probably say, oh, the market is getting overbought, we shouldn't be trying to get in. Well, just watching the MACD, it was the MACD line was above the signal line, so it was just telling you that the momentum is bullish. It didn't portray, overbought or oversold, but it was just telling you that, follow the trend. There is good momentum. So the stochastic oscillator or the RSI or any range bound indicator would probably be fooling you, in the sense that it was getting pegged at high levels, so you might be getting alerted. While an unbound indicator will be doing the opposite, saying go ahead. So these are the two particular periods I was talking about. Excuse me if I'm going a bit too fast, but I have a lot of slides. So again, as I mentioned, we can do this again. So as such, you could be getting less false divergent signals. So here's an example. Again, you'll be getting divergent signals watching the stochastic oscillator. But if you if you consulted the MACD, you wouldn't, because it was just following the trend. because it was able to do so because it's unbound by nature, by its own nature. So the indicator evaluation scorecard, the trend influence, the unbound indicators, can they adapt to trend? Yes. Do they have extreme, can they react well to extreme readings? Yes, they adapt to it. Extreme trend influence is where they shine. And do they have, do they get divergent signals adapted? Distorted? No, they don't. They have better because they can portray the trend much better. So the trend influence, I think you would better use an unbound indicator. But let's look at what happens to normalized scaling. Now let's try to look a bit more detail. As you know, on the that's the MACD chart, and on the right side we have its scaling. But its scaling is an absolute number. If you remember the formula, it's 12 minus 26. So which, what is the price? You have the moving average and a second moving average, a longer, and then you take the longer minus the shorter minus the longer, and that gives you an absolute price. It has been normalized. So the absolute price of the MACD is totally dependent upon the price of the underlying security. So the numerical value of the MACD is useless. So is it stable across time? So this is a chart again from 1997. For the paper, I didn't use the futures chart, I used the cash chart. So I did a very in-depth study. I went back into the 1950s. So this is how it looks like. Here's how it oscillates, and you can see it goes all over the place. And if I was able to show you the chart of from the 1950s, you would see even a bigger fluctuation. So it's not stable across time. It means it doesn't have overbought and oversold readings. So let's put some numbers. From 1957, again, this comes from the paper. It will be available to anyone that shows me how to, that emails me. So from the 1957 to 1971, the maximum value that the MACD had was 1.56. The minimum value was minus 3.3. From the 2019 to 2021, that's the study stops there because that's when I did the paper. And of course, it can be updated. Will be the difference will be even more starking. The maximum value of the MACD was 86. The minimum was minus 225. Now, does this mean that from 1957 to 2019, momentum increased 40 times over? No, it was just a function because there was an absolute increase of the numerical value of the S&P 500. So the absolute price of the MACD increased as well. So it was just reflecting that. It wasn't momentum. So the numerical value was completely useless. The same thing is even more pronounced on the downside. During 1957 to 71, the mean value is minus 3.3, and the equivalent for the second period was minus 225. So it's not stable across time, which means you cannot compare it across time, the values. It's absolutely useless. And as you can see, as such, you cannot compare it across securities. For example, chart on the mini S&P 500 is the MACD right now is around 23, but for feeder cattle futures is around 4.7. Does that mean that the S&P 500 has 5 times more momentum than cattle? No, it doesn't. It just means that it has a much higher numerical value. So it's not stable across securities. It's not comparable. You cannot take the value of the MACD from S&P 500 and compare it to the equivalent value for feed cattle or any other market and say, oh, this has more momentum than the other based on the absolute value. And we're talking about two relatively high priced items. Imagine if you're comparing like the S&P 500 versus a currency when you go like four decimal places. So it's not stable across securities. So you cannot compare it across securities, the absolute value. So that's the second big problem that the MACD has, or any type of unbound indicator, because they're absolute price. And as such, you cannot create a momentum life cycle model. Basically, a framework to say, no, this is the market is overbought, this is oversold, this is going fast, this is going slow, so you can use it for signal filtering. Say I want to be taking when the signals when it's overbought or when it's oversold, or when it's going fast, and adapt your strategy. You cannot do that with a MACD. So life cycle model, again, you can't do it. Again, this is the chart. You can, as I mentioned, this is a more visual of what the point I was trying to make before. You cannot say, okay, if it's above 10 points or below 50 points, it doesn't make sense. Another problem that the MACD has is because it's a trend following indicator. The good thing is that it will always give you a signal. It will always speak because it's a trend following indicator. The bad thing is because you can't filter it, it will give a lot of false signals. You cannot pick and choose which signals you want. Say I want overbought or oversold, fast, slow, and so on and so forth. So you have to take each and every one. If you follow signal line crossovers, personally, I do not. But for those that do, you know that you cannot filter this. So the signal line accuracy is very bad, as it is with all trend following systems. That's all trend following systems have this issue. They have very low success rate. I mean, usually to 30 to 40% at best. Usually are 35%. So the fifth limitation is sometimes because it has a lagging nature in highly volatile environments. Again, so the timing for the signal line and the MACD, sometimes it can be very bad. So that's why I don't use it. I use it for other purposes very successfully, but not for signal generation. So this is the overall indicator evaluation scorecard. So normalized scaling, range band indicators shine. The unbound indicators are not good. They cannot compare across securities or time. The trend influence, it's better to use an unbound indicator. Range band indicators are not good for that. So you can see the results are mixed. Sometimes in one type of environment, it's best to use range bound, and on another type of indicator, another type of environment, it's best to use unbound. So usually, by and large, when you have your range bound, your ranging, it's best to use normalized indicators. When you're trending, it's much better to use trend following indicators like the MACD or rate of change and other indicators of that nature. Okay, so let's try to see the PPO, because there was an attempt to normalize, to solve these problems by a gentleman whose name escapes me, unfortunately, this time. So basically, what they did, they tried to normalize the MACD, basically put it as a percentage. So the MACD percentage, you may also find it referred to as PPO, percent price oscillator. So what's the formula? Basically, they took the MACD formula, 12 minus 26, and what they did is they tried to put it on a percentage basis, divided by the 26 and multiplied by 100. So it's exactly the MACD formula divided by to put it in context, to put the absolute value in context of the current price and multiplied by 100, put it on a percentage basis, which was a smart idea. Basically, you take an absolute price indicator and give it some kind of a percentage basis. So let's see how it reacts across the various limitations. Again, this is chart of the S&P 500 going back to the 1960s, and as you can see, it looks quite stable. Of course, there are deviations upside and downside, but these are a function of the advantage that the MACD has, that it's an unbound indicator. But by and large, it has a set of finite values. Again, all this is a lot more in depth into the paper. So again, feel free to email me so I can send you the details. Here's the stats. So what I did try to find if there are any the mean values that it's rotating around. I found that when the PPO for the S&P 500 is between 2 and minus 2%, 94% of the values are there. So you can have overbought and oversold readings when the PPO is above 2 and minus 2%. So it's quite stable across time. So normalizing like this by price works quite well. So let's try also to so it works, is stable across time. So it successfully solves the problem. Let's see the second limitation. Now, on the left chart is a chart of the Bund. These are charts I have actually used in the award-winning paper. A chart of the Bund, fixed income, German fixed income futures market, and this is the PPO below it. And as you can see, it's, again, stable across time. Let's look at the chart of natural gas. So I took an equity index, fixed income, and commodity, completely different markets, completely different trends. Again, it seems to be stable across time. But what is the difference that makes the difference? The PPO in this case, overbought and oversold, are above 0.7 and below 0.7. For natural gas, it's 7 and -7, which means the readings is for the indicator is almost 10 times higher than that for the PPO. So you cannot use the same overbought and oversold readings for one market. So if you look at across all the three markets, compare it, the PPO overbought for natural gas is 7, for the S&P is 2, and the Bund is 0.7. So the second limitation, although we do normalize by price, we put it on a percentage basis, it doesn't solve the problem. And I thought this is counterintuitive because we are comparing percentages. So you have 7%, 5%. So whenever we want to normalize, we put things in percentage and make things on a percentage basis. But no, it didn't work for this technical analysis indicator. And that puzzled me a lot because I said, it's counterintuitive. We are comparing apples to apples, percentages. It's not the MACD when it's absolute price. So obviously limitations 3 to 5 will remain. I mean, you can't create a normalized scaling, a life cycle model that is. Obviously the signal generation will be late and also will give a lot of false signals because it's again trend following. So you solve one of the 5 problems. It's an improvement, but not a solution. So let's try to see where the MACDV comes in. So around 2014, my goal was, because like I mentioned in the beginning of the presentation, I had used both types of indicators, both unbound and range bound. And I got really a bit fed up, with all this, when one environment, one is best and the other one is another. So I wanted to create a best of 2 worlds. So could I do it? So this is the approach I did. So I thought, okay, as I mentioned, we've got range bound and normalized, and then we've got unbound and non-normalized. So what do I do? So my idea is I wanted to have the best of 2 worlds, which means from the range bound indicators, I wanted the normalization feature. And from the unbound indicators, I wanted the feature that they're unbound. So ideally, I wanted to create an unbound and normalized indicator, which would be literally the best of 2 worlds. So how would I do it? I would take an unbound indicator and try to normalize it. Of course, previously, we saw that there was a failed attempt at normalizing the MACD. So I said, if you can't normalize by price, we have to do it a different way. So around 2015, I had my eureka moment. My eureka moment. And that's the MACDV. Actually, I didn't rename the indicator. I'll show you the improvement I did. I didn't rename the indicator. I just kept it to honor the original inventor, and that just added the V. The V for what? Again, before I tell you what the V stands for, this is the story behind the MACDV. 2014 began the research. 2015, I started working on it, and I did a lot of pattern recognition, a lot of patterns, a lot more than I will be showing you today. And around 2002, I wanted to publicize my work. As I mentioned, I sent it to the two esteemed organizations, and they awarded it. But from 2015 to 2022, I did a lot of work on momentum and the MACDV. And although this paper is about 49 pages long, if I remember, the work I've done on it is a lot more than that. So this is the tip of the iceberg. So this is the formula, again, of the PPO. And I thought, why doesn't it work? Why isn't it, again, percentages? and because percentage should be the same, but what is the characteristic? What's the difference that makes the difference between Bund, a very low volatility market, and natural gas, one of the most highly volatile markets? I mean, with the exception probably of Bitcoin. Volatility. That's the difference, volatility. So instead of normalizing by price, I thought I would normalize by volatility, and I use average true range. And that was opened the Pandora's box of all the subjugate changes, which were a lot. This is small but very important difference. So I will spare you the math. I will show you it at the end. This again, S&P 500. Second panel is the MACD, and I've got some ranges which I will explain to you later. And at the bottom you've got the MACD, and you see the big starking difference. The MACD is absolute price. You can't even see it because on the left you've got different price, smaller prices because of the absolute price of the market, and on the right one, the right side of the chart you've got higher prices. But for the MACD, it's stable across time, becomes like an oscillator. So this is the first benefit. Let's try to example, see, is it stable across time? I tried to see if the indicators above 150 and minus 50, I found that 95% of the values are there. Again, sorry if I'm going fast, a lot of material, I'm trying to finish the presentation. So above 150, 150 is the overbought, 4.4% of the time. These are stats which are included in the paper. Below 150, 0.6% of the time. So it's quite stable across time. So normalizing for volatility provides the solution we wanted, just like the PPO. But is it also stable across securities? Because we saw that the PPO for Bund and natural gas and S&P were different. So what are the overbought and oversold for these markets? For the Bund, again, this comes from a paper. You see that the overbought and oversold is 150. Basically, when momentum is 1.5 times its volatility. And the same thing for natural gas. Again, seems stable across time, but what is overbought and oversold? Again, 150. So it is solved across securities as well. To put it in simpler terms, they've got all the same overbought and oversold levels. And you can use it for stocks, crypto, different timeframes, it doesn't matter. So we've seen the theory, we've seen the indicators. Now let's look at some rules. Let's see at the MACD ranges. Which are the core MACD ranges? So the MACD has 4 ranges: 50, 150, minus 50, minus 150. Above 150, you're getting overbought. Below 150, you're getting oversold. Above 50 and between 50 and 150, the market is going fast because the oscillator has expanded enough from its mean value to indicate that it's going fast. So when the indicator is above 50, it's fast. When it's below minus 50, it's fast, obviously to the upside and to the downside. So these are the core 4 ranges. This is how it looks like on the on Metastock. Jeffrey will be providing you of color-coded indicators so you can see when the market is going fast, overbought, oversold, when it is ranging. We'll examine the ranges again. So the second panel is the histogram, which obviously has also been normalized. And at the bottom panel, you've got the MACD. And let's look at the range rules, how we can use these ranges. So there are 7 core ranges, and the last one is the one I'm most proud of. So as we mentioned, we have 4 ranges: 50, 150, minus 50, 150. But given that we have the indicator plus a signal line, it creates a lot of combinations between the MACD, the MACD, its signal line, and of course the ranges. So what do I mean by that? First of all, let's look at what I call the risk range. All the ranges begin with the letter R. So the risk range. What is the risk range? Risk range means the MACD is below 150 and it's also below the signal line. So let's look at an example. This is when the market is oversold. Again, this is the example of the COVID crash. When the MACD is below the signal line and below 150, that's when you're getting oversold, the risk range. So as the market starts reacting and it is actually rebounding, the formula for the rebounding stage, and then you can use this for pattern recognition and also for scanning, is the MACD above the signal line and going from that range all the way up to 50. So that is the rebounding range when the market is rebounding. Again, color coded in green. Everything is fully disclosed in Metastock. I have a more advanced version of the MACD, but a simple, please do download it and start playing around with it, and feel free to send me questions. So the formula is MACD above signal line and rebounding from -150 all the way up to 50. And Jeffrey will be more than happy to give you the add-on for the indicator from this presentation. All you have to do ask. So what is the next range? Rallying. So how do you define the market that is rallying? Rallying is very simple. Again, MACD above the signal line and above 50. What is the sign of a risk range to the upside? MACD above the signal line and above 150. Again, everything is systematic, quantified, scannable, verified, and you can use it in your own systems. So what is the retracing range? How can you look for markets that are having a retracement? MACD below the signal line, falling off of 150 all the way to -50. So that's your retracement range. Again, you can fine tune these. As I mentioned, there is a lot of meat on the bone here. I'm just showing you the core ranges. What is the reversing range? Basically, the reversing range, rundown, also give it by other names, is basically the opposite of the rallying stage, which means its market is having a rundown. So MACD below the signal line and below 150, it's telling when the market is falling forcefully. So you can, as I mentioned, you can, sorry if I'm going fast, again, I'm trying to do the slides to finish up the presentation in time, out of respect for the next presenters. Again, these are the 6 core ranges, but what is the 7th? This is the one I'm really, really proud of. As we know, most markets, most of the time, markets spend it ranging rather than having some kind of a trend. So that's why trend following is a bit difficult to implement, because most of the time you get ranging markets, and that's what you get a lot of false signals. So how do you define a ranging market? Ranging market is when the market doesn't have enough momentum to the upside above 50 or to the downside below 50. So when the MACD is below 50 and between 50 and -50 for a prolonged period of time, that is 20 bars, that's your definition of a ranging market. And you can actually look for it like this: when the MACD is below 50 and -50 for a prolonged period of time. In my definition, that's 20 bars. You can start identifying ranging markets, real-time, systematic, in a quantifiable way, rules-based. So let's proceed with the histogram range rules, because now that the MACD was normalized, we also have the histogram. Again, the histogram, again, the formula, as we know, is like the signal line. Well, I'll also use the average true range to normalize the the MACD. Then obviously the histogram is getting normalized by itself. So what is the life cycle, the range rules for the histogram? It's above 40 and -40. So this is how it looks like for short-term overbought and short-term oversold. Again, this is from the paper for this FTSE 100. Another period, again, FTSE 100. So let's try to put some numbers, the edge in the tire model, because whenever I examine something, I want it to be theoretically robust, try to create an indicator, rules-based model. Again, black and white. It has to be very, very systematic. Although I'm not a systematic trader myself, I'm a semi-systematic, which means rules-based discretionary. And then we can have another webinar on what, how you can be semi-systematic. And then I go into the edge, which means, put some numbers, also some examples. Let's look at the numbers for the MACD. And with that, I'll try to finish up so we can open the floor for a few questions. So these are the ranges, 50 and -50. minus 51,750 to the downside. For the S&P 500, again, quantified how much time the market spends on each range. And this is very important because through that you can start designing strategies for the total time of the study, which was 11,817 days. The market was overbought 4% of the time, 36% of the time it was rallying. And that's very, very important. That's a very low number. You have to be very that's why timing the market is so difficult, because rallies are impressive from a price point of view, but from a time point of view, they're very, very quick. So 45% of the time, the indicator is between 50 and minus 50, which means half of the time the market is ranging, and talking about a highly trending market. So that's why timing is very difficult. Again, the same thing with the bond. 42% of the time it was ranging above 50, and in the rallying stage, it was 33% of the time. Again, you can, using these numbers, you can create a lot of strategies. I'm just showing the numbers to know that whatever you see in general, whatever people tell you, including me, have some numbers back-tested, quantified, so you can see if it's just some pie in the sky idea. Again, range rules, ranges for the natural gas. Again, very stable. You can see that the MACD provides unusually stable numbers, even for markets are completely different. Commodities, fixed income, and equities. S&P 500 is ranging, is trending a lot. 70% of the time is above the 200-day moving average, while natural gas is more of a boom-bust cycle, so it's got 50% above its moving averages. So completely different trend structures, completely different volatilities, but MACD has managed to put everything into perspective. Again, for the MACD histogram, and with that, I'll be trying to go to questions. Histogram normalized, again, the same numbers. Send me an email so I can show you the paper. But the MACD and volatility normalized momentum, also a ripple effect, because I was able to normalize other indicators. For example, Linda Raskis, the 310 oscillator. Linda's a good friend. I've met her for years. Here she is in London. Again, that was also, so if you're a fan of Linda's work, you can also normalize the 310 oscillator. Again, these are some statistics for Linda's work, and also other indicators which I mentioned in the paper. So where to from here? Again, sorry for going too fast. I've created the MACD momentum model, which very shortly will be also released by Metastock. Feel free to speak to Jeff to get the free version of the, first of all, of the MACD. Send me questions, and then we can go progress into the more advanced pattern recognition. There's a lot of meat on the bone. Again, thank you for your attention, and I open the floor for any questions if there are, please. If not, we will go straight to the we will go straight to the next presentations. It was very nice to be here. Again, apologies if I went a bit too fast, but a lot of slides, a lot of material. I tried to cover it as much as I could. Bobby, I can't hear you for some reason. You haven't unmuted yourself.
Oh, yeah, I just wanted to chime in. I do see a couple of questions came through.
Go ahead.
Yeah, so we have someone asked, what's the best time frame for the MACD indicators?
You can use it across time frame and across markets. You can also adjust the settings. So because the default is 12 and 26, you can make it like Linda does with basically the 310 oscillator is basically a MACD 310, you know. So you make it more short term, the fluctuations a bit more short term, but you can use it across all time frames.
Okay, fantastic.
So in principle, it's you can use it across all time frames. Just don't use it for signal generation.
Okay, great. And then we have another question here. They said, since the MACD is normalized, can it be used to compare momentum across stocks in a universe?
Absolutely. And that's one of the benefits. That's one of the benefits because it's normalized. You can download. I would actually ask you to do it as an exercise. Because Jeffrey would also have, we have produced with Jeffrey a scanner So what you can do, you can go into the database, the excellent database that Metastock has, go to the S&P 500 constituent stocks and try to rank them using the MACD. You will be surprised at how consistent they are.
Okay, great. Yeah, it looks like lots of questions coming in now. There was another part to that last question, which is for a system that intends to capture long-term trends, are you able to share look-back periods other than the 12 and 26 days that you have seen systematic traders use?
Yes, absolutely. But yeah, yes, we can do it, but perhaps we can have a more in-depth, because I think the answer to this is not so much, okay, here's the setting, blah, blah, but also the reasoning behind it. This webinar could have been summarized within 3 seconds. This is the MACD formula, this is MACD, take it. But I think it's more important not to show you the fish, but also how to fish. That's why when 1 hour explaining something that could be, put into like 2 seconds. MACD, divide the volatility, and off you go. I'll go have some coffee.
Understood. Great.
So to come back to the question, yes, it can be, but we need to, present the why, so you can learn more from it. That's why I like explaining my concepts. The why is more important.
Yeah, and I know we were talking about this earlier, Alex, but that we can do another webinar here in the near future where you can maybe go a little bit more in depth into all of this. So I think we should get that on our schedule soon. And to everyone, I recommend, occasionally stop by metastock.com. You can go /events, and that'll show you our upcoming webinars. And I'm sure in the very near future, you'll see another one scheduled here with Alex. Someone wants to know why not to use it for signal generation?
Because I think signal generation should come from price itself. I mean, the MACD, because the MACD and the MACD, because it's like third derivatives of price, it may be a bit lagging. Especially don't use it in conjunction with the signal line. I have a technique where I have replaced the signal line and it makes it really fast. But even that, I prefer to use price itself. Don't get me wrong. I think it's an excellent tool as a setup. For example, to make sure we're on the same page, what a setup is. A trend setup, a very simple trend setup that can be more elaborate, is price being above the 200-day moving average. So take buy signals when you're above the 200. Likewise, you can use MACD for a setup, and I prefer to use it price itself, pattern recognition, or other signal generation forms. But the MACD, because it's too long. Now, if you want to use it for signal generation, you have to make it a bit faster, like the 310 oscillator or something like that. But in general, by and large, as a matter of principle, I prefer to use price itself and use this as setups.
Okay, great. Yeah, I'll maybe give you 2 more questions here. We actually had a lot starting to come through, so we won't be able to get to all of them.
Right.
Let's see. Someone would like to know if it's better suited for trend following or reversals, or better suited to go along with either.
That's an excellent question. The MACD, by its nature, is trend following, because it's by its nature is trend following. But because it has normalized, you can also use it for mean reversion. You cannot use mean reversion, the classic MACD, but the MACD, because it has normalized, so it's got scales. So you've got overbought, oversold, like risk range. You've got risk range to the downside. You've got the rally range. You can start identifying mean reversion. So you've got the reversing range. So now it has, that's why I mentioned it has opened up doors, which we cannot do with the classic MACD. So you can do both, actually.
Okay, fantastic. Let's see. So I'm actually going to keep going through the questions with you here, if that's okay, because
Absolutely.
Next up we have Zaheer, and he hasn't quite joined the room yet, so
let's go ahead and wait up until Zaheer comes in. I'll be happy to buy some time for him and answer questions or go through any other things that people would like me to iron out.
Okay, great. So another question here. Someone wants to know what candlestick is better to use for the MACDV, a 4-hour, a 1 day, a 1 week? I think that goes along with the time frame questions, but I'll let you answer.
Yeah, okay. Again, mention in general, my time frames, I use the daily chart. I use monthly and weekly for macro analysis and the daily for my technicals. Now, if you want to go beyond that and use it for intraday trading, again, you can use it, but keep your candlesticks or bar patterns or any other types for signal generation. What I see a lot of people actually misuse and abuse both tools. They use the indicators for signal generation. I mean, you can use it, but I'm just saying that there are better ways. And so they use it for setup, and then some people can use the candlesticks for setups, while the actual candlestick adjust for signal, which means if you got a good trend, you've got the commitment of traders board, you've got signal, you've got seasonals, sentiment, momentum, and then you need something to let you in, then you use the candlestick. Don't use the candlestick as a be all and all. Oh, I've got this, baby in the diapers pattern, and then I have to okay, I have to take it. It's out of context.
Yeah. Okay, great. And all right, Neil wants to know, how well does the MACDV work for divergences?
Very well, because it's unbound. Well, actually, it's also a property of the MACD, to be completely honest. It's not just the MACD, because they're both unbound. Yeah, but it works well. The difference is, but because it's been normalized, now you can quantify it much better. You can quantify a divergence coming off of a risk level. You can quantify a divergence coming from a lower level. While with the classic MACD, you could quantify a divergence. It's doable, but you cannot pick and choose which type of divergence you want to be having in terms of strength of momentum. Yeah, of course, you can do it just like you do with the MACD, but only better.
Okay, fantastic. I'm just looking here, trying to find one we haven't answered yet. I know you've kind of touched on this with your, you've shared your email address. If people want to learn maybe more, or do you have any other resources available? I believe you have a website as well.
Yeah, well, the website is right now under construction. It should be ready within February. In the meantime, feel free to email me. Plus, I also want to be, well, let me deviate from the subject. The things I have learned through market trading since 1998, I've packaged into a course, if you will. Actually, my website will be a community-powered course, which means it will have a community to support the course. But I want to be doing something different. And the thing that we'll be doing is different is I want the course will be separated from the support, and the course will be for free.
Fantastic.
I don't want to be selling information. I want to be focusing on implementation. So all of this and the other stuff I will have will be given for free. So everyone can see the course, but if they want to apply it, fine, this is where I am. So I won't be selling information, focusing on implementation. So the course will be for free. All you have to do is just send me an email. I will be organizing a lot of stuff through Metastock, I'm hoping, as well. And the courses will be for free, because there is a big problem right now. Like, I'll give you a simple example. People buy trading books. Everyone's give me a book to recommend. But studies show that from the amount of people that buy a book, only a small fraction of them actually finish it. They take the book, put it on the bookshelf. So instead of doing self-development, they do shelf development. It just racks up their libraries. And from the people that have finished the book, only an even smaller fraction put it to practice. So what you want versus what you need is completely different. What you want is information, but what you need is implementation. So in order to avoid, marketing tricks and stuff, take the course for free, watch it, and if you're really serious about it, comes in for implementation through a community, because this is another aspect that I think is very important. The community aspect. It's not one-to-one, send me an email. We all learn from each other. So there has to be a strong bonding community. So this is what I'll be doing different. This is my edge, if you will.
Okay, yeah, that's great. I love it. I see another question came in, someone asking if there's a scanner available for it inside of Metastock. And so, yeah, we have been working alongside with Alex here, and we actually have the majority of everything kind of worked in. Okay, thank you. So we have the majority of everything kind of worked in, and we should be releasing it here in the very, very near future. So we already have kind of all the coding done for it, and we're going to have this available, yes, with the scanner and the template. Everything.
Yeah, the MacDV should be available again for free, but I'm also preparing a more advanced version. So I'll be giving the good people at Metastock. So we'll have a lot more pattern recognition. That will be a premium version. The course again will be for free, but the coding and everything will be done professionally through Metastock, and you can have the add-on through Metastock as well. Again, information will be for free. The implementation will be for those that want to be more serious about it.
Okay, fantastic. Yeah, so Jeff Gibby here, he did just step in and let me know that Zaheer is on his way in. So I think we're good there. I can maybe kind of take over and share a couple of slides now on my end, but Alex, it was fantastic to have you on. You did a great job. It looks like a lot of people are really interested. There were a lot of thank yous coming through here. So that's great there. Let me double check to see if any other questions came through on YouTube. It looks like we answered the ones from over there. Great. So yeah, thanks, Alex. I'll be in touch with you here in the near future.
Thank you so much, Bobby. Just one question. Before I look out, shall I press the stop showing screen? I don't mess things up and for the whole the rest of the
I'll just take it over from you here, so you don't have
to do anything. I don't have to do anything. A big thank you to, of course, Bobby for being a lovely host, to Jeff, and even bigger thank you to all the 124 attendees I see here, and plus the ones on YouTube. Thank you for your time. I really value it and appreciate it, because there are probably things you would rather be doing, being friends with friends and family or work, but you chose to spend it with me. So for that, I understand you. Again, feel free to email me.
Fantastic. Thanks, Alex. And yes, we will have you back on again soon. So
absolutely.
Have a great rest of your day. Yep. Cheers. All right, everyone. So a couple more things I kind of just want to touch on while we're waiting for Zaheer to jump in here. So as mentioned earlier on, all of the presenters today are partners with Metastock. They use Metastock in some form or another, or our Zenith services, to help them better analyze the markets. And I know a lot of you are already our existing customers. And for those existing customers and anyone new that might be coming to join, I just want you to know how fantastic of a support team that we also have here at Metastock. So if any of you are trying to get set up or established, we offer a free white glove setup and installation service. So not only can we help you install the software if you desire it, but we also will do like a one-on-one session where we'll do a full hands-on demonstration in the software, kind of show you how to set up your templates, how to run your scans, how to do some of your system testing, answer all of your questions for you. That's not a service that you're really going to be able to find almost anywhere else, where you get a one-on-one no-cost session to kind of get a full demo of the software, and that's included even just in our trials of Metastock. And if you're interested in getting a trial of Metastock, you can visit us at metastock.com/summit-savings, and that's going to let you sign up for an extended trial. It's also going to let you see some of the offers that we have available today. And yeah, just to let you know a little bit more on Metastock, because we haven't really shown all of its functionality yet, even though you saw a lot of the charts from Alex there, but it's going to allow you to scan the markets, backtest your trading ideas. It'll let you forecast probable price movements. You can also set up real-time alerts and get commentary and signals as well. And you can get our Metastock daily charts with global data starting at just $75 a month. Or if you wanted to get Zenith as a standalone product for like news and fundamentals, things like that, that's $110 a month. It can also be paired with Metastock real time for an additional $100 a month. We do have kind of a special Summit Traders Pack that we're doing. There's a lot of different systems presented today. There's also a lot of free systems and free information and things being presented today. But if you guys wanted to take advantage of the overall best offer to kind of get everything you're seeing, you'll be able to save over 50%. And you can sign up for those at metastock.com/summit savings. So our next speaker is a regular here with us at Metastock. We have Zaheer. I see that he has joined the room with us, and yeah, he's going to be presenting one of his strategies and kind of talking about the markets. I always love what Zaheer has to present with us. Zaheer, are you in here with me? Can you hear me?
Can you hear me, Bobby?
Yep, I can hear you.
Absolutely. Thank you. Apologies for I've had the tech demons this literally as I turned on the laptop, so apologies.
Oh, no worries. I know it happens to everybody here, and yeah, we had a lot of questions coming through previously, so it's really no hiccups.
Fantastic.
Let's see. So I think I'm going to just kind of let you take over here and go. You'll have about 45 to 50 minutes here to kind of go through things. And would you like me to maybe interject with questions or kind of hold them till the end for you?
But if you want to come in at any point, feel free to.
Okay, fantastic. So you guys, if you have questions, put them in the chat box on YouTube or in GoToWebinar, and we'll get to them at some point here. And with that being said, I'm going to pass over the reins to Zaheer. So you should get a pop-up here in just a moment. I'm making you the presenter. There we go. I can see Market Edge Technology presentation.
Yes, thank you.
All right, yeah, I'll get out of your hair, but I'll be here if you need anything.
Brilliant, thank you. All right, guys, apologies for that. So look, time is of the essence, so let's dive straight in. Okay, you're about to learn a predictable and systematic way to identify the very best stocks and assets, when to enter the market for optimal returns for bull and bear trends, blocking out all the social media noise, how to hold, compound, and exit for maximum gains, outperforming all other strategies and money managers, how to adapt this process around your lifestyle so you can continue to enjoy life while your money grows in the background. We don't want to give up our life to be better investors, and we don't need to with the technology that's available today. Okay, so welcome, guys. We're going to learn how to use the Market Edge Technology add-on, which we call the MET, for Metastock, and a trend-following investment strategy in 2025 to significantly improve your portfolio performance to over 30% a year, every year. Now, just a bit of a warning, guys, we are going to upgrade you. You can't unlearn this stuff, right? I think everything has best practices. I don't know if you guys like boxing at all, but you know, when I started boxing as a young kid, you put on your gloves and you hit the bags, and you know, you think you're good. Then you take on a coach, and your coach starts showing you how to jab properly, how to hold your hands, how to stance, your rotation, how your hips come in, your ankles, how you use everything. Once you start learning how to actually throw a punch, you will never go back to the way you threw a punch when you first started out. This is the same thing with investing. When you start learning certain concepts, there's no way you should be going back to what you knew previously. So I'm just warning you guys that what you're going to learn from this moment going forward will upgrade you. So there is no unlearning this. The simplest, the most effective, and the most profitable ways to find, invest, and compound in stocks and assets, period. And this has what's led to us having our Reversion fund incorporated in Luxembourg in 2023. We've had track record audited To get a fund set up, you've got to have a track record. Ours goes back over many, many years, and it averages over 30% a year. Just to give you a bit of a background about myself, I have a degree in software engineering, which is where all my love for the tech in trading comes in. I worked for Oracle Corporation, Larry Ellison's Oracle Corporation, for a year. To be honest with you guys, I didn't enjoy it. I think, you know, when you work a 9 to 5, you have to make sure you enjoy what you're doing. And I learned pretty early on that I didn't enjoy working a 9 to 5 in the IT industry at all. I became a TEFL teacher, which is teaching English as a foreign language. Lived in Japan, lived in Taiwan, Philippines for a couple of years teaching English. Came back to the UK, worked in advertising photography, which is really where I started making good money. We had clients like Coca-Cola, Tatler, Harper's Bazaar, Whirlpool, Barcelona Football Club were our clients. So, you know, money started coming through. I started trend following in 2007. Before that, I was doing pretty much what everyone does, which is day trading, trying to make quick riches. But trend following in 2007, when it came my way, that's when it changed everything. I'm going to expand on that in a second. Co-found Sublime Trading in 2018. That's our education platform where we teach people how to trend follow, and the MET and Metastock is integral to everything that goes on in Sublime Trading. And then, as already mentioned, that naturally led on to fund management when people started asking about managing much larger sums of money, and the Reversion fund came into play in 2023. Okay, now guys, this, I don't know if you guys have seen this image on the internet, but every time I see this image, it just blows my mind, because the guy at the bottom, that was me back in 2007. I was very, very close to just walking away because everything I tried to do just wasn't gaining any traction. But with my last sort of swing of the pickaxe, I stumbled very luckily on a trend following strategy, a trading strategy with a twist. And that was when I came across this book, Way of the Turtle by Curtis Faith. When I read this book in 2007, guys, it changed everything for me. If you've not read this book, I recommend pushing this to the top of your reading list. You will read it within hours. And I've read this book many, many times. Now, here's what I learned. Anyone with a rules-based system could be successful. Simplicity is key. Charts tell you everything you need to know. For us as everyday investors managing a portfolio from home, who have jobs, careers, families, hobbies, you know, charts tell you everything you need to know. We do not need to be spending hours studying companies like you're sort of made to believe. The less you do, the more you make. And a breakout strategy is powerful. Everyone talks about getting in at cheaper prices and pullbacks and buy low, sell high. That is absolutely not what you want to be doing. A breakout strategy is extremely powerful, and I'm going to be explaining more about this as we go on. So I took what I liked about the book was that the strategy was explained in detail at the back of the book. So I took the strategy, added the technology that was missing because the turtle trader experiment happened in 1982. Just to give you a brief overview, guys, in that experiment, the turtle trader strategy, they chose a bunch of novices, taught these people how to trend follow, and they turned over almost $200 million in 4 years. Now, what's fascinating about that book is not all of them were successful. Some were very, very successful, and some were dropped from the experiment. And the simple difference was following rules. Those who followed the rules did very well. Those who didn't follow the rules failed miserably. So I understood by reading this book that all I need to do is follow rules that work. I took the trend following system that was explained in the back of the book, added the technology, optimized the strategy as well, because that strategy worked very well in the 80s. And I started understanding that some of those concepts don't work as well as they do today. So I learned how to optimize those strategies to get the results that we need for the modern market. Developed and optimized the trend following strategy, and the MET, the market edge technology, was born, which is this whole add-on that we have developed. Now, I'm blessed to be in a position to be able to speak and contribute to a whole manner of lovely platforms that have given me a voice to reach out to a large audience, and I'm extremely proud of the relationship that we have with Metastock. First of all, Metastock are professional, they're unbeatable, they're unrivaled in what they do, but also the team and the lads behind Metastock are just second to none. So it's a really pleasant and beautiful relationship that we have going on here with Metastock. My goal was to put trend following back in the limelight as it became a forgotten art form with lesser strategies taking stage. When I started, it was all about day trading, scalping, value investing. Warren Buffett was everywhere, but there was nothing on the turtle traders. There was nothing on Richard Dennis. It just blew my mind because trend following has top performance tables for decades, yet no one talks about it. So my goal was to help others have the same confidence to find, invest, and compound stocks. Stocks like Fiserv, FI, this climbed 157% between 2022 and 2024. How many guys on this call right now knew about Fiserv before seeing this chart? Only a handful of you, if none of you. I can pretty much guarantee that many of you would not have considered this stock. And this is where a system comes in, where you have to find the stocks based on what the market is doing, not what the media is telling you. What is happening on the internet is generally mostly noise. We have to find our own stocks. Fiserv up 157%. FTAI Aviation, guys, up over 1,000% since 2022. GoDaddy, we know GoDaddy for domains. No one really considers their stock. It boomed between 2022 and 2024, 225%. Nvidia Corporation, of course, up over 1,300%. What we want to do is be able to take stocks like Nvidia that are all over our media channels. Palantir is another stock. But then figure out, okay, is it as good as they're making it out to be? And if it is as good as they're making it out to be, when is the right time to enter? How do I exit? How do I manage risk? How do I maximize the stock through compounding? All of these questions have to be answered. We don't want to just buy into Nvidia because everyone's talking about it and we're in the middle of an AI revolution. There still has to be a system. Vistra Corporation, this was the top performing stock in the S&P 500 last year. The top performing stock, outperformed Vistra, Nvidia, outperformed Palantir, top performing stock. Yet, how many times have you heard about this in our media channels? Or this could potentially be the very first time you're even coming across this stock. We must look away from that and focus on a system that finds these stocks for us. Now, just to give you an insight into how our portfolio has performed, we have a service in the community called the APL. It's a copy service, the asset position log. It's typically when we basically open our portfolio for our members to copy. 2022, the S&P 500 fell 28%. At the end of 2022 into 2023, the bull market started coming back in again. That's when we started buying into the stock market. Between February 2023 and this month, we are running at over 100% running P&L. This is based on a 20K account because this is typically what our members start with. But whether you have 20K or 100K or $1 million in your broker account, if you had followed our positions, you would be running at over 100% running P&L in over 2 years, taking full advantage of all these stocks that I've shared with you. This is a breakdown of the sort of sector exposure. Again, this is where Metastock comes in really, really well. We want to find the best performing stocks in the best performing sectors. Industrials was a top performing sector last year, yet you go online and it's only IT. Tech is the only sector that seems to clutter our media channels, yet there's 10 other sectors with really, really good stocks that we must have in a well diversified portfolio. Okay, the truth is, guys, the tried and tested and safe and simple will make a bigger long-term impact on your financial success and stability than anything else. And that may sound boring, but here's the thing. The reality is there's nothing boring about the wealth you create through compounding gains. And trust me, guys, when you start seeing numbers grow through compounding, there's absolutely nothing boring about watching your money growing exponentially over days, weeks, and months. It's mind-boggling. Okay, let's do some numbers, guys. Sorry, I'm rushing because I was late and I just want to get into the tech section as quickly as possible, but it's important that we do a little bit of planning. Let's say you have that $20,000, 20,000 pounds starting amount, and the goal is to grow that to $1 million, adding $100 a month to the pot, additional over a 20-year period. If you want to turn 20K into $1 million, over 20 years, adding $100 a month to the pot, you need to be averaging 19.78% every year. 19.78%, 20% a year on average is what you need to be targeting. Okay, so let's reverse engineer the goals. Banking system, it's a joke wherever you are in the world, typically less than 1% a year. S&P 500 tracker fund, 7% to 11% a year over a 20-year period, 30-year period, not bad at all, beats a banking system, but not great if we want to hit that 20% mark. Hedge funds, 5% to 15% a year, unless of course you know good hedge funds that do hit over 30% a year like we do. Most don't. Real estate, 10% to 11% a year. Of course, it should be part of a portfolio, but it's still going to leave you short if you only focus on real estate. Wine and whiskey, 13 to 14% a year, which is pretty decent. But trending stocks, which is what we're talking about today, they will get you over 30% a year. And that's what we've achieved over the last 10 years, how we got our hedge fund open. And as I've just shown you, how we've grown a 20K account to over 40K over the last couple of years. Just some numbers, guys, just so you know the difference. If you put your money in a tracker fund with those numbers we just looked at, you will have around $250,000 by the end of the 20 years. However, if you bump that up to trending stocks, you're looking at $4.5 million. That's the difference between 11% a year and 30% a year over 20 years. The difference is vast, and why it's worth looking into this and starting to learn this, because also there's skills involved. There's no skills in setting up a direct debit and sending money into a tracker fund each month. There's no skills involved. Learning to invest in stocks, there's a skill set involved that you can pass on to your kids and your loved ones, creating a legacy that you can then create to carry on your good work. So there's so many benefits to just learning how to do this properly, beyond significantly making significantly more money. Okay, so let's just look at some of the goals, guys. Typically, first of all, the confidence that comes with it. Not many people learn to do this. Most people go down get rich quick scheme. I can tell you guys that the confidence that comes with knowing that you're doing this properly is second to none. Then, of course, money is all under your control. This isn't locked away in schemes that have been set up for you so that you get your money later on in life drip fed to you after a hefty tax bill on top of that. All of this money is under your own control. Your retirement is in your own hands. You can retire early, you can retire when you want. More importantly, you're going to retire knowing that you're going to be in a very healthy position financially. Then, of course, you can start that business that you've always wanted. Many of us tend to go on a path through our careers that isn't one that is designed, that we have chosen to be on. It's often designed for us. When you start getting this kind of money under your control, you can start aiming towards cutting down your 9 to 5 and potentially starting your own business. Opportunities open up for you. You can work the hours that you want. Absolutely. You become more generous. I work with a charity here in the UK called Streets Kitchen. I work with them every week, and they're regularly short of food to give out. No problem. I can dip into my pocket and top up the coffers when they need to hand out, to make sure that the 50 to 60 people that we feed every Wednesday get fed. It's good to be in that position. Of course, we want the finer things in life. Why not? Me personally, I like my tailored suits. I have my tailor. I get my tailored suits regularly. You may want to upgrade your humble abode to something a little bit more grand. When you have the money, you can of course do that. But as already mentioned, guys, here is the most important thing out of it all, is the legacy that you will create by learning this and being able to pass it on to your loved ones. Okay, so use the MET to invest in trending stocks that are outperforming the S&P 500. This is what we're going to learn. Stocks that are outperforming the S&P 500. What does that mean? Well, the S&P 500 is an average. Some stocks match the average, some stocks underperform, some stocks outperform the average. These are the stocks that we want to find and invest in. So what do I mean by that? If you look at the S&P 500, since the low of 2022, when the recovery came in, the S&P 500 has climbed by 75%. But all the stocks that I shared with you have all, earlier on in this training session, they've all moved over 75%. Nvidia over 1,300%. Vistra, the best performing stock in the S&P 500, up 744%. So in the same time, the S&P has climbed 75%. All of these stocks have climbed up multiples more. These are the stocks that we want to find and add into our portfolio, because that's going to push our performance from 11% to over 30%. And again, as already mentioned, that difference will be the difference between $250,000 and $4.5 million over 20 years. So stocks outperforming the index move up quicker, deliver superior returns over 12 to 18 months, which is the typical holding period for us. We typically hold stocks for 12 to 18, sometimes 24 months. Now, stocks found by the MET, all stocks follow a particular pattern, which we call the 4PS method, or the 4-phase sequence method. Now, over the years, there have been numerous ways of counting waves in the market: Elliott waves, Ichimoku, Gann theory, Fibonacci extension. Personally, I found all of those methods were, yes, they were groundbreaking when they were first invented, but like everything, we've evolved, we've got better, and we found simpler and more lucrative methods, more objective methods to counting waves in the market. And this is what I call the 4-phase sequence method. Every stock in the market moves, or every profitable stock, the ones that I've just shown, FI, FTA, Aviation, Nvidia, GoDaddy, all of these stocks all move through 4 phases. Phase 1, proven performance. Stocks that have performed well in the past will perform well in the future. We then want a consolidation, typically 3 to 6 months. This forms a base for the next leg. We then want a breakout. So going back to the very beginning, guys, breakout is where we want to focus on, particularly stocks breaking out from a long-term period of consolidation, 3 to 6 months as a minimum. Then we want to start buying into the stock, and it's this new phase, phase 4, this new uptrend, where we want to start buying in. And here's another tip. Typically, stocks that are breaking out into phase 4, I like to look for stocks that are setting record highs, new all-time highs, because stocks that are setting new highs move the quickest. They've got least resistance above them, and they tend to cover the most ground when trending. All those stocks that I've just shown you, FTA, Aviation, GoDaddy, Nvidia, all of them, when I entered, were all setting record highs. Excuse me, let me just go through that again. Okay, so how do we do this? To do this, we need to move to Metastock. Let me just make sure that you are seeing my screen. Okay, yep, looks like you're seeing screen okay. So I am going to persist. Bobby, at any point, feel free to come in if you need to. Okay, when you open up Metastock, for those who are new to Metastock, this is how it looks when you first open. It looks pretty unremarkable, but don't let it fool you. When you click on that P in the top left corner, the power console, you are presented by this window, and this is where all the magic happens. Explore. You've got a number of functions here. Explore is the scanning function within Metastock. I'm going to click on Explore, and I am then going to go to, excuse me, Search Explorations, and I'm going to click MET. Now, these explorers here, these are the ones that we need to focus on. These are all our explorers here at Sublime Trading that we have created for Metastock. You'll notice that we got breakout signals. BOS stands for breakout signals. You've got breakout scanners for long positions and short positions, and you've got 2 sets of scanners, one for stocks with volume over 200K and one for stocks with volume over 50K. So small to mid cap markets like the Indian stock market and the UK stock market will use the one with 50K plus, and then the US market, which is our main market, we use the 200K scanner. At the moment, with the stock market being bullish overall, we are only using the long scanners. If we ever had a repeat of 2000 and 2008, where we had a confirmed bear market, then we would turn to the short scanners. So typically what I do is I choose the long scanners at the end of each day. So let's stick with the US market. I click on that. And then at the bottom here, I've already got it clicked for you, equities, North America. here are the markets that I scan for, and you're looking at around 10,000 stocks that Metastock will scan for you every single day, which is absolutely phenomenal because you do not want to manually be going through those stocks, A, and B, you do not want to rely on social media and all those finfluencers and commentators out there who generally tend to gravitate you towards stocks with an agenda. We want to be able to scan for stocks that simply are the most profitable stocks in the market, period. So once I have selected my Explorer, which is the long Explorer there, and my markets, which are those US markets there, I then click on Start Exploration. I won't do it now because it requires about 10-15 minutes. But once it's gone through that exploration, I then will be left with a much more manageable list of stocks that I can then start analyzing. So how do we do the analysis? Well, once that initial list has been created, I save that list. So you can see here, these are the lists. I have my own sort of way of naming them. So Indian stocks, NSE, UK stocks, and US stocks. So basically each day I scan, I just put my market, US, UK, NSE, and then the dates. Okay, but I've got a list here of stocks that I want to go through today just to show you how the analysis works. Now, first and foremost, let's look at the S&P 500. Just going to open that. So once we have chosen the stock that we want to analyze, you will be presented with, takes a second to open up. Here we go. Perfect. You will be presented with this 4-screen setup. This 4-screen setup is how we do our analysis. In simple terms, guys, what we're looking for is multi-time frame alignment. I want the time frames to be moving in the same direction. I have the monthly in the top left, weekly in the top right, and 2 daily charts. Oops, excuse me. Let me just do that again. I've got the monthly in the top left, I've got the weekly in the top right, and I've got 2 daily charts, bottom left and bottom right. The monthly, the weekly, and the daily in the bottom left, those are my analysis timeframes. What I'm looking for is those 3 timeframes to be moving in the same direction. The daily in the bottom right is my trading timeframe or my investing timeframe. This is where we will find entry points, stop losses, trailing stop losses, compound levels. All those are produced on the daily in the bottom right. We then take these values and we put them into our broker account. We'll come to that in a second. We are going to focus on the monthly, the weekly, and the daily in the bottom left first, and then we'll look at the daily in the bottom right. So let's start with the S&P 500. Now, what am I looking for? Bear in mind, keep in mind that 4-phase sequence method that I talked about. Phase 1, phase 2, phase 3, phase 4. So if we look at the S&P 500, yes, does it have a history of performance? Phase 1, of course it does, particularly since 2009, it's been on this massive bull run, 600, 700% bull run. Everyone keeps on screaming market top. Every time some kind of negative news gets thrown at the market, eventually it gets absorbed into this long-term bullish trend. So we have to be aware of the fact that the long-term trend is bullish. Even COVID, remember that, guys? All over our media channels for God knows how long. Now no one even talks about it. It looks like nothing, really. When you look at it in terms of the overall bullish trend, COVID looks like just another blip in the overall trend. We then had that proper correction, 2022, 28% correction in the S&P 500. It found support in October 22, and since then it's just been going higher and higher and higher. In fact, it's climbed about 75%. Now, these red and green lines that you can see, these are key levels of support and resistance. We've developed tools that highlight all the major levels of support and resistance on the monthly time frame, because that's where the true turning points are. There's an algorithm and a logic to it. We don't have to count them and manually draw them. The software is doing that all for us. As soon as it detects a key level of support or resistance, it plots a diamond telling you key resistance, key support, and it will then do an accompanying horizontal line. So all of that is on the software for you. You will then also notice, if I just go let me just realign this 1 second. Sorry, reset. You'll notice that there's a solid green line and a solid red line. That is the high and the low of the previous calendar year. Any assets that are trading above their highest point of last year is a bullish asset. So if we look at the S&P 500, the S&P 500 is now attempting to break through the highest point of last year. It's currently going through a bit of a mini consolidation. That's fine. It's that time of the year, January, February. Typically, we see consolidations, we see corrections. There's the earnings at the start of the year. There's a little bit of uncertainty, which is typically why there's a bit of quiet January, February. Of course, you'll get all the usual top calling and the market, the earth is coming to an end, expect a bear market, all of that goes on. But what tends to happen is a correction, pullback, markets then settle, and then typically March, April, May is when we see a good bull run in the market. So that's all we're seeing for now, guys. We're seeing a bit of a correction, a bit of a period of quiet. We need to stay calm, and we need to allow the market to do what it needs to do. Notice here at the bottom it says bullish. That's because all the factors that go into making this time frame bullish are all aligned to say overall the market is still bullish. We just need to wait for the S&P to move through the highest point of last year to confirm a true bull market continuation. So that's the monthly time frame. Overall, the monthly time frame is looking good. We've gone through the 4 phases. Let me just go through that again, guys, just so that we are clear. Phase 1 is the history from 2009. Phase 2 is this correction and sideways market. Remember I said 3 to 6 months? Well, this correction was from the beginning of 2022 to the breakout in January 2024. So a 2-year sideways market. January 24 was when we had the phase 3, and we're now currently in phase 4. What we want to see is stocks that are moving up quicker than the S&P 500. So that's where the other analysis comes in. Okay, let's go to the weekly time frame. The weekly time frame. Notice across the bottom, we have a ribbon here that's saying that all the factors that go into the weekly time frame, all the indicators that we have developed, are saying that the weekly time frame overall is bullish. Notice first of all the colors of the bar: green, gray, and red. They're not just green and red like typical candlesticks. Green, gray, and red. Notice that from November 2023, the weekly time frame has remained green. That means that since November 2023, the trend has only been bullish, and that's the direction that you want to be going in. So the corrections, when everyone is panicking, the trend filter remains green. That means overall the bias is bullish. We just need to remain calm and apply patience. We got the 200 moving average, we got the 50 simple moving average, and we got minor support and resistance levels. On the monthly time frame, you've got the major support and resistance levels. On the weekly and the daily time frame, you've got the minor support and resistance levels. When an asset is trading above all of these levels and the trend filter is green, then we know that we're in a bullish market, and the software will confirm that with a bullish ribbon. Now, if we go to the daily time frame in the bottom left, the way to look at this is that the weekly is big sister, the daily is little sister. Whatever big sister is doing, we want little sister to be following. So we've programmed the daily time frame to look exactly like the weekly time frame. Notice the colors are green, gray, and red. Now, of course, you'll have more bars on the daily time frame, right? So for one weekly bar, there are 5 daily bars. So there'll be a lot more candles on the daily time frame. So the color of the trend filter may change more regularly, but as long as the weekly time frame remains green, we can ignore when the daily time frame turns red and gray. So you can see here back in July of last year, when everyone was panicking because big tech was having a really difficult earnings window, everyone thought the market was crashing, while the weekly time frame remained green. And we can see that since that period, the S&P has recovered, the Nasdaq, the Dow, they've all recovered, and they've gone on to set record highs. And we can see also that the trend filter is also, the ribbon here is also green, telling us that overall the daily is bullish. What we only need to be aware of now is the fact that it is not setting record highs. As soon as the S&P 500 starts setting record highs, the market overall is bullish, and we can then really start going to town with buying stocks. So that's how I use the S&P 500. It's purely for analysis. It's purely to engage in market conditions. If the indices are bullish overall, the market overall is bullish, regardless of what we are being pumped with through our media channels. As I said, the charts tell you everything you need to know. Okay, now we can start actually looking at some of the stocks that have been picked up by our scanners. So one of the stocks that's in my portfolio and doing very well is Visa. Okay, so let's have a look at Visa. Of course, we all know Visa for credit cards and debit cards, but who considers Visa for their stock? And believe me, guys, like me being here in the UK, one thing I'm blown away by in the stock market is the sheer maturity and range of stocks in the US stock market. It's unbelievable. It's second to none. And that's the beauty of the scanner. The scanner is always finding stocks that I've never heard of, companies I've never heard of. Fiserv, never heard of it. FTAI Aviation, never heard of it. Vistra, never heard of it. Metastock finds it for me based on the parameters that we've set. And then when you look at the monthly time frame, when you look at the stock on the monthly time, these stocks go back decades, and you think, wow, whoever invested, whoever got into these stocks at the very beginning, they would be very, very wealthy individuals. But that's neither here nor there. What matters is how we get into them now, how we find them now, how we get into them now, manage and compound them, because it's what happens going forward that counts. Visa, beautiful stock, long performance history, phase 1, long-term consolidation here, phase 2. And it's only now broken out into phase 3 and phase 4. Bullish, the ribbon is bullish. Now, also, I should mention here, guys, if you go into view and click on expert commentary, we have programmed the software to give you continuous commentary on what the stock is doing bar by bar. So you're consistently being updated and kept up to date and staying relevant and making sure that you're doing the right things according to the software, the strategy, and the market. So you've got almost like a voice, a best friend next to you saying, hey, listen, this is what the monthly is doing and saying, these are the things that you need to be aware of. And that's all programmed into the commentary. So if you can see here now, it's on the current bar. If I go to the bar before, the commentary will change for the bar before. You can see there's a red upside down triangle. If I go to the next one, the commentary will be relevant to each particular bar. And that's for the monthly, the weekly, and the daily time frame. Each time frame has its own commentary. Okay, so that's the monthly time frame. If you go to the weekly time frame, so the weekly time frame, the trend filter is green. It's above all the key levels of support and resistance. It's above the 50 and the 200 simple moving averages. The ribbon here is bullish. So the software is saying monthly is bullish, weekly is bullish, things are looking good. Let's make sure the daily time frame is aligned. So if we go to the daily time frame, and if I open up the daily chart in the bottom left, you will see that we also have the green ribbon here telling us that the daily time frame is bullish. Look at the bars, guys. Now notice, some of you guys will have noticed that the S&P, the Nasdaq, they gap down, and the reason why they gap down today is because big tech is because of the news around AI and news coming out of China with I can't remember the name of that AI. It's deep something. I've forgotten what the name is, but there's noise coming out of China of new AI open source software. So tech had gaps, but no, that's tech. Look at Visa. Visa is not directly related to that sort of what we consider big tech. So it's continuing to move up. This is the importance of having a diversified portfolio and also being aware of the other sectors and not panicking just because you're starting to see gaps in the market. So the monthly, the weekly, and the daily time frame all aligned. This is a stock that has to be in your portfolio without a doubt. Open up the daily time frame in the bottom right corner. Okay, now here's another beautiful little bit of feature to the software. When the monthly, the weekly, and the daily are all aligned, the bars in the daily bottom right will turn blue. It's telling us that there is a trend in play. You must consider this stock. Also, you'll start getting entry points. See all the little diamonds? These are entry points. This is breakouts. Going back to what I was saying about a breakout strategy, the software is highlighting breakouts for you. So it's telling you enter, enter, enter. So if you entered on this first diamond, the following points could potentially be compounding opportunities where you buy more, buy more, buy more, buy more. So you can see that the trend moving in your favor, and then giving you multiple entry points to start considering entering and then repeatedly entering. What you also have for each breakout signal, you have a green line here, which is just hidden behind the blue bar. That's the entry point, the stop loss, and the compound level. So you put your entry point and your stop loss in your broker account. You manage your risk, which is typically 1% or 2%. And then you do nothing. You allow the stock to work its way to this level. When it moves to this level, you can then start buying more of the stock. That's a more conservative way of doing it. A more aggressive way, maybe every time it produces a signal, you can compound. So there's numerous ways of compounding. You can be aggressive and you can be conservative about it. There are pros and cons to each one, but in time, as you learn the system, you start molding this around the kind of trader or investor that you are. Now, in addition to that, you're then wondering, well, how do you manage the stock? Well, see the red line underneath? That is a trailing stop loss. So as the stock develops, you have your trailing stop loss following, and you'll notice how wide it is away from the stock price. And that is how we manage to stay in stocks for 12 to 18 to 24 months. People use stop losses that are simply way too tight, and they're constantly getting tree shaken out or stop hunted. But by having a wider stop loss, you allow the trend to unfold over time, and that is how profit is accumulated, simply by taking a position, letting winners run, and compounding. Okay, guys, that is Visa. I'm just going to quickly go through another couple of stocks just so that we can really sort of reinforce how the software works. Okay, beautiful. Vistra Corporation. Vistra Corporation. So let's have a look at Vistra Corporation. So Vistra Corporation, overall, very, very bullish. Right now, that bullish element has failed. So based on the monthly time frame, this isn't a stock that you want to consider. It was a stock you wanted to consider between 2022 and 2024. Right now, though, it's going through a correction. And because of that correction, if you're not in Vistra, you want to stand aside. Why? Because the monthly is telling you that all the factors aren't aligned, and also it's trading below the high of last year. So a good reason to stand aside. If you look at the weekly time frame, the bullish ribbon here at the bottom, it's now telling us potentially that it could come to an end based on the gap down and the weakness that has happened so far at the start of today. It's not printing new all-time highs. The overall filter is still green. And that's because it's taken into consideration the fact that these swings in Vistra, these sort of big swings in Vistra, are actually common. So just because it has gap down doesn't mean that the trend has come to an end. What it's saying is that you want to apply patience before considering when to enter. And then if we go to the daily in the bottom left, it is still saying bullish, but let's see how the day ends. We've had a significant gap down. The trend filter has turned gray. So instantly, we can see that based on what we're seeing here, a mixture of bullish and bearish factors, this is a stock that we do not want to get involved in just as yet. If you had to choose between Visa and Vistra, Visa is clearly one that's moving in the right direction, performing well. Vistra is one that you want to have on your watch list, and it's not one that you want to get into just as yet. So you can see, based on just some quick analysis, how we can instantly gravitate towards one stock and dismiss another stock based on market structure, not based on opinions and what people are telling us and what we're hearing, based on market structure. And that's the most important thing. Okay, let's look at one more stock. Okay, Amphenol. Amphenol, let me see what we've got here. We've got Amphenol and we've got Deere & Co. Let's have a look at Deere & Co, because this is a stock that you want to have on your watch list for potential entry in the coming days. First of all, good performance history. You can see from the low of March 2020 to this high bar here, which is May 2021. So you've got a year and a bit of performance, very, very good performance. After every trend, it consolidated. So this is your phase 2. And now you can see, based on the current bar, phase 3, it is trading above the highest point of last year. So what do we have? We basically have the phase 1, phase 2, and now the phase 3. What we're seeing is the start of a potential next uptrend, which could be as long as this last uptrend. Because remember, what's happened in the past is not a guarantee of what will happen in the future, but it is a very good indication. How an asset's performed in the past is a very good indication of what it could do in the future. So if this breakout holds and it works its way through $500, we could easily see this target $600, $700, $800, maybe even $1,000 over the next 12, 18, 24 months. Notice there's no ribbon here at the moment. It's because not everything is aligned. So we're not in a bullish trend just as yet. Now, this could change by the end of the day because these indicators get updated based on closing prices. So we'll see what happens. Now, let's go to the weekly time frame. Weekly time frame, the trend filter is green. It's setting record highs. It's above the moving averages. It's above all the key levels of support and resistance. You can see here that we are seeing the start of a bullish ribbon appearing, telling us that we're at the start of a bull trend. And if we go to the daily time frame, we want the daily to mimic the weekly, and you can see that the trend filter is green. It's above all the moving averages, above the support and resistance, and the ribbon is green. So we have a stock that is setting up, isn't quite ready as yet because we want confirmation of the monthly being bullish. Once we have the monthly, the weekly, and the daily all aligned, then we can take our positions. And that's when the daily in the bottom right comes into play. And that's, you can see here that if you wanted to have a very aggressive entry, you can do already. There's a breakout signal from last week. That would have been Thursday's bra. There was a big breakout signal. There was a signal there. You got your entry point, you've got your stop loss, and you got your compound level. So if you did want to enter in aggressive, which I do not recommend because you want to avoid fake breakouts, and after a long-term consolidation of many years, fake outs are very common. What you want is at least the second or the third breakout before you take a position. So typically you may want to wait for the second or the third signal to confirm the uptrend before taking a position. So DE, Deere & Co, this is a stock you absolutely must have on your watch list, and it's one to potentially see the next leg up over the next 12 to 18 months, of course, depending how the sort of broader market performs. So guys, this is the MET. This is the add-on that we've created. I'm now just going to quickly switch back to the slides. Okay, so the MET, three-step blueprint. First of all, what do we do? Well, we pinpoint when to invest for maximum ROI. This is based on market conditions. How do we do that? We use the S&P 500. Step 2, identify top assets to invest in for maximum ROI. This is where the explorers and the analysis, the monthly, the weekly, and the daily, all the indicators and tools that we've created, that's where step 2 comes in. And then step 3, clarity on how to invest for maximum ROI. This is where the daily in the bottom right comes in. That's where you have your entry points, your stop losses, your compound level, your trailing stop losses. You've got the blue filter that tells you your trend is in play. That's where step 3 comes in. You can see that everything is covered within the MET add-on. Okay, so what you need, guys, is an edge. Every investor must have an edge. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. That's why we called it the MET, which is your market edge technology. You've got everything you need from the explorers to start with, to the 4-screen setup to do your analysis, your risk management framework. You've got the daily in the bottom right, which marries up with your broker account. Then typically what I would say is buy a bunch of stocks, let's say 10, cut out of the losers with a small risk if we're risking no more than 1 to 2%, strategically hold and compound the winners only, then use the trading stop loss to manage those positions, take profit and rebalance every 12 to 18 months, repeat the process for life. This is what you want to learn, master, and understand, and then finally train your loved ones to carry on your legacy and the good work that you're doing. This is something to be proud of. Remember, financial illiteracy is part of our schooling system. It's built for careers. So it's down to us to be able to learn this stuff and then pass it on to our kids and family to carry on the good work. This is everything that you get in the MET, including a very detailed manual. It's a beautiful manual that explains everything, and then a wonderful support structure that comes from myself and Metastock. terms of price, guys, 1497 is the one-time offer. So once you purchase this at 1497, it is all yours. But we are doing a deal for 997. That's $997, one-time offer for everything. There's also a community involved. There's also an onboarding call involved. And at the end of this month, there is a live boot camp included as well. It's a 3-hour, 4-hour boot camp where we will go through all of this in more detail, included for everyone who signs up to the MET 997 deal. Bobby, over to you.
Great, thanks, Zaheer. Yeah, fantastic job as always. You know, it's always great to have you on and have you speaking for us. I really like kind of watching you go through everything and cover everything. So thanks again, Zaheer. Let me see here if there were any additional questions. I think you actually answered some as we were going. Okay. Yeah, I think you kind of covered everything really well. So I'll go ahead and kind of take over here and make myself the presenter. I have a few slides to share myself, but yes, I do want to touch on that. If anyone that's watching, if you're interested in trying out Market Edge technology, I mean, we are planning to do that boot camp on the 30th. So for anyone that owns it, they can access it. It's for customers only, and you can sign up to get the Market Edge technology by coming into our chat room here, or I'll have a link to share with you guys in just a second. Let me actually make myself the presenter, as I mentioned. All right. And, oh, I've got the wrong. Let's come back in here. All right, so that was Zaheer, the Market Edge technology kind of toolkit here. It does include a template with 10 indicators, 4 explorations, 11 expert advisors. You do get the detailed manual that kind of covers everything, but even more importantly, I think you'll have access to this boot camp. You can attend that session live. If you own the MET, we'll automatically send you an invite link to join. If you're watching this later on and you purchase the Market Edge technology, after a few weeks, you know, this should be available on your downloads page for Metastock to watch that boot camp afterwards, because it will be recorded. Just like today's session, everything today is going to be recorded. If you're watching in GoToWebinar, you'll get an email after the event ends, but you can also visit our YouTube, Metastock, or sorry, youtube.com/Metastock, and it will be available there. Zaheer did a really good job of kind of showing everything that's inside of it. I had a few slides, but I'm just going to kind of brush through them because Zaheer kind of touched on all this stuff already. I do always like to mention that, hey, if you have Metastock at all or any of our products, we do offer free unlimited support, including like white glove, one-on-one installation and kind of guidance or walkthrough of the software. We do have a page put together where you can order just the MET at metastock.com/Sublime MET, and you can learn a little bit more there as well. But if you're interested in, you know, any of the systems from today, or in learning more about Metastock, or you have really kind of individual specific questions, I recommend you join our chat room, metastock.com/sales chat. And we do have team members available there that can answer any of your questions. They're also available on the phone at 801-506-0900. If you need a trial of Metastock, we can help get you hooked up with that as well, starting as low as $74.95 a month for global market data. I know this is an international event, and now all of our packages include kind of international global data. We also have a real-time version starting at $210 a month. You can see all of today's products, everything that we have available, by visiting metastock.com/summit-savings, and it also has the trial link there. So I'm actually going to try and get us back on time here. So I'm going to do an introduction here for Daniel Sinig. He is another regular with us here at Metastock. He has a number of different products and different types of solutions for the markets, and we love kind of working with him. We love having him on. Hey, Daniel, how are you doing today?
Hey, Bobby. Hey, everyone. how is the conference going? It looks cold where you are, Bobby.
Yes, you'll see I've got the Metastock jacket on. It was 17 degrees Fahrenheit when I woke up this morning. So my bones are still like a little bit chilly. So I've kept the jacket on for today.
Awesome. It's similar to here in Montreal. Weather has been rough on us as of late.
Yeah, I'm sure it's probably gets even colder and stays colder longer over there than here in Utah, but yeah. All right. Well, Daniel, yeah, thanks again for coming to speak today. We're really excited to kind of have you on. And I know you know what you're doing. So what I'm going to do is just pass the reins over to you, make you the presenter. I'll be here if you have any questions or need help. I know you often have Nicholas here helping with things like that as well. But yeah, we're available. So let me go ahead and pass the controls over.
Perfect. All right, so as soon as this is working, we're gonna get going. All right, so there we go. Show my screen, just a second, guys. Stop broadcast, 1 second. I hope I'm not gonna close down this conference room. 1 second. I should be able to. See, now you hyped me up, Bobby, with what I know what I'm doing, but it says the attendees are still on hold. Start broadcast. Should I do that?
I mean, I see your screen, your broadcast.
You see my screen?
Yep, I can see trading indicators. Welcome to the future of trading.
And that's the full screen of PowerPoint?
It does show next slide to the right, so it's kind of.
I think you're on the wrong monitor, Daniel.
The wrong one. Okay, 1 second. That's just Murphy's Law, huh? So it should now. But whenever I do this, it tells me start broadcast, and I cannot switch.
I guess that I don't think that could hurt.
Okay, no, sorry. Now I think I'm in better shape. 1 second. Okay, what about now? Do you see the full screen?
Now I do. Yes.
Okay.
Mine also chose the wrong monitor this morning, just automatically, and didn't give me the option. I don't know. Maybe something changed.
Boy. Okay. Anyways, we're all set to go. Welcome, guys, also from my end to this amazing Metastock conference. Thank you, Bobby, for putting it together. Always a great event to be here. And boy, what an opening to the week we had, huh? So, and I think my title is coincidentally very topical today. So it's Welcome to the Future of Trading. AI predicts the odds of your next trade before you enter it. Now, of course, AI has shaken up the markets this morning or even last night with the announcement of DeepSeek. We had a big drop in the indexes this morning, but things are lightening up a little bit. And what we can take away from this and how we can trade these kind of markets, we're going to see together today.
Oh, what's happening?
And you will see also that how sophisticated tools, which are using AI in a different way, of course, of what DeepSeek might do, can help you identify interesting trade ideas. Now, what has been on our agenda for the last couple of years is to help traders make better trading decisions. We do this through our indicators, which give buy and sell signals, but we also do this through additional information that traders can use to help them sharpen the trading mind and to help them make better trading decisions. And one such idea that we had, and this dates back perhaps 2 years ago, or even a bit longer, is, hey, what if you would know the odds of having a winning trade, a successful trade, before you would take your next trade? Similar to something like this, where you might know before you enter into a trade, hey, my chances of winning this trade are perhaps 73%, and conversely, of course, my chance of losing this trade would be 27%. How would you trade? Well, I think the answer to this is fairly easy, because you only take or engage into this trade if the odds at the time of taking a trade are in your favor, and if they are not, you would simply stay away. I see it many times. Sometimes, not taking a trade is the best trade advice that you can get. So this is really important to know, to understand, hey, what are actually my predicted odds of winning or losing this trade? All right, so before we get into this a bit further, I also like to point out that we always try to put our money where our mouth is, and I have picked this trade here as my, of course, we're not going to give any trade advice, but as my trade for today. I really like this trade when I, scanned the markets over the weekend, and it came up with Meta, so Facebook, basically a long trade in Meta. I really like this trade over the weekend, and I liked it even more after the news came out this morning with DeepSeek and basically all the tech stocks who are dibbling with AI. Had a bit of a drop down this morning when the markets opened, which made them more affordable. And I love what happened, and this is still very much valid, even though Meta has recovered a little bit already this morning. I think this trade idea is very much valid still right now in this moment. And in this presentation, guys, I'm gonna explain to you how I picked this particular trade, why I picked Meta Platforms as my trade of the day, and best of all, at the end of this presentation, you can replicate these steps in a very straightforward manner. Because as you will see, especially with a tool like Metastock on your hands, these are actually quite mechanical. And there's only a few steps that you actually need to do manually, and everything else will be done by the platform for you. All right, so this is coming up in this presentation, but you know what? Let me introduce myself properly first, because you may say, hey, who's this guy, talking about this trade idea, about AI, about predicting win rates and so forth. Well, my name is Daniel Sinnick, as you can see here, and I have been in the trading business for more than 10 years. So our company, tradingindicators.com, has been online, so to say, for more than 10 years, and we have substantial experience building trading indicators and fully automated strategies. We've done this for ourselves, but also for clients all over the world. But guess what, guys? My career wasn't always on this particular career trajectory. In fact, when I started out with my professional career, for the longest time, I wanted to become a professor in software engineering. So I went through all the levels. I did my master's, I did my my PhD, my postdoc. I started teaching in and around Montreal, which is where we are headquartered. But you know what? During all these years, I was always fascinated by the markets, by finance, and by trading. So I started trading on the side. And of course, as you start out, you make all kinds of mistakes. So did I. So I overtraded, I took too much risk, I revenge trade, I trade when market conditions were simply not right. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools, which will help me make better trading decisions. So being a software engineer, basically I rolled up my sleeves and I started coding. And the very first tools that we have ever written were exclusively for our own purpose to help us make better trading decisions. But once we realized, hey, these tools actually do have an impact. They make a difference. We thought, hey, maybe others will benefit from these tools as well. So this is really how the story behind tradingindicators.com started. All right, now one such tool we're going to look at today, which is one of our latest innovations, which uses an AI approach to help us make better trading decisions. But of course, I also need to remind you that trading does contain substantial risk, and there's no guarantees of being a successful trader. So if you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get back on topic. Let's get back on track. So the idea was, is it possible to somehow predict the odds of having a successful winner for your next trade? Well, and the first question is, can this even be done? Is this even possible? So the short answer is, yes, this is possible. We can display, and for some platforms, directly in your price chart, hey, what are the projected win rates of my next long trade or my next short trade? Or in case of Metastock, these will be displayed directly in the expert commentary. So yes, we can display these odds on your chart. That's possible. But I guess the real question is, hey, what are these odds actually telling me? Is there any meaning of seeing these percentages, which are primarily driven by past performance, moving forward, moving into the future? And I just told you guys, hey, past performance or hypothetical performance is not necessarily indicative of future performance. So that's true, but it also doesn't exclude it. So to get to the bottom of this very important question, which we asked ourselves, of course, is we conducted a very comprehensive study, a research project, so to say, where we tested a swing trading system over the course of 2024. So this is when we start working on this idea. And over the duration of this research study, we basically traded 84 big US stocks, Tesla, Apple, Microsoft, IBM, and so forth. The average trade duration, this being a swing trading system, was about 1 week, and we traded short and long, or long and short, so in both directions. So there was no bias introduced. So that was the idea. And we traded and tested the system, and when we looked at the performance afterwards, we saw this. Oh boy, this looks quite underwhelming. This is a losing system. And originally, when we tested it, we took every single signal. So every single buy signal or sell signal resulted in a trade. And in this case, 6,827 signals resulted in 6,827 trades, giving us this kind of negative and bad performance. Oh boy. But then we did something, and this is where the interesting part comes in. Then we applied a filter to our system where we would only take the signals when or where the odds of winning this trade were in our favor. And if the odds were not in our favor, we skipped that signal. So basically, we only took the sweet spot trades and look at the difference in performance. So from our 6,800 signals, we only executed on 2,999 on them, and the rest we skipped. And the difference in performance was like night and day. Suddenly, we had a winning system on our hand. And of course, we were not cheating because we only considered the win rates at the time of the signals, not of course afterwards, which would be cheating. So at the time of the signal, we looked at the win rates. And if the win rates were in our favor, we took the signal, and if not, we did not. And this was a big difference. And this gave us so much motivation to continue in this direction. And in fact, we have, ever since we saw this, developed an entire suite of indicators using this AI approach, which is equipped with this odds prediction technology. And the hope is that, by looking at these odds, by consulting these odds, these will help you make better trading decisions, being able to focus on trades which have a higher likelihood of becoming a winning trade. All right, so that was the idea. And based on this, we have come up with our indicator suite, which we call the Power Bundle 360, a suite of 3 indicators. One for trend trading, one for trading reversals and pullbacks, and one for trading a sideways market via breakouts. And all of these are equipped with our AI-assisted odds prediction technology. And the idea was, and the name why we call this the Power Bundle 360 or 360 degrees, was that we have one indicator for each market conditions, for the trending market, the reversing market, and also the sideways market. All right, we're going to get to the charts in just 1 second, but let me quickly tell you what these 3 indicators are. And let's start with the trend indicator. So the trend indicator is called 1, 2, 3 strike, which identifies powerful trend entries if 3 things come together. That's why we call it 1, 2, 3. We need to have directionality. So price needs to either go up or down for quite some time. We need to have an increase of volume and an increase of volatility. And if all 3 factors are coming together, an entry signal is generated. I'm going to see how this works in a second. The indicator number 2 is our divergence cloud indicator. And as the name suggests, it is based on the concept of divergence, which is basically a discrepancy between price and an underlying indicator. And if they don't agree, oftentimes something is up. Perhaps a change in regime may be imminent. And this is exactly what this indicator does. It detects bullish and bearish divergences by means of these colors or cloud colors on the chart. And if the evidence is overwhelming. An entry signal is generated based on these readings. And indicator number 3 is our breakout indicator. We call it volatility crusher, which is designed to trade what we call strong breakouts. In our book, a strong breakout is a breakout where price will continue in the direction of the breakout for quite some time after the breakout has occurred. And you can imagine how you as traders could react on such a reading. All right, so this was the theory. Now let's get real. Let's look at some charts. All right, so, and by the way, guys, if you have any questions or symbol requests, please don't hold back. Put those into the Q&A box of your webinar tool or perhaps into the chat, and we're going to get through these symbols towards the end of this presentation. All right, so let me switch over to Metastock. There we go. Let me drag this in here. Okay, perfect. So here we have Metastock open, and we're going to start off easy but topical. This is a chart of the SPY, basically the SP500 ETF tracking the S&P 500s. All right, so what do we see here? And of course, at first glance, we can see the classic SPY picture. This is a daily chart, which has been trending upwards for quite some time with a couple of dips along the way. But you know, this uptrend move, even with today's gap down, this big gap down, is still very much in place. We're making, you know, higher lows along the way and higher highs. This is a clear uptrend. Perfect. But you know what? Trend trading has its facets and its nuances. So not every trend entry is a good one. You don't want to enter on, you know, in areas like this where things are really overextended because you may see a pullback right afterwards. You want to enter on areas where perhaps price has pulled back and there are signs that, hey, this trend move now after the pullback, after the correction, is about to continue. So these are some of the nuances of trend entries. And of course, this could all be done manually. But what we have done is we have developed an indicator designed to find you good trend entries. And this indicator is applied to the chart right here. It's called our 1, 2, 3 strike indicator. And what it does, it does most of the heavy lifting for you. It shows you these long entry signals along the way, but also some short entry signals, you know, when things are reversing or pulling back. So you see these bigger arrows on the chart. All right, so that's done. But you know what? Entering into a trade is one thing. But of course, once you're in a trade, you eventually need to get out of the trade, which is just as important. And you know, here's one anecdote I like to tell at this point in my webinars typically is, hey, 2 traders are meeting up in the morning in their trade room, let's say at 9:30 a.m. For the market open, Tom and Frank, let's say. And at the beginning, you know, Tom decides, hey, I'm going to go long the S&P 500, maybe the ES, and Frank said, hey, I'm going to go short. But at the end of the day, both are profitable. How can this be? Well, it can be because they timed their exits perfectly. And this shows you how important it is to not just enter into a trade or know when to enter, but you also need to know when to exit a trade, when to get out of it. This is why we have equipped our indicator, in fact, all our indicators, not just with entry signals, but also with exit suggestions. You can see it here, which would tell you, okay, perhaps now it's time to book some profits, take some risk off the market, off the table, because things are slowing down perhaps, or perhaps, you know, there's an entire change in regime. So we have entries, but also we have exit signals, which are these smaller arrows here in the opposite direction. All right, so that's one thing our indicator does. But you may ask now the question, hey, where is this AI-assisted odds prediction technology? Where is it? Well, good question. In Metastock, you can see the odds of your next trade by opening up what's called the expert commentary. So you do a right click on the chart, you go to expert advisor, and you enable this commentary window. So I click on it, and once done, it will open up underneath the chart here, or perhaps on the left-hand side, depending on how you configured your layout, the expert commentary. And what you can see here are the following. So for this particular symbol, on the SPY, the odds of winning our next long trade are estimated at 66%, and for the next short trade at 46%. And you may say, hey, this doesn't look that great, 66%. I mean, it's not bad. But you know what? For trend entries, typically, our winners are outpacing losers by quite a bit. If the trend takes off, we can ride the trend all the way. These winners tend to be much bigger than our losers. This is why, even a winner of 66% or sometimes even 46% can be quite profitable. But of course, we can always do better. So with just like any indicator, also our indicator here comes with a couple of parameters which you can tweak. All right, let's try it. Let's try to improve these odds. So what we could do in Metastock, I could go to the settings here. All right, let me just drag this in for 1 second. I'm going to open up the settings of this indicator. Edit. Let me just tweak a parameter, just quite randomly here. If I can find it, there we go. All right, so let's say I'm going to change the value for our volume period here. The meaning of this indicator is not so important right now because I'm trying to make a point. So let's say we're going to change this here, maybe from 34 to let's say 14. All right, so I'm making it, I'm reducing the look back period here. So I'm going to say, okay, I'm going to have my indicator recalculate by clicking here on refresh, and let's observe what is happening now to our odds down here. So they were at 66 and 45. Hey, they've changed now. Now we're at 72 for longs and 45. You get instant feedback on how a change of parameters improved or perhaps make the indicator readings worse. So that's possible. But then you may say, boy, that seems super tedious. I always have to go into the settings here, change the parameter, observe the odds, and keep doing this until I find something. Whenever I change time frame or symbol, I have to start over again. Good point. This is where we have integrated one more, and this really made all the difference, one more feature into our indicators. And this feature is called auto optimization. And as the name suggests, it's a feature which will automatically find the best parameters for you, so you don't have to manually fiddle around with that. Okay, so how can we enable this feature? Well, in fact, it is typically enabled by default. So let me just apply now the indicator one more time, but in this case, with our auto optimization feature enabled. So I'm going to go down here to the latest version of the indicator, just a second. And this one is called Trading Indicators 1, 2, 3 Strike AO, and AO stands for Auto Optimization. I click Attach. This will take a second now to calculate because it takes a second or two to actually come up with the best parameters. But if you scroll down now here, we can see, hey, with these revised parameters, we're now at 74% and 71% across the board. And this was possible because the indicator tested all these different combinations for you to find the ones which give the best results. And this really made a big difference in the performance of our trading systems. All right, so this is how it works for the SPY. But interestingly, or not interesting, what's really cool also is that whenever we change symbol or whenever we change time frame, the auto optimization will automatically find the best parameters for you. So you really don't have to do much in terms of adjusting. It is all done for you. Okay, let's change pace a little bit. Let's go to NVIDIA. NVIDIA also, of course, being in the news today, being in the AI space, and of course then DeepSeek came out, this company from China, rivaling of what NVIDIA is doing at much lower cost. And not surprisingly, NVIDIA had a big gap down. You can see it here. NVIDIA gap down to, well, I don't know how many percent, 10, 12% to this level here. And yeah, but let's look at the odds. So of course, we also have our short entry signal and our long entry signals here along the board. And if I zoom out a little bit, you can see, and oftentimes they worked out really nicely. But let's look at our win rates one more time, because there's something interesting to be pointed out here. So if you look at the win rate, look at the discrepancy between long efficiency and short efficiency. So in this case, NVIDIA, and this is really not very surprising because it's such a bullish stock for so long, the long efficiency is much better than the short one. So what can I take away from this as a trader? Well, what you could take away is, hey, perhaps I want to focus only on the long entry signals. Whenever a short entry signal comes along, perhaps I'm going to ignore this. This is exactly the intent of having these numbers displayed here for you, because they help you make a better trading decision. And sometimes this decision may be, hey, I'm just going to stay on the sidelines. I will not not take this trade because the odds are not as good as I want them to be. And sometimes they confirm your trading decision. Say a long entry signal comes along, our win rate historically speaking is at 89%. Perhaps this is a good idea to follow this signal. All right, so that was NVIDIA, but let's move on. Let's go to Tesla. And here, just to change it up, we're still on the daily time frame, by the way, but in this case, I have applied our second indicator to the chart, divergence cloud. All right, so what can we see here? First of all, we also see, just like for NVIDIA and for the SPY, hey, we have long entry signals and short entry signals displayed directly on the price chart, along with exit suggestions, these smaller arrows here. So that still works. But what is really interesting for this one is that we can also see these colors underneath the price chart, and also the candles are actually colored if you look a bit closer here, which show us areas of bullish divergence and bearish divergence. And oftentimes, these are really great signs that, hey, either a pullback has come to an end and the overarching trend is resuming, or we do see an entire trend reversal. And if you pay close attention, you will only see a short entry signal in signs of bearish divergence, reddish color here, and a long entry signal in signs of bullish divergence. And we do have some clients of ours who exclusively use these colors underneath the chart to filter their own trading system or trading ideas. They would only go long if a divergence is bullish and only go short if divergence is bearish. So this can be a great filter. And of course, also in this case, we do have, if I scroll down here, our odds prediction technology, showing you how well these signals have been working out in the past. So this is Tesla on the daily chart here as well. And in case you guys were wondering, yes, this also works on smaller time frames. We're going to get to this in a second. Just one more example, just to do the full round trip. Let's look at the QQQs. And the Nasdaq 100 ETF opening up here. And in this case, I have applied our last indicator, which is called Volatility Crusher. You can see it here. This indicator will also give you, this is our breakout indicator, I should say. This indicator gives you also these long entry signals and short entry signals, and also 2 profit targets with each trade. So for example, here we entered long, we hit our target at this bar and our target number 2 at this bar. Or for example, here a short entry, target 1, target 2 was hit afterwards. And sometimes, of course, not every single trade works out. Here, for example, we had a long entry, we hit target number 1, but then we got stopped out subsequently because of our trading stop, which was triggered in this case. So this is really our breakout indicators. Typically, it happens when you have a bigger bar, which breaks an important level of resistance or support. All right, and of course, also this indicator is equipped with our odds prediction technology, allowing you to, once again, make an informed trading decision when a new signal is coming along. All right, so that's for the QQQs, also on the daily chart. But now let's go intraday. Let's go to the S&P E-mini futures, for example. Yes, and in this case, we have, let me just quickly see which time frame I selected, the 5-minute time frame. All right, so a very small time frame, and you can see here, let me just zoom out a little bit. I haven't looked at this for an hour or two. It's the same thing. Yeah, you get your short entry signals. Of course, today of shorts in the market. This was actually on Friday. Went short, market went down, another short entry signal, and then of course a huge gap down, another short to really ride this wave until the end. And then as markets have recovered a little bit today, we had a long entry signal which hit its target there and here as well. And of course, also on the intraday time frame, we do have our odds showing us, hey, what or how well these signals have been working out. In this case, the win rates are really, really high. It's not always like this because market conditions change, but oftentimes, especially when markets are really trending. So they really went up a lot on Thursday, for example. On Friday, they went down a lot. Today, it went down a lot. Yeah, the odds can be really, really convincingly high, even in the 80s or high 70s. All right, so this was for the ES E-minis on the futures. What about the Nasdaq? Nasdaq here with divergence cloud applied to it. You can see these ribbon colors, these areas of bullish and bearish divergence. And once again, these are all real-time signals. We can see a beautiful short and short entry signals here today. Actually, this was on Friday into the close of the market, but today, after the gap down, or last night, I should say, a big move that was captured by the short entry signal. And lately, we're riding this, this correction of this big short move a little bit to the upside. Let's see what's happening there. So this was the QQQs, and of course, also here we do have our win rates for this particular signal. And one more, oil. Just to complete our round trip here with the futures. Here I have applied our volatility crusher indicator. And in fact, this is a trade I was watching this morning when I prepared for this webinar. I saw this short entry signal coming around at 10:40, just a couple of hours ago in oil. And as we were heading into this webinar, this is a 10-minute chart, we hit both our profit targets as short in oil, which was very much in line with the latest correction in oil of the highs around 83. So a nice short entry. And of course, this one here comes with our win rate predictions. All right, so this is how the indicators work, both on the longer time frames and also on the shorter time frames. But there's one more thing I really want to discuss. So let me quickly go back to the charts, to the slides, please. So here, just a second. There we go. Okay, so what have we seen so far? Well, we've seen our Power Bundle 360 indicators, which come with clear entry and exit signals. Now, you can see when to enter, but also when to exit, which is just as important as entering. They run everywhere. It doesn't matter which time frame or asset class. They work on stocks, on ETFs, on the smaller time frames, on the bigger time frames, and also on many different trading platforms. They are equipped with our real-time statistics, helping you to make an informed trading decision by showing you the odds or the predicted odds of winning or losing your next trade. And they come with auto optimization, a feature which will find the best parameters for you so that you don't have to fiddle around with these parameters, which is very tedious. And we as traders, we don't want to, in quotes, waste our time with this tedious legwork. We want to keep our minds fresh to make that very important final trading decision. This is where we should put our effort on, our mental energy on, not on trying to figure out what are the best parameters. Tools and automation is much better for this. Okay, so that was a bit of a summary, but there's one last piece which is so important, and which is the eternal question. How do we know which symbols currently have signals on a given time frame? More importantly, which of these signals that we can find are the most promising one to result in a successful trade? I believe two very fundamental questions that probably every trader has asked himself at some point. Well, we do have a solution with this, for this, and this is really where the power of Metastock really comes in. Because Metastock and some other platforms too, but Metastock really well done, allows us to do what we call Generation 3 scanning, which is a very advanced approach to signal scanning. So in Gen 1, just to give you an idea of what Generation 3 means. So first level scanning or Generation 1 scanning simply scans for what we call plain old signals. So you run a scan with the same settings and you're going to get a list of symbols which currently have signals. But there's no way, and especially if you have many scan results, there's no way to rank these signals. They're all treated the same. You have a bunch of buy signals and a bunch of sell signals. And then you'd have to do some manual analysis to figure out, hey, which ones are the most interesting ones. That's Gen 1. You've seen this before. In Generation 2, we not only scan for signals, but we can also see directly in the scan results which of these signals have the best odds or projected odds of succeeding. Guess how much time you can save by this, because then this allows you to rank your signals from best to worst and allows you to focus on the best signals first. Once again, a huge time saver. And there's one more thing. Typically, when you scan, you use the same parameters for the symbols you scan through. So for IBM, it's the same, for Tesla, for Apple, and so forth, same parameters. But that's really a one-size-fits-all approach. But in trading, this often is not a good idea. Wouldn't it be better if you would use optimized parameters on a per symbol basis? So you would use the optimal parameter for Tesla. Then when the scanner goes to Apple, you would use the optimal parameters for Apple. And one of these scans, the scan for 1, 2, 3 strike entry signals, has resulted in my trade idea for today. So how did I find this? So let me quickly go back to my Metastock, just real quick, if I can find it. There we go. Just open up my, there we go. Okay. So at Metastock, you can run explorations. It's available through your Power Console in here. Just 1 second. So you can run these scans, which are called explorations. And this is exactly what I've done today. In fact, I ran 4 different scans at the same time because, I like to just start this, have my cup of coffee, and then I look at the results all together. So this ran, and it took about 25 minutes to complete, resulting in exactly these signals here. And let's just focus on the first one here. These scan results for our 1, 2, 3 strike indicator. In fact, this was a scan for looking for long or short entry signals. So for example here, and I hope this will recover. There we go. I hope so. Oops. I think my Metastock just closed down. Let me just open this up again. But what I wanted to say is that, hey, the best, or one of the symbols which had buy entry signals was Meta platform. And how did I find this? Well, as you can see, there are more symbols which currently have buy signals, like Meta, like Abbott Labs. They have whenever you see a 1 here, it means there's a buy signal. Aeon, this one here, Citigroup, and so forth, Goldman Sachs, and so forth. But how did I pick Meta? Well, guess what I did? I sorted, you can see it here, by the projected win rate for this particular signal. So from highest to lowest. And the one that came up on top was Meta platforms. And as you can imagine, this is actually quite a mechanical activity where I let the scan run, I look at my results, and then I just sort from highest to lowest. And I focus on the ones with the highest odds. And this is exactly how I picked my trade of the day, which was for Meta to go long. And why I picked this and why I really like this after a bit of manual analysis, we're going to look at together today. Let me just quickly restart my Metastock for some live charting. Okay, so why did I like it? Well, first of all, we see that 1, 2, 3 strike, this is a 1, 2, 3 strike applied to this chart here. 1, 2, 3 strike shows us a long entry signal on the last completed bar. That was Friday's bar. Perfect. We can also see that Meta was or is in a long-term trend, trading nicely within a parallel trend channel, which is also ascending. All right, this was nice. And perhaps most importantly, the odds or the projected odds for this long entry signal were really high. So if you go back to the previous screen, we can see these were at 84%, which is a great a win rate for 1, 2, 3 strike. As I mentioned, typically our winners tend to be bigger than our losers. So at 84%, that's actually quite phenomenal. And we can see it here throughout. Our long signals, of course, not all of them, they have worked out very nicely in the past. And now once again, we have one more long signal. I'm going to just start it up again here. One additional long signal that just came up here. All right, so this is how I found this trade for my trade of the day, by simply running the scanner of Metastock, looking for an indicator of interest to me, in this case 1, 2, 3 strike, and then simply just sorting or ranking my hits, the signals that I found from best to worst. And the best candidate happened to be Meta platforms. As mentioned this in the beginning of my platform, this gap down this morning, I wish actually I had this presentation a bit earlier and the price was even better, is an even better opportunity to enter Meta platforms. I do believe this trend will just simply continue even after this gap down here. And had we acted on this morning, your entry price would have been even lower than 640, perhaps at 620. And the expectation is to continue riding this uptrend further into the bullish direction. All right, so this is how I picked my trade. But and before we get to some individual symbols, let me, of course, you may ask yourself the question, hey, should I consider these indicators which Daniel has just presented here? Are these indicators for me? Well, let me help you with that question, because I believe yes, because it doesn't really matter whether you are a day trader or a scalper or a swing trader or perhaps a longer term investor. these indicators, they will work on all time frames and all chart types. No problem there. It also doesn't matter what you trade, whether you trade stocks or FX or futures or even crypto, no problem. These indicators work with any asset class and with all symbols. No, when you have price action, you can use these indicators. We also have them on multiple trading platforms. So they beautifully work with the latest Metastock version, which is Metastock 19. They're fully compatible with that version, but we also have them for some other platforms which are listed here. So there's lots of choice there. And if you are an engineer like me with an engineering mind and you believe that good tools can make your life easier and good trading tools can make your trading life easier, then these indicators are definitely for you because they do most of the heavy lifting for you. They will show you directly in the expert commentary what are the projected odds. So you don't have to calculate these in your head or try to estimate these in your head, which is oftentimes impossible. They will also fully optimize the parameters for you, so you don't have to fiddle around with them yourself. As I mentioned before, anything tedious is not a good thing to do as a trader. You want to keep your mind sharp for making that final trading decision. And if you are using Metastock, you can use Generation 3 scanning to automatically find symbols which currently have signals. Once again, that's a huge time saver because what I do, I just simply run my scan in the morning. It may take half an hour, depending on how many symbols you scan through and how many scans you have, but this runs in the background. And I do some other work in the meantime, and once I see the results, I then rank my signals from best to worst. I then open the chart up. If I like what I see, because it's always good to double check manually, then I plan out my trade accordingly. So that's a very streamlined process, and it's a very time-effective process. And we all have busy lives, and this can save you a lot of time in your trading. Now, before we get to the symbol requests, and I believe there are quite a few, let me explain to you how you can actually get these indicators, because we have prepared a special offer. And this is thanks to Metastock for organizing this great event. So typically, you can get our Power Bundle 360 indicators, which include the 1, 2, 3 strike indicator, divergence cloud, volatility crusher, the 3 indicators, with win rate prediction and auto optimization. Typically, we offer them for $9.97, and that's for life. It's a one-time payment. We're never going to ask you for a single cent again. That's typically the price. But as a special thank you for attending this conference, for listening to me speak, we have put together something even more special. We call this the Power Bundle 360 Super Special. It includes everything I just mentioned, the 3 indicators with win rate prediction and auto optimization. But we decided to throw in 3 additional bonuses to that offer. And bonus number 1, I'm going to explain this in a second, is our trend radar indicator. You may have seen it in prior presentation. It's a great handy indicator to further fine-tune your entries. So that's going to be offered also for life. You have it for forever. In addition, you will also be invited to our exclusive member sessions, which take place every Tuesday at 12 p.m. Eastern. They're all recorded. You can learn tips and tricks where we do live market analysis, where we answer questions and so forth. So you're going to be invited to those. And bonus number 3, you will be invited to our Discord members area. But there's one more thing. We also decided to slash down the price even further and offer these indicators and everything which is included here for only $7.97. And once again, this is for life. So even our member sessions, which typically are offered at the annual rate, you're going to be enrolled into these for life. You're never going to have a recurring payment. So that's the offer. If you want to check it out, simply go to tradingindicators.com/Metastock, and perhaps Bobby or Niklas, you can also paste this link into the chat box. So tradingindicators.com/Metastock. All right. So before we're gonna get to the question, I keep saying this real quick. What are these 3 bonuses? Bonus number 1 is our trend radar indicator, which draws this heat map underneath the price chart, allowing you to further fine-tune your entries in many cases. So for example, here, when you see a big green patch like this, hey, this is a trending market. But you see every once in a while, you have these little red areas, which are pullbacks within a trending market. And oftentimes, these can be great entry opportunities to re-enter into a long trade. And Trend Radar allows you to spot exactly these kind of patterns in the markets. All right, that's number one. Bonus number two are our exclusive trading sessions. The next one is already starting tomorrow at 12 p.m. Eastern. We offer these weekly. We can learn tips and tricks. We have our expert traders with us who are going to analyze the markets. You're going to learn about options trading as well and so forth. So every Tuesday at 12 p.m. And of course, these are all recorded. Should you miss one, no problem. And bonus number three is access to our Discord trading room, where we analyze the market constantly, where our members post interesting charts, and of course also our trading team are posting interesting charts. And this one was from this morning from 8:18 a.m. very early, where we called out this the fact that Nasdaq NQ, the NQ futures, were hitting support down here, and a retracement or a correction to the upside is likely. Exactly this is what happened later on in the market as well. So you're going to be invited to this trading room as well. All right, so with this, guys, I'm going to open up the room for questions. Nicholas or Bobby, do we have any questions?
Yeah, Daniel, we had one question. Let me just double check it here. So we had a question here. How long does it take once I get it to actually use them? So how long does it take to get access?
Oh yeah, to the offer. Okay, yeah, instantaneously in most cases. So if you you get it from Metastock, the Metastock team will set you up, and I think Bobby can perhaps explain the process a bit better, but this should be very fast, typically within the day, sometimes even much faster. Yeah.
Okay, and another question, is this available for TradingView? So which platforms is it available for?
Yeah. Oh yeah, just real quick. I had them on before, but just a second. Yeah, for many platforms, of course, for Metastock. There we go. But also for TradingView, NinjaTrader, MT4, MT5, Thinkorswim, and so forth. So many different platforms are available. Yeah, just name your preference, and I can set you up on that platform. But of course, as you can see here, they work very nicely with Metastock, which has this very powerful scanning engine built in.
Cool, and we have a question from Kritesh. He says, can we do a back test of the signals to check, historical accuracy?
Yeah, but the beauty, you could, the package includes system tests as well, which allows you to back test or run your own back test. But basically, the win rate prediction technology is kind of an instant back test as soon as you apply the indicators to the chart. So that's kind of already built in, and it may not even be required to run a system test in that case.
Perfect. And okay, the other questions we have here are actually symbol requests.
Okay,
if you can look at a chart.
Yeah, I'm just going to open up real quick our chart here. Just 1 second. Which are the symbols?
The first one is Apple on the daily chart, and it's for divergences. So divergence cloud. So Apple on the daily chart with divergence cloud.
Oh, APL. All right, let's open this one up. Okay, so I'm opening up the chart on the daily. 1 second. So it's the daily chart here, but let me quickly apply divergence cloud. Interestingly today, I don't know if you guys noticed it, while most tech stocks, they gap down, not Apple powering up. I believe that's because Apple hit strong support at this level here. Just from a fundamental point of view or technical point of view, we hit this support level, and I believe this was a bottom that we saw, and Apple will now continue towards all-time highs around the 260 area. Of course, there's still ways to go, but for sure today's price action is indeed quite encouraging for this. Apple, one of the only ones being positive, whereas all the other big tech stocks are gapped down quite a bit. Okay, but let me go back and apply divergence cloud just a second. And by the way, all our indicators, they are grouped under trading indicators. That's our company, and you can see it here, Divergence Cloud AO, AO standing for auto optimization. All right, so let me see what's happening here. Okay, so it's calculating, and yeah, look at this. We're gonna look at the odds in a second, but a beautiful long entry signal here. We wrote this trend up, and also this correction in Apple was actually called up quite nicely, or called out nicely by our Divergence Cloud indicator, because we had this patch of bearish divergence forming here. We get a short entry signal, and we just put profits at this level and this level down here. Let me quickly look at the odds here. yeah, really good across the board for Apple at 82% and 67% across all bars on the chart, or 83 and 75% across the optimization period. Yeah, interesting one. Okay, anything else?
Yeah, we have a couple other. So one of them is Google. So GOOG, I think, and that's to see what how the trend is doing. So I think with 1, 2, 3 strike, the indicator.
Okay. Okay, cool. Let me just quickly get into this. Google. It's goog.o, isn't it? I believe so. All right. So let me open this one up. All right. This is Google. Let's just. Oh, this is already 1, 2, 3 strike applied to it. I guess I had this one on before, coincidentally. So here we have Google on 1, 2, 3 strike, and yeah, some nice long entries here, which we wrote till the end. This pullback was then called by this short entry signal, and then we have a long entry signal here for Google with some partial exits along the way, and we'll still with one last position in this long trend in Google. Of course, we did have, and kind of I was expecting the same for Apple to happen, a gap down, as the entire tech market seemed to gap down this morning. Google did gap down. I guess they're very exposed in the AI space. But at least today's bar is a bit bullish, and I believe this is just another pullback. I think markets were very nervous this morning with the announcement of a DeepSeek coming out in China. I believe that Google, being such a bullish stock, will recover, and this is perhaps an interesting opportunity to enter into this overarching long trend of Google. Let me quickly look at the win rates here for Google. Yeah, 86% and 78% in both directions, with a slight preference. They're both good numbers, but a slight preference to the long direction for Google. Cool. Any other symbol requests?
Yeah, Daniel. So we have a question here. No indicator mentioned, but Tesla on the daily chart.
Didn't we have Tesla before? I forget. Okay, let me just quickly see. All right, Tesla. Okay, .o. Okay, select. Let's see what's going on here with Tesla. All right, on the daily. Yeah, Tesla, of course, making all-time highs in the aftermath. I have to just apply the indicator here. In the aftermath of the US elections. If I go down here, let's put on perhaps 1, 2, 3 strike, or actually perhaps divergence cloud in this case. Let's see. What we can see here, so yeah, Tesla, with the long entry signals here, we actually rode up this uptrend quite nicely right after the elections. Is this the daily? Yeah, on the daily chart up to here. Then we got a short entry signal, and we already booked some profits here. On the short, we're still on the short signal, so we didn't close out the position yet. And of course, also Tesla gapped down quite a bit this morning, like most tech stocks who are exposed to the AI space after today's or yesterday's announcements. Yeah, and the win rates here are, yeah, very good across the board. 80% to the long side, 85% to the short side. Even better.
Well, that's surprising. And a question from Kurtesh, he wants to know, do you have monthly plans?
We do actually, and this is a question for Bobby. I believe there is a subscription offer available for the Power Bundle. So Bobby, perhaps maybe take this one away. But yes, you can reach out to us, so either through Metastock if it's for the Metastock platform, or otherwise just send us a mail afterwards, and we can see what we can do for a monthly subscription plan. Of course, the lifetime deal being, my opinion, the best offer for you, because that's all you're ever gonna pay. But there are some subscription options as well. By the way, talking about how to get in touch with us, you can either send us a direct email at info@tradingindicators.com, or simply go to our homepage, which is tradingindicators.com. In the main menu, you see a contact item. Click on it. It will open up the contact form. Put your question there, submit it, and it will go straight to my inbox. And we will make sure to get back to all of your questions as soon as we can. Perfect.
Well, and the last question, Daniel, before we go ahead. It's from Gerald, and I think I recognize your name, Joe. Gerald says, are there AO versions available on all platforms?
Oh, no, actually, no, that's a good question. So the auto optimization feature, this feature is available whenever the platform supports it. So quick on that. So which platforms do support that? Quickly go back to my list of platforms. Currently, of course, Metastock, we've seen this here. supports it great. Also for MT4, MT5, it's supported. NinjaTrader as well, TradingView as well, and MotiveWave as well. Thinkorswim, TradeStation, and Wealth Charts. And this is due to platform limitations. The auto optimization feature is unfortunately not possible because these calculations cannot be done on these platforms. But for all others, yeah, auto optimization is possible.
Perfect. Thank you.
Cool. All right, guys, I hope you liked this presentation. And Bobby, do you want to take it away? I think I'm at the top of the hour, pretty much.
Yeah, thank you, Daniel. And yes, we do have a subscription version available, just to kind of chime in on that. And we also have a sales team available here that would be happy to kind of help answer your questions revolving around that and could help get you signed up. I think we even have some different promotions around it that we could help you guys out with. But Daniel, as always, thanks for presenting. You did a fantastic job. We always appreciate having you on and speak, and I really kind of like your take, and I absolutely love the systems you've created with Metastock and how you're able to utilize so many of the features within it. So thanks again.
Thanks, Bobby. And just as an FYI, maybe that was my internet here, but you cut off quite a bit when you talked about the offer. Maybe just repeat quickly what you said about the subscription, at least. Yeah.
Okay.
But maybe it was my system, not sure.
Yeah, I'm not sure. I did have, during your presentation, you cut off for just about 5 seconds.
Oh, I did?
At one point. It might have been our internet here. I'm not sure.
I heard Bobby just fine there, Daniel.
I heard Bobby just fine as well. I think it's on Daniel's end.
Okay. Well, then apologies, guys, from my Montreal internet here. Hopefully for the next one, it's going to be resolved. In any case, guys, enjoy your conference, and it was great to be here. Bobby, please take it away.
Great, thank you. All right, I'm just going to make myself the presenter here, guys. Just one moment. Trying to get to the right screen here. All right, here we go. Okay, I'm going to show my screen. Let's see. Oh. Sorry, guys. There we go. I'm jumping all over the place. Okay, so yeah, that was another fantastic presentation by Daniel Sinnig. Next up, we're going to have Colin Abrams presenting with us. Colin, I can see that you have joined us here in GoToWebinar. I know you said you were maybe having some issues getting logged in this morning, so I do have a couple of people looking at your account right now to see if they can help with that. We'll see what's going on there. Oh,
yeah,
yep.
Hi, thanks a lot.
Hey, I can see you there, looking good.
Okay. Can you hear me as well?
Yep, I can hear you. You're coming through loud and clear. And so were you able to get logged in? Sorry, I know you said you were kind of having some issues.
Yeah, just having one or two IT issues here. Let me just try and see if it's been sorted out. We'll be able to carry on even if not. But yeah. I want to run a few scans in the session, and just want to make sure that's all working properly. Just give me 1 sec. I'm just busy running a scan.
We would just need to know the login you're using. You could also chat that to me if you were having any issues.
Yeah, there seems to be an issue here still. Okay, I'll chat back to you. How do I do that? Private message.
Yeah, you can do that, or email. We just need to know like the email or user ID that you're using.
Okay. 1 second. Sorry,
and while you're doing that, I'm going to just quickly kind of touch through some of my slides real quick here. So Daniel Sinig just finished his presentation. It looked like maybe the bottom of his screen was cut off. So if you guys were wanting to sign up for that offer, you can visit tradingindicators.com/Metastock, and that'll redirect you to our site where you can get that discount and receive these bonus offers here. If you guys were interested in just getting like a trial of Metastock or something of that nature, you can sign up at metastock.com/summit-savings, or you can visit there, and you can either get a trial or you can also order any of the services that you're seeing offered here today, which a lot of those are listed here. We have the Market Edge technology, as well as the Power Bundle 360, which you guys have already seen, and a few other things available. I highly recommend people kind of take advantage of the other resources we have available, like a full sales team and support staff. So if you want help, maybe seeing what package is right for you, or if you are interested in like the subscription version of Power Bundle 360 instead of the one-time purchase, just come to our chat room, metastock.com/sales chat. Let them know you are watching today's International Summit, and they can help kind of answer any of your questions that are revolving around that. Sorry, I'm kind of multitasking here because it looks like we might just have to reactivate Colin's account for him. But in the meantime, Colin, if you have some slides and things prepared to go through, I can have my team kind of look at your account and make sure that's activated, and you can kind of start presenting and going through everything.
Yeah, thanks, Bobby. I'm just logging out of Metastock and logging in. Let's just see if this is sorted out. 1 second. Shouldn't take long. So it's just Murphy's Law. I use Metastock every single day, and I rebooted my computer just before the session just to get everything nice and clean. And for some reason, I'm suddenly having an issue here. I don't think this has ever happened before, to be honest. But these things
yeah,
happen.
that's how it goes. Only when you're getting ready to present do the issues come.
Yeah, absolutely. Account is logging onto Icon again. Just so ironic. But anyway, let's account is busy logging back on. Let me just get my camera up again. Okay. To share my screen, Bobby, just have to. Can you see my screen?
Let me
remind me how to use. What do I show so that people can see my screen?
I just sent you. Receive a pop-up.
Oh, there we are. There we are. Okay. Can you see my screen?
Yes. So now I see Metastock.
All right. I'm just going to close that and try and open it again.
You get logged into Metastock, okay then?
So I'm just trying again. I just took it off and I'm putting it back on again. Seems there might be an issue if you just stay with me for a few more seconds. But I think in the meantime, let me just start and we'll get back to this. Yeah, so this is the error message I'm getting. Oh, I see it's just saying it for the Paragon toolkit for some reason. Can you see that?
Yes. So
yeah, so I'm getting into Metastock, but if I try and run a scan on the Paragon toolkit, this is the message I'm getting.
Okay.
But I've got a way of getting around it because I do have those scans saved under a different name, so we should be able to be good then. Okay, so should I just continue?
Yes, please. Take it away.
Okay. All right. Welcome everyone. Okay, we are back onto Metastock nevertheless. Okay, thank you very much for watching. My name is Colin Abrams, as you heard Bobby say, and as you can see here, I'm going to just talk about two different types of trading. There are really just two main types of trading, mean reversion and trend following, and then show a few of the methods that I use for each. Very, very simple methods. I find the simpler it is, the better it works. The more complex it is, the less well things work. So let me just give you an example of each. You probably know this already, but for those who don't, mean reversion is basically if the price has gone quite far in one direction, you're then looking for it to revert back to the mean. The mean could be, for example, a moving average like we have here. So there it's gone quite extreme, pulls back. There it's gone quite far away from the moving average, sells off, gone below the moving average, rallies back, and obviously it can go above the moving average as well. There it was to an extreme, and one of the ways you can see that is by the distance of the price to the moving average, and then it mean reverts back towards the moving average, and there as well, far from the moving average, and mean reverts back towards it. So that's basic concept of mean reversion. Let's look at trend following. You all know, I'm sure, if you've got a trend, a well-established trend, you'd then be entering in the direction of the trend, whether one's using just a simple basic moving average, either a pullback like this, these are bull flags, or a breakout, little breakout like that. These are all just simple ways of entering in the direction of the trend, but it's either trend following, so you're following the trend, or mean reverting, you're catching a move once the trend has reached an extreme, you're catching a move back in the opposite direction. Okay, so those are the two basic broad categories of trading. There is also range trading, which is another type of trading, but really mean reversion and trend following are the two main types of trading. So I want to talk about, show you one of my methods for mean reversion trading. So let's just open up a chart here. I think I'll maybe just open Apple. Let's put that on. Let's see if it's coming on. I've just gone offline. Give me a second. Okay, just give me a second to get that logged back on again. Okay, we're back online. Let's open the chart of Apple. Can you see my screen? Bobby, you can see the screen? Can you see it?
Yeah. Yes, I can see your screen.
The chart of Apple. Okay. So what we're going to do here, as I said, we're basically looking for the price to move far in one direction and then move back in the original direction. So one way of doing it is by using an oscillator. Now, this I like to do on the weekly chart. I find it doesn't work as well on the daily or lower time frames, but it works beautifully on the weekly time frame. And the benefit of that on the weekly is that you can catch a much bigger move in the direction of the reversal. Of course, on any time frame, you can catch a reversal back towards the mean, but I find it most reliable on the weekly time frame, and that's why I call it my weekly buy setup. So you can really use any oscillator. This is stochastic, but you could really use any oscillator, RSI, any of them. The Metastock's got 50 plus oscillators. And what we're looking to do, and I'm just showing you, before we look at the actual chart of Apple, I'm just showing you, let's just do this as a test. When the stochastic or the RSI or the momentum indicator, whichever one you want to use, Williams percent R, et cetera, all the same concept. When it becomes oversold, now again, this is on a weekly chart, I'm just going to drop a line there. And that's when you want to be looking at buying, even without showing you the chart right now. I'm just showing you the basic instances when this weekly oscillator is oversold. Not even looking at the price. And really, this isn't a hand-picked example. I just took Apple because everyone knows Apple, but you're welcome to name any chart of your choice, type it in, and I'll take a look at that, and you'll see the same concept will work. So I'm just waiting for the oscillator to be oversold, and it is now as well, as you can see. Let's put a line there as well. So let's see what the price actually did when the oscillator was oversold. So there you can see massive run over there, lining up with oversold oscillator, over there as well. There we got a rally, a pullback, and more of a rally that started a bigger trend up. Here, now, of course, nothing is always 100% simple. So here we have a situation which is not uncommon where it was oversold. We got a rally there for 2 weeks, and then it came down and made a lower low. But you'll notice that there was a bullish divergence on the oscillator. Equal lows there, lower lows there on the price, the classic bullish divergence. And when that happens, you get a bigger move. So what you would do is, if the oscillator is oversold, again, this is a weekly chart, and you start buying, and then it comes down, and you get a divergence on the oscillator, you'd buy again. So you'd actually be buying twice, and then you get a bigger move. Basic trading correct principles is to have a stop loss in place. So what I would suggest to you is to take the low of the day of the week. This is a weekly chart, the low of that bar. And if it closes below that, you would just get out of that trade. In this case, it looks like it closed fractionally below it, which isn't a problem. So you took a bit of a loss there, but because we've now got a bullish divergence, that means you're going to have a bigger move. So you'd buy in again at the second low and a bigger position than the first one because you're going to get a big move. And that's what we got. Here we had actually the same kind of thing. Made a low over there, just moving the line away. So you'd buy. In this case, okay, it did bounce for 2-3 weeks, came back down again. What I would do, by the way, if you get a move like that, is to move my stop up to break even. So worst case, you might have been stopped out at break even, came down, you would have actually, because it went below the low of that bar. But now we've got a bullish divergence on the stochastic. Okay, and we've got a bigger move coming after that. So if you were stopped out on your initial entry, again, after 2 solid bar move like that, 2-week solid move, I mean, that went from about 130 to about 160. So I would definitely move my stop up to break even. Comes down again, you got a bullish divergence, lower low on the price, higher low on the oscillator, and then you know you're going to get a bigger move, so you'd buy in again, and I'd buy in bigger than the first entry, and there's your big move. Okay, and it just happens that in this example, we've got a number of these divergences. There it's oversold again, you'd buy, did give a rally, came down again, it may well have stopped you out there. I'd have to actually just check it, see if it closed below that low over there. Okay, very close to it. I'm not sure if it was below it. I'd have to check the exact levels. But even if it was, you can see you've got a higher low there on the stochastic, a series of higher lows. In this case, you've got a series of divergences. It never closed below that low there, the stop there. And there was your move. So you could then, if you bought there, you can add to it there, and if it comes down again, another divergence, you have to have the divergence to add. You add, you buy again, and there's your big move. And then getting out is another question altogether. Look to get out if it comes to or near a major resistance level, or even after a good multi-bar run, to start locking into your profits into strength. Let's look at the next one over here. It was oversold, so you'd start buying again anywhere around here. Looks like it came down again with another divergence. Unusual to have so many divergences, but it can happen, and it's good that we're seeing it here. And you'd buy again, and there's a big move. So the benefit, it actually is better if you have a divergence, even if you get stopped out the first time. The reason being, if you get the second move and the stochastic's oversold and moving up with a divergence, you know you're going to get a bigger move, and then you'd buy a bigger position. And I'd say 8 or 9 out of 10 times you're going to get a big move. So you're going to, whatever small amount you might have lost on the first trade, you're going to make it back many times over on the big move. Okay, I hope that's quite clear. And right now, as we speak, this is, it's oversold again on Apple and moving up. So it's a buy signal on Apple now as well. Okay, so I hope this is quite clear. Now I use this for buys only, not for shorting. I find it works better on the buys, and as I said, on the weekly or even monthly time frame, if you're a longer term player. I must just say, as an aside, even if you're a short-term trader, you can trade off the monthly charts. I've had many trades where I've entered on a monthly entry and held it for a week to 10 days and taken a nice profit. Just because it's on a monthly chart doesn't mean you have to hold it for 3, 5, 6 months. You can literally get out after a few days even. That's just something to keep in mind. Okay, so that's a weekly buy setup. Now, I do have an add-on to Metastock called the Paragon Toolkit, which you may or may not have heard of. And one of the scans in the Paragon Toolkit is the weekly buy setup. There are, I think it's 6 scans in the Paragon. And this is one of them, the weekly buy setup. So I'd run it on a weekly chart, and let's just see if the scan is working right now on the paragons. For some reason, as we said earlier, there was a technical hitch on my side. I'm going to just run it on the stocks in the NASDAQ 100 index. Let's make sure it's checked. Let's just check that the index constituents. Let's just see that. Yeah, let me check that. NASDAQ 100. Okay, I'll run it on a weekly chart. Let's just see if the scan is working. I did run it a few hours ago, just before, well, a few hours ago before the session, and there were about 10 stocks that came up. Let me just see if we've sorted out the problem on the side. If not, I do have a solution. Okay, for some reason, it's not sorted out. It's showing results as naught. Okay, so what I'll do, I'm going to just run it on, I've got all the paragons labeled under my name, Abrams weekly setup. Let's just see, do I have that one? Don't tell me that's the only one I don't have on my name. Let's see. This does look like a case of Murphy's Law. Let's just see. Sure, that's really unusual. Okay, let me just see if I have it under a different name. Give me a second. I'm wanting to just scan now to see which
Colin,
stocks
when you
right
say
now. Yeah.
when you say under a different name, are you using the files directly from us?
Yeah. So I could be. I'm not sure, but I see I do have it saved under Abrams weekly. This is probably when I was busy writing the scans initially. So let me try and run this. See if this one works. It should work. It's the exact same formula. But let me just see if this one will work. Let me just uncheck the Paragon scans. Yeah, it's unchecked. Okay, so let's just run this one. Let's see if that works. It should work. Let's just have a look and see. Okay, yeah. So here we are. 11 stocks have met the criteria for the weekly buy setup. So let's just open some of them and we'll see how they go. Of course, with all scans, certainly with my scans, but I'd imagine with everyone's scans, you've got to eyeball them to find the best entries. So let's just take a look at some of these. Let's look at CSX Corporation, which has been a really great share stock to be in. So it's defaulted on the weekly chart. Okay, so what I'm going to do now, I'm going to just, like I did earlier with Apple, every time the oscillator is oversold, I'm just going to drop a line there so that you can see how well this actually does work. Every time it's oversold, and of course it's come up on the scan now because it's oversold there and moving up. So let's just put these on quickly, just so you can see I'm not hand-picking this. Every time it's oversold, in other words, that I'm not looking at the chart and then telling you where to get in. Okay, so probably a divergence over there, but we'll look at the chart. So this is where the oscillator is oversold every time. Let's put up the price and see what would have happened if you would have bought. I'm just going to take some of these moving averages off just to make the chart a bit less busy. Okay, so there was one over there. Okay, it did come down. Interestingly here, if you use the stop that I mentioned, which would be a close below the low of the entry week, which was this green bar over there, I don't think it actually closed below it. In fact, it didn't. So you would have still have been in, and then you got a decent move. This is a 2-month move. So you would have bought at about 31.97, call it 32. At its high, it went up to about 34. Okay, 10% move in a few weeks. We had another one here. The oscillator was oversold. You bought there, and there was a nice big move. So that was a really classic entry. I mean, there we were looking at from $50 up at the high to about 37, 38. Here was one over here. We got a few weeks move up as well, sharp move up, and that's a big move. 33.50 up to about 38.40. I'm not saying you would have got out at the high. You wouldn't have. But just to give you the potential in the trade, had you have taken profits, let's say around about this resistance level, 38, it's a very nice move. Another one over here. Okay, it's oversold. You'll notice that even though it came down a bit, it never closed below the entry bar's low, and then we had a big move over there. Here as well, another big move there as well, another big move here. Now let's see what happens here. Now again, this is all unseeing. I'm just seeing it now with you. So it looks like had you bought on this bar there, it would have just taken out the low, closed below the low. So you would have had a small stop out over there. But then you will see the stochastic hooked up again over there, giving you a bullish divergence. Let me just draw that in for you. There's a divergence, higher low there, lower low there. And then you got a bit of a move. Not a huge move, but a bit of a move. And I would say enough to bring your stop to break even. So you got in at $30 odd, and at the high it was 32. Okay, so that's, that's whatever, 7% move. I would bring my stop to break even. Worst case, if it came down again, and let's assume you were stopped out, a small stop, but again, I would have brought it to break even. So you'd buy again, and you'll notice the big divergence over here. Very rare. I don't think I've ever seen more than 3 divergences, bullish divergences. And then you're going to get your big move, which is what we've got. A massive move here from 29.50 up to 39.90, up to 40, let's say. It's a big move. So that's the benefit. Like here, again, it's oversold. You got in, you would have been stopped out. Again, a small stop, part of one bar, but it gave a bullish divergence over there. You get in again here and more aggressively, and then you get a bigger move. This was more of a choppy move, but it did work its way higher. So the divergence is actually a positive. You just got to psychologically not worry about being stopped out for a small stop if it happens. Of course, the best ones are like that, where it just goes from the start. So here we are now. We've had an entry over there, around about 32.40, currently trading around about 33.60, based on that oversold level over there. Okay, so that's CXX Corporation, CSX, on the NASDAQ 100. Let's look at one or two others, maybe. Let's look at, what should we look at here? Right, let's look at Costco. Everyone knows Costco. And again, I haven't seen this. I was wanting to spend more time on this before the session, but because I had that technical issue there, so I didn't get to do that. Let's just get Costco up here. Okay, here it is. I'm just going to take off these moving averages, so it looks a bit easier to see. And let's put it on. Okay, it's on a weekly chart. Let's put on an oscillator. Just take this away. It's just blocking my view. 1 second. So we'll look. Let me just bring the oscillator down again. I'll just take the price off completely. Okay, so again, I don't know what the price has done, but every time it's oversold, so there is probably a divergence in that area. I'm just going to put a line there, and you can virtually blindly buy when this kind of setup occurs. Okay, and again, I'm proving it to you. Okay, it's oversold. When what you can do is wait for it to start turning up. You don't even have to. I find you don't even have to do that. Okay, so there it hasn't quite reached the oversold levels yet, just because it's such a strong stock. In my scan, I've used, I think I've used 30 as being the level on the stochastic, and I think on the RSIs as well. But it doesn't have to be the default oversold level for this on the scan. Okay, so let's look and see what the price itself did. Again, this is Costco, a weekly chart. So the first one you bought over there, it fell down, so you would have had you would have stopped out over there, but then you had another entry. Interestingly, in this case, unusually, you didn't have a divergence. Did make a low there, but buy again, and then you got a massive move. There was oversold, you bought, big move again. oversold, you bought, and that's why I feel you can just get in without even waiting for price confirmation, because often you get a big down week like that. Everyone's terrified, panicking, but you would actually buy based on the oversold reading, and you get a nice big rally. These are big moves. It's a weekly chart. So here it went from 413 up to 550. It's a big move in about whatever, 2.5, 3 months. There's another one, big move, another one, nice move, not massive, but still nice, multi-week rally. And there, of course, a massive move. Now, it doesn't mean that you necessarily have caught the whole move, but what you can do is, as I mentioned, when it gets to a previous resistance level, take profits, move your stop up again. A nice kind of stop that I like, if you look at this entry here, beautiful entry there at about 713. Okay, it ran up at that point to 894, so it's a big move. You could use something like a 5-period moving average. Closes below, just take your profits, gets to that high over there, that resistance, lock in with the profits, bring your stop up, and keep trading it on the moving average. And here we've got another buy setup as well. So let's see what happens. The entry was at 941, currently 953. So that's Costco. Again, it's on a weekly buy setup, so you just run your scan on the weekend and get ready for the trades on the Monday morning. Another way of using this is once you've got the setup on the weekly, you could then go to the daily chart and time your entry on the daily chart based on any basic kind of entry, a trend line break, a moving average break, a higher low, any kind of mini breakout type entry. But you've got the setup on the weekly chart, and then you could go to the daily chart to refine your entry. Okay, that's just another way of using it. Okay, so these are others. I could go through some more, but I think just from a time point of view, let's just try and move on to 1 or 2 other methods, and we'll try and run some more scans as well. So let me just take these charts off and back to my document here. So I'm going to show you a couple of trend following methods that I've got. Basic stuff, but again, it's simple. It's the simple methods that work. Trading is all about risk management. It's not about your entry. As long as you've got a decent entry, then it's all about risk management and psychology. You just want a decent entry, something that puts the odds in your favor, and then it's about cutting your losses quickly and letting your profits run. You've all heard of the well-known saying, but that really is about cutting your losses quickly. And I should just emphasize, it's not about cutting your losses, it's about cutting your losses quickly. The big difference between cutting your losses and cutting your losses quickly. A person might take a 20% drawdown and cut their loss and say, oh, well, look, I stuck to the well-known axiom of cutting your losses. No, that doesn't work. You've got to cut your loss quickly. That's how you do it. And your profit should be bigger, and hopefully 2, 3, 4 or more times bigger than your losses. That's the way to make money. Your average profit being significantly or a number of times bigger than your average loss. So this is trend following. Let's look at one of the trend following methods that I've got here, and we'll run a scan as well. I wonder if I should take some questions, Bobby, or should I leave that till the end? What do you think? Let me see if there are any questions.
It takes me just a moment to unmute.
Okay.
I haven't seen any specific questions come in yet, so you can continue. And
no problem. No problem. If anyone has got questions, feel free to ask. Okay, so this is just a basic Dow theory entry, higher high and higher low, also called market structure. Of course, Dow theory itself is more complex. You'd compare the Dow Industrials to the Dow Transportation Index, and there are a few other aspects to pure Dow theory, but the basic concept of a Dow theory buy signal is a higher low and a higher high. C is higher than A, and as soon as it breaks point B, 1 tick above point B, that's when you'd buy. Okay, because then you'd have a higher low and a higher high. That's your buy signal. The fact that the price didn't make a new low is significant. It's telling you that buyers are coming in earlier. And then when it takes out the previous high, that's telling you that the buyers are even more eager. They're pushing it to a new high. So that's a basic Dow theory buy signal. And the Dow theory sell signal is the exact opposite. You've got a lower high and then a lower low. As soon as it breaks point B to the downside, one tick below point B, that would be a sell short entry. Again, the fact that the price didn't make a new high is telling you that the sellers are coming in early, that the uptrend is running out of steam. And then if it can come down and make a new low, that's your confirmed entry. So a lower high and a lower low. Okay, so that's your basic Dow theory or market structure sell signal. Now, on Paragon, I could scan for this as well. So if I go to the Paragon scans, and let's maybe run a few scans now and see what comes up. So here I've got, in the Paragon, I've got Dow theory signal. I like to do it on a, whoops, just jumped up there. I like to look on a line chart because it's simpler, easier, clearer. So Dow theory signal on a line chart. And then what I've done here is another scan where I have Dow theory combined with what I call the trend finder. I'm looking for a well-defined trend, and then I'm looking for Dow theory signals in the direction of that trend. So that's really what I'm looking for in that scan. So let's actually run the scan now and see what's come up. Again, I haven't run the scan before the session, and I'm going to just run it on the, again, it's the Paragon scans, but just with a different name because of the issue we were having there earlier. So here we are, the trend finder and the Dow theory combined. Again, you can run this on, on the Dow theory signal combined and the trend finder. You can run it on any time frame, daily, weekly, it doesn't really matter. I can run it on the daily chart. I run it on the NASDAQ 100 shares, and let's see what comes up. Let me just take off the weekly buy setup so it doesn't scan for that again. That's it there. Okay. So we're just running the Dow theory signals combined with the trend finder. Let's just run the scan. And again, on the NASDAQ 100 stocks, you can run it on any group of instruments you want, be it currencies, be it cryptos, be it, whatever, futures, whatever you want, commodities, etc. Okay, let's see what's come up here. Okay, so it's a binary. So if it gives a 1, it means it's met the condition. And I see there aren't any ones that have met the buy condition. Let's look at sells. I'm not sure why we're not getting any sells coming up here. You see exactly what's going on here right now. That's very odd because it's saying that 93 instruments have met the condition. I think right, this formula, I've added a few things that I don't think are in the Paragon one to some extra info, which is fine. Let's just open a couple of these. Let's open Adobe. Let's see if we've got the buy signal over there. Now, what I'm going to do is put it on the line chart. Because it's just much simpler to look at. Let's take some of these moving averages off. Okay, I'm not sure. Could be that was slightly above there, but it's ticked down. So let's just try another one. I'm not quite sure why that came up. Let's just look at another one. I'm not sure if this is actually, there's something that's not quite making sense here, Bobby, that they should be giving me ones here. I'm not sure why it's not. It's very strange. I'm not quite sure what's going on there. This is a bit surprising. Let me just see if I've got it under a different. Again, just give me a sec. Again, this is a Murphy moment, but apologies to anyone who's Irish here on that. Let's have a look. Murphy's Law. Let's just see. Okay, I'm going to just run the pure Dow theory without the line chart, without the trend finder. See what comes up there. Let's see if that's working. Give me a second. Now, I like to use it with the trend finder, where it gives you the signal in the direction of the trend. Okay, let's look at some of these. Okay, we've got some ones over here. So Apple is one. Okay, let's just look at it now. Okay, so I'm going to make it a line chart. It's just easier to see. You can see here a higher low and a higher high. That's slightly higher than there, so it's a higher low and a higher high. I'll put it back on the candle chart. Yeah, it's a big move today, but that is a buy signal based on that entry today, on today's close, assuming it closes above there, which it will. Also oversold with a bullish divergence, so that's a nice buy entry in Apple. Let's look at Costco as well. That's also one that's come up, and it was one of the ones we had earlier on the weekly. That's actually quite nice because it gave a signal on the weekly buy entry and on the Dow theory entry as well. I'll make it a line chart. And here you see a higher low and a higher high. Okay, I hope you can see that. I'll just draw in the breaking of the higher high. A higher low there and a higher high here. That's a buy signal over there. And of course, there was one there as well. But we're running the scan for what's happening right now today. So there's a Dow theory signal there as well. So all these ones with a 1 means it's met the condition. Should we look at one other one here? Let's look at DocuSign. If I'm not mistaken, this is also on the weekly buy setup as it turned out. Let's put this as a line chart. Okay, and I'm just going to zoom in. Let's make that bigger. Take this off. Can you all see the Dow theory buy signal there? Okay, higher low and a higher high. Can you see it? Okay, there it is. That's a higher high. So higher low and a higher high over there. So that's an entry over there. Now, if you had to try and find these manually without being able to scan for it, it would take you hours and hours and hours. Obviously, depending on the size of your, universe of instruments that you're looking at. Let's look at one more, Amgen. Look at that. And again, this scan I just ran on the daily chart here. It alerts me, give me an alert, will pop up if it meets the condition. Let's put it on the line chart. You can just see it as well on the candle chart, but it's just much easier on the line chart to see it. So there we have higher low and a higher high again. Okay, there's your higher low and there's your higher high. So it doesn't have to be the first one in a trend like down here, but any higher low and higher high is what we're searching for. And I'll just draw that in so you can see it. There's your higher high. Higher low, that turning point's higher than that turning point, and there's your higher high as well. So this setup over here is exactly this setup over here that I showed you. Okay, so Metastock found it, in a few seconds running the scan. We've got an uptrend, so this is an entry here on Amgen. Once you're in and you've got a decent entry, it's then a question of course, looking to see where you take profits. And like I said earlier, you want to look for the more significant resistance levels, which in this case would be over there. Just do a horizontal line. Well, sorry, that. Okay, you've got a gap, so top of the gap over there would be an exit 293. It's currently trading at 281. There might be a bit of resistance here at the start of this gap, but I imagine it's going to move beyond it with this series of higher highs and higher lows that we've had over here. Or you could use something as simple as, let's say, a 5-period moving average. Put that on. Okay, this red moving average, if it closes below there, you would take profits. What I would do, if it have a nice multi-day run, sell half and use the moving average to trail to get out when it closes below the moving average. Okay, so that's Dow theory scan. Let's just go back here to our scans. So, and again, I'll be looking for longs and shorts. So if we look at what came up here, so those were just the longs that I looked at. Let's look at the shorts. Let's see what came up here. Ross Stores and Walgreens. Let's open let's open one or two of these. Let's see, Walgreens. Okay, so you can see a lower high and a lower low just by looking at it. But I put it on a line chart. And there you've got your lower high and a lower low. So just be a bit careful here because it does look like it's formed a bit of an uptrend. But as things stand, there would be a lower high, low low, and a short signal. Again, I combine it with the trend finder. So for the short, I'd be looking for entries in the direction of a downtrend. Let's just look at Ross Stores as well. It's given a 1, which means it's met the condition. Okay. This is just alerting me to one of the other experts that have got MA205, one of the other scans, I should say, which we'll actually look at next. Right, so I'm just going to detach that for now, put this on the line chart, and there's the lower high and the lower low. Let me just take these things off here. Okay, so there's the lower high and there's the lower low. I hope you can all see it. Lower high, lower low, and when it breaks that entry there, that's the short. So the two ways of entering as well, by the way, which I haven't mentioned. One way is you can wait for the close, but because sometimes the breakdown or the breakout for a buy signal day can be a large range day, like here, what you can do is start entering when it breaks that level intraday. So you've got a lower high and a lower low. We're looking for a short. When it breaks below that level there, the close at 148.61. When it breaks below that intraday, you can enter half your position short. If it continues to close below that level, you can enter the other half short. If it doesn't close below that low and it comes back up, then just get out of the first half that you bought. But what I found is 8 or 9 times out of 10, if you enter intraday, when it breaks that level there, by the time you get to the close, you're already going to be showing a nice profit. Like we've got an Apple, for example, at the moment. So that's just a little trick you could keep in mind. So here's Apple, nice big update today. And remember, as we saw a short while ago, you got a higher low and a higher high. Okay. So what you could do, and this is what I would recommend doing, when it takes out the higher high intraday, buy half your position. If it remains up above there by the close, buy the rest. And of course, in this case, had you bought when it broke out intraday at 224.62 odd, it's now at 231.58. So you're already showing a nice profit. And then you could buy the rest of the position there, or just, maybe buy a little bit less than half because it's already had a big run. But either way, you're showing a nice profit on the first part of this trade. Okay. So, and you can just see here, for example, in this downtrend, lower highs and lower lows, because that's what defines a downtrend. And here's our first higher high and higher low and higher high. Yeah, we had higher highs and higher lows all the way up. Okay, so I hope you're all still with me and watching. Maybe there's time to do one more. Let me close the charts that we've got open here. Any questions at the moment, feel free to ask. I enjoy having questions. I enjoy having people challenging me. Yeah, Bobby, did you want to say something? Yeah.
Nathan would like to know, what would be the simplest method you suggest if I prefer to take buy entries on a daily on a daily time frame with higher win ratio?
Okay, that's a good question. Let me think about that. Yeah, I mean, in terms of my method, I think the underlying basis, the backbone of the trend following system is to make sure you've got a good trend in place. Okay, and then to take profits fairly quickly. So let's say, for example, it's in other words, the backbone of the system is you've got to have a strong uptrend, and the stronger the uptrend, the better. then it's just a question of timing entries in the direction of that trend. And I think one of the mistakes people make is they have to get a 3-to-1 risk-reward ratio, which isn't the case. You don't have to get the 3-to-1 risk-reward ratio. I'll often take profits on a 1-to-1 risk-reward ratio. Because obviously the trade's going to reach a 1-to-1 more often than it's going to reach a 3-to-1, because that's just basic statistical fact. So just take profits at the 3-to-1. And what you'll find is if you've got a good trend and you've got just a decent entry in the direction of a strong trend, it's going to get to that 1-to-1 entry 8 times out of 10. In that case, you can either take all your profits or take half and move your stop up to break even on the other half. So I think that's one way that does work well. Yeah, I mean, and really any strong trend, there are numerous ways of entering into a strong trend. It could be a red bar, one red bar being taken out, like that. Enter, and as soon as it moves 1-to-1 times your risk, just take your profits. Now it's going to get to let's assume you entered there and your stop was below the red bar's low. Okay, it's going to get to 1-to-1 times, being an equal amount to your risk. It's going to get to that far more regularly than it's going to get to 3 times your risk. Okay, in this case, it did get to 3 times just. But obviously, statistically, it's going to get to 1-to-1 far more often than it gets to 3-to-1. So get in a strong trend, a good entry, basic, simple entry in the direction of the trend, be it a Dow theory signal, be it a trend line breakout like that, be it another scan that I'll show you now to get in. Just a simple entry and then look to take profits quite quickly. So that's how I would answer that one. Okay. I think let's move on. Is there time for one more, Bobby, to show one more method?
Yes, you still have
How are we doing?
5 to 10 minutes.
Okay, so all right. So let me just show another method that I've got quickly, and this will also help pot answer Nathan's question. I call it the Paragon MA205 entry system. So what I'm looking for here is basically a strong trend. Okay, and then I enter in on the breaking of a short-term moving average. Can be any long and any short-term moving average. Doesn't really matter. In the Paragon scan, obviously I have to find which moving averages I use, but a strong trend, and then we're going to time the entry by breaking of a moving average in the direction of the strong trend. That's all it is. Of course, with all these scans, I've added a couple of extra of my own, of my own touches here and there to try and increase the probability of it working. My own proprietary ideas, but just increase the probabilities. But this is the concept here. Strong trend, enter after a pullback on the breaking of a shorter term moving average. That's for buys, and for shorts, it'd be the exact opposite, a strong downtrend or a very weak market, and you'd be entering on the breaking of a shorter term moving average after a rally. That's really what we're looking for there. And that's what I'd scanned for here on the Paragon. Let's just go back to that. So that's the Paragon 205 entry. Okay, and I'm just going to run it again on my own ones here. Okay. Let's just find the ones that I was using. Give me a second. Okay, let me take the Dow off. Okay, the moving average 205 entry system. So let's just run it. I can run it really on any time frame. I can run it again on the daily, but really you can run it on a 5-minute chart, 2-minute chart if you want, whatever time frame you want, monthly chart. Get on the NASDAQ 100 stocks. Let's see what comes up. Okay, it's just about done. So let's just click the list of buyers. So 2 stocks have met the condition, eBay and Exelon. Shorts, let's see, about 5 shorts. Okay, AMD, Booking.com, etc. A few others, Peloton, Ross stores. Okay, let's just look at one or two of the buys. Well, there are only two. Let's look at eBay quickly. Okay, let me just actually put on the expert advisor so that you can see it, label it for you. Okay, my bandwidth is just a little bit slow at the moment. Here we are. Let's just put it on here. Okay, let's attach that. Okay, it's because of the issue we had with Paragon before that it's not actually attaching it, but basically it'll pop up an arrow when it's given the signal. And all the other times that it's given the signal, it'll pop up an arrow. So that's the signal there. Just because we've had this issue today, so I can't go back and show you the other times that it's given the method because I'm not seeing the arrows coming up here. But it's giving a signal today. Excuse me. Basically, we've got an uptrend breaking out of a shorter term moving average, giving a signal right now on eBay, of course, and this would be based on the close. So what you would do is run the scan about 10 minutes before the close, or run it after the close and enter the next morning. Exelon is another one, EXC. Okay, this is, I think this is, no, this is a different expert advisor I've got on, but this is giving a 205 signal today as well. Let's look at some of the shorts. Ross stores, let's take a look at that. Let's put it on a candle chart. Okay, so this is giving a short signal. Again, really, we need to see all the other ones so you can see how effective it is. This was also the Dow theory short signal that we looked at a short while ago. But really, because I'm having this issue right now with the labeling, I can't actually show you how it worked in the past, but it's pretty effective. Let's just look at Peloton. It's giving a short signal now as well. So we've got a downtrend, and it's giving a, well, it's giving an entry as well on the lower moving average here as well. What I would do in this case is, because we've got a support level here, so I just want to see it break below the support level. Let's say close, break intraday below 811, this low here, and I'd enter short intraday there. Put an alert on with your broker or whichever platform you use. An intraday break below 811 would be a short entry. Take profits down here at the support level over there. Okay, and these are some of the others. AMD, of course, not helped by today's news in the markets. Let me just see which. That's a different expert that I've got up there. But this is also giving an MA205 short entry over there as well. Okay, so sorry that the labeling isn't working today. We'll get that sorted out with Metastock. But as I said, it'll give you arrows and labels, buy, sell, wherever it triggers a signal on all the scans, as well as pop up an alert window that's telling you that that particular instrument has triggered the signal. Okay, so I think let's leave it at that. There are other scans in the Paragon toolkit that you can take a look at if you want. And I think with that, Bobby, if there are any questions, I'm going to hand it back to you. I think we are offering a special on the Paragon toolkit, if I'm not mistaken. Maybe you want to talk a bit about that, but if there are any other questions in the interim, please feel free to let me know.
All right, great. Yeah, thank you, Colin. You did a fantastic job. Sorry about any hiccups you were having, but yeah, I'm sure that'll all be sorted soon. And we always appreciate having you on. You did a great job. I like kind of going through all the different techniques that you do have. I know you weren't even able to showcase everything. Here, I'll go ahead and put myself back in the limelight here. So there's maybe just a couple of things I want to mention here. So let's see. I remember when your trading system first came out with Metastock, the Paragon toolkit, and using it myself. This was many years back. I was actually on our sales team here instead of in the business development role. And I remember using it and it having the absolute best back testing I had ever seen from any of the different trading strategies in there. So that's something I really kind of want to highlight too. You can run system tests on these strategies as well. And there's so much included because you're getting really 6 different unique strategies with the Paragon toolkit. And I really had a lot of success using it myself back then, and even still now. The scans perform extremely well as the system tests in there. You can really get just so much data at your fingertips. So I really recommend checking it out. Another thing that Colin did an absolutely fantastic job on is he has some kind of premium training that comes along with it. He kind of kickstarted after he released this. He did 5 different videos for us, all going really in depth on how the strategy works. And he did such a good job. We're like, we need to start having everyone try and put together more video boot camps like this, because he performed so well in those and he really kind of covered the ins and outs of everything. So that is included too with the Paragon strategy. You get his training that's available on our website, as well as you get access to all the different systems. He's only shown some of them today, but I think you guys would be really impressed if you were to kind of go in and try them out for yourself. And we did, as he mentioned, decide to do kind of like a special for you all today, where, you know, we've done this in the past where we've given a $100 discount, and we decided to do a $200 discount on Paragon to let you guys kind of try this out. And if you're interested in that, let me actually get my start
Bobby,
sharing.
while you're doing that, can I just, what you said actually just reminded me of something, if I can just jump in here for a moment.
Please.
Relating to the question that was asked earlier, I think it was Nathan, looking for a very high probability winning percentage. What I found with all these methods is that if you exit at the next profitable close, probably about 9 out of 10 trades are winning trades. And that's very nice if you use a leverage instrument. Literally on the next profitable close, which is normally the next bar after the entry. Sometimes it'll be 2 bars later, but extremely high percentage of profitable trades, about 9 out of 10 trades. And you can test it for yourself. You know, it really is the case. Okay.
Fantastic. All right, so let me see if I can find the screen I want. So I'm going to go ahead and share my screen as well here. Let me pull this out of the way. See, here's my Metastock. So yes, Colin did a fantastic job. Just to kind of touch on some of these points again, so it does include 6 unique strategies in the overall Paragon Trading Toolkit. He was showing many of them today, but not all of them. And I want to really stress how much great detail and information went into like the manual and the training videos that he's done. There's also kind of expert commentary that can help you kind of follow along with these strategies as well. Here's a list of all of them included, and these also come with exploration, system tests, etc. And if you're interested in signing up for that, we have it available at metastock.com/summit-savings. You can also get a trial of Metastock by visiting that link as well, or come into our chat room, metastock.com/sales chat. We can answer any of your questions. We can help you get set up for a trial. This does also come with a 30-day money-back guarantee, so there's no risk here. If you guys wanted to try this out, you can absolutely do that. Just to give another shout out to Metastock. I know a common theme here because all of the presenters today utilize Metastock in some form or another in their own analytics of the markets, and it's going to allow you to scan the markets, test your trading ideas. You can also forecast the markets and get alerts and things of that nature, and we have trials available at that Summit Savings link. We do also have discounts on a lot of the strategies here. We also have a lot of free content and a lot of free information coming out today too. But some of the speakers do have trading strategies that they've put, you know, decades of experience and information into, and they make those available at an extremely amazing rate. Especially when we do these summits, we give you a great deal, and you can sign up for any of those at metastock.com/summit-savings. Next up, you've seen him already because it's me. I'm Bobby Hiller. I'm here with Metastock. I'm going to be doing just a bit of a demonstration in Metastock, showing you guys a little bit more about the software. We've seen quite a few features in it already because a lot of the presenters have been kind of showing strategies and things like that. I'm going to show you guys just kind of some of the built-in systems, and I'm going to help answer a lot of really common trading questions that advanced traders might have. And I'm hoping to just share a little bit of my skill set and the tool set inside of Metastock to maybe help you guys out in some of your own analytics. Let me see here. Let me also share my webcam. I thought I already had that on. So hi guys, here we are. My hair is doing a little bit of the alfalfa thing, but that's okay. So I read this earlier, but just so the higher ups don't get upset, I'm going to quickly go through the legal disclaimer before I do my full presentation. So this is designed to instruct you on using Metastock and the accompanying software plugins. I'm not giving you any recommendations to buy or sell, but just guidelines on how to interpret and use the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or information provided in connection with the company. So we have been around for a really long time. We have also won, Reader's Choice of Stocks and Commodities magazine. We took the title on that for 30 consecutive years in a row in our Metastock DC. We've also won over 10 years on Metastock Real Time. So that just goes to speak a little bit about Metastock. I also love kind of just touching on the heritage of Metastock, and just so people know kind of how long we've been around. So we were actually founded back in 1982. So we've been here for over 40 years, pioneering technical analysis software. You can see the old floppy disk here. We were purchased by Reuters back in 1995. And then we released our first real-time data feed based on Reuters technology for Metastock in 2005. And we released the Metastock Zenith in 2012. And then we actually divested from Thomson Reuters back in 2013. So Reuters owned us, and a lot of people might still think that they still do. However, the way that it kind of worked when they bought us out, we were still the same core group of people. And then when we bought ourselves back, Scott Brown, the owner of the company, then president at the time, he bought us back from them basically to help kind of remove some of the red tape. We're still partnered with them. They provide us all the data. They're now the London Stock Exchange Group, now kind of owns all of that. However, now we still get the reliable data from them, but we have less layers to go through when we want to release new features or do things for you guys. So it's worked out really well for us. And now to get on to some of those questions that we were that I said that I'll answer for you guys. This is what I'm hoping to try and cover. And I know it's a bit of a tall order, but you'll see just how easily Metastock can help you to answer these different questions, such as how do I find securities to trade? When should I get into and out of a trade? What systems should I use? How do I test my systems before I get into them? And how can I learn a little bit more about a company before I trade with them? So that's what I want to cover today. And I also want to spend the majority of this time just kind of inside of Metastock doing all that for you guys. So we're not going to be looking at PowerPoints or anything like that. For the most part, we'll just be looking at Metastock kind of going live here. And with that, I'll open Metastock here, and then I'll go ahead and open up the Power Console. You guys can ask questions throughout. Sometimes I forget to look over at my other screen here to see the questions coming in. But I will be happy to try and do my best to keep an eye over here and get everything answered. And also towards the end, I'll make sure I spend a little bit of time going through any questions that have come in. So the first thing I want to do is just look at a chart quickly in Metastock. We've already seen many of them, but I kind of like to show you where Metastock can kind of start to shine with some of its charting tools and features and how it can be really user-friendly for you guys. And then we'll go in and try to answer all of those questions for you. So just as a random example, I see someone actually wanted to look at DLTR when Colin was speaking. It looked like that question came in a little bit late. I haven't already looked at this, but I'll go ahead and open that up just so we can keep things topical here. So what I'm going to do is just open up a clean template of Dollar Tree. All right, so I know you might be thinking, okay, well, this isn't too fancy here. I've seen, you know, a bar chart like this many a times. Nothing too fancy yet, but I want to show you guys why Metastock really kind of starts to shine and how it can be a really useful platform for you. So, like a lot of other platforms, we have many indicators built into Metastock, though we actually have hundreds and hundreds of indicators built in, which you might not find everywhere else. But it's really easy to just kind of apply something to your chart here. So I'm just going to take the volume. I'm going to come out here. It gives me options to kind of customize anything I like when I'm placing it onto a chart. Also, personally, I really like to look at candlesticks as well as candlestick patterns. So I'm going to come in here and I'm going to change this to candlesticks. Let's actually go to the normal default candlesticks because I like when you can see the green and red bars for up and down, or candlesticks, I should say, when I turn them into this. So far, I know still maybe not too wild here, but let's start to add a little bit more, and then I'll show you guys what I'm trying to get at here. So I'm going to apply, as our first speaker said, you know, the MACD is probably the second most popular and most well-used indicator out there, right behind RSI, but I really like using the MACD for an example during this, because it can be considered a complete strategy if you just wanted to kind of get in and get out at crossovers. So the MACD, or the moving average convergence divergence, it utilizes a signal line along with the MACD line, which I'm not going to get into exactly how that's calculated and how it all works, because I'm sure a lot of you are somewhat familiar with it, but just to briefly explain it, when you get a crossover here, this often signifies a change in direction where you're gonna generate like buy signals and sell signals when you get that crossover. You can also see like overbought and oversold conditions depending on how far above or below it is this zero moving line here. However, one thing, even when you have this applied on your other charts, sometimes it's kind of difficult to tell. Like, here's a really good example. Like, did this cross over right here? I'm not too certain, and things like that. MACD can also be used to show divergences as well, and sometimes that's a little more difficult to kind of just catch at a glance here. And so one of the things that I absolutely love about Metastock is we've built in this expert commentary for a lot of the different indicators and strategies in Metastock. A lot of the presenters that have spoken today, pretty much all of them have, you know, whether it's free or paid indicators and systems in Metastock, they have expert commentary that's available as well, and expert advisors that kind of help you to more easily follow along and kind of see what's happening in Metastock. So what I'm doing is attaching the MACD by Metastock Expert. This is going to change a number of things on the chart here, and we'll kind of quickly go over those. All right, so what we see here now, and you'll notice these all line up with the MACD indicator I've placed down here, but whenever there was this crossover of the MACD, it automatically puts a little buy arrow up here on my chart, and it says MACD buy signal. And I know too, some other platforms have things that are similar to this, but there's more to it than just that too. But you can see we had a crossover here. I wasn't sure, did it actually cross right here? And now I can tell easily, no, it didn't, but it did cross here, and then again right here. And just to kind of show that too, I can like take a line, and you can see where the crossover happens down here. We're getting the buy arrow up here, and same with the signals down. So we'll go ahead and delete that. We'll go back to just the pointer here. All right, and so the next feature, I already started to talk about this though, is the commentary. So I have the expert attached, and these are often linked in with the commentary here. So here's commentary. This is just the MACD by Metastock, and this is letting me know what's going on today's current bar here. So there's a number of different things that'll be in expert commentary. They all look a little bit different. A lot of them, some of them have a lot more information than others. This is a more basic strategy. So here it's letting me know about the crossovers. So currently the MACD is bearish since it's trading below its signal line, and it crossed its signal line 11 periods ago. And since it It's done that. The price has increased 2.73% here. Another thing I should mention, when we applied that expert advisor, it also put a ribbon down here too, so I can see, hey, this is a bullish zone because we're above the MACD, and this is a bearish zone here. And you can kind of see that throughout. So that's another just kind of visual cue that's maybe a little bit easier to follow along with versus looking at the indicator here. Another thing that happened here is you'll see these bars are highlighted blue. So I'm going to come and click over here. And this is letting me know that the MACD is in an oversold range right here, and prices may continue to move lower for some time. This does note to wait for prices to move higher before considering any long positions. So sometimes even once you become like oversold, that doesn't mean, okay, you should buy right away. You'll see it was in that oversold condition for a while before it started to reverse up. But so that's something you want to look out for, but it did give you an indication sooner than the actual crossover or buy signal did. So it's letting you know, hey, this has the potential to reverse. And it did start to reverse, and then we also got a buy. But it's a way to maybe get in a little bit earlier, and this commentary can really kind of help you see that along, or help you to understand that along with having the visual cues of the expert advisor here. And this applies for all sorts of different things. I'll maybe just give another quick example here, like we have like the Bollinger Bands by Metastock. This is another really popular one. And you can see commentary that you get with that as well. If you wanted to learn about commentaries and what it's doing, or about the Bollinger Bands, you can see the Bollinger Bands are 60.18% narrower than normal, et cetera, et cetera. Maybe a better example to show on this chart would be something like candlesticks. So let me apply that too. So we also have ones that work for things like candlesticks. Now this is letting me know, hey, this is a doji star. Well, if I don't know how exactly a doji star works, I can look at the commentary here, and it's letting me know that this occurred and what's been going on with it, and how I might want to act on that pattern as well. And again, like we have engulfing bear, doji star, a falling window, etc. Something else that you can kind of do with these too, because a system like this actually has a lot of different patterns that it's identifying with this pattern, with this here. And I can come in here, and if I wanted to maybe turn some of these off or on, I could do that in here, and it has a full list of them. I can kind of change around how some of the highlights work. I can see the coding behind the commentary and stuff like that too. I can also get a lot of additional notes here as well. So we'll go ahead and turn that off for now. I just wanted to show you guys kind of what a chart looks like, how all of this works here. And now we'll start kind of moving this along. So, okay, well, all right, I've shown you there's indicators, there's systems in Metastock. Well, I still haven't really answered a couple of different questions, like, well, how do I know when to get in and out of a trade? Or which system should I use, etc. Let's dive a little bit deeper into those. So an easy one to follow for the how do I know when to get in and out. If we go back to the MACD, well, you could just follow along with the buy signals and the sell signals here, right? Because these are very clearly written out. You can even see just by looking at this chart, okay, if I would have bought here and sold here, I would have had some profit. If I did the same here, I would have had some profit as well. So that's easy to do. However, what would not be easy, and what I don't necessarily want to do, is go through the thousands of different securities in like the NASDAQ, or looking at the S&P 500 or something like that, and looking at every single chart to find one that has a buy or sell signal. Well, how can I kind of save some time there? And this is a tool we've seen kind of throughout. I'm opening back up my Power Console. It's opening on my other monitor, so I'm just dragging it over for you guys. Well, our Explorer tool here allows you to run a scan to find information that you're looking for right away. And this tool can also be used in many different formats. A very basic way to use it is to search for a buy signal. So what I've selected here is the MACD buy signal. And if I come down here, I can see a list of the instruments available in Metastock, which we have access to over 300,000 different instruments. So I know throughout the day, there's been a lot of people, does Metastock work in Canada? Does Metastock work in Saudi Arabia? Does it work in India, etc.? And the answer to all of those is yes. We have data for those areas, and we have thousands of users in all of these different areas as well. So what I'll do is I'll run this scan on a couple of lists. I came in here, I've done this before, so we'll run like the FTSE 100 and also the S&P 100. I'll just use a daily filter. We'll load, I like to load the same amount of data in my scans as I do on my charts. That way I know everything's kind of lining up, because sometimes, especially if you're using a smaller amount of data, you know, your moving averages might be a little bit different versus if you have loaded in a longer time frame to really allow them to adjust, etc. But 1250, that's about 5 years worth of data here. And with the MACD, it doesn't really matter as much, but just I think it's a good habit to have. So I'm running this scan. We just chose 200 securities, so it's going to be really fast. And again, there's lots of different ways to use this exploration tool. As you saw with Colin, the previous speaker, he ran several different scans in real time, and they all just took, you know, seconds mostly, or maybe a minute. Just like this one only took a few seconds to run. And now I have the list of results for everything that has a buy signal from the MACD today on the S&P 100 and the FTSE 100. Other ways of using it are ways like Daniel Sinig and Zaheer Anwari will often utilize it. They'll do full market scans where they're scanning, you know, the over 10,000 securities in the Nasdaq and the NYSE, and the NYSE formerly Amex, etc. All of those, and those can take a little bit longer. That might take 5, 10, 15 minutes depending, because you could even run a scan on all 300,000 securities if you wanted to for some reason. But I often recommend maybe narrow things down yourself already, and then you can run scans on them. Those are some tips we might go into a little bit later, but without veering too far off course, let's go back into here. So everything from this scan has a MACD buy signal today, basically, is the scan that I chose to run. So what I'll do is I'll go ahead and just kind of open one of these up, and let me see here what I have. My default chart is still on a clean template. Okay, so we'll open this up, and it's going to show up just the clean template here. Well, another thing that you can do is you can kind of set your own default templates. So if I come in here, there's also, we have a MACD histogram template. So I'm just going to set that as my template moving forward. And then on this screen, I'll actually apply that as well. So let's apply template. This one's a little bit different because it's a full template, so it has some other things. Like this one is set to like a black background. It's going to put the MACD with the histogram, so you can see this filled in histogram here. And so, yeah, you can, of course, adjust this to be however you like. Like I mentioned, I like to look at candlesticks often, so I might come in here and change this to candlesticks. And now I can save the template, and then every time I open something up, this is basically what it would look like. But jump back on course here. So if I zoom all the way into today's bar, we can see, hey, there's that MACD buy signal, because the scan, instead of me having to look at 200 different charts, it narrowed it down to just the 5 on the list that I wanted to look at, just 5 with the buy signal today. So fantastic. Something else really neat that you can do is once you've done these scans, so if I come back in here to my report that we were looking at a moment ago, let's say I wanted to look at the next one on the list. I'm going to double click on it, and we'll move this down. And here it is. This is actually with max data loaded. So let me actually zoom that in quite a bit. But here's the next one. You can see it has that buy signal for today. And I can also just come down here to this arrow, and I can click next, and it's going to go to the next one in that list that I opened this up from. So this was the next one with the buy signal today, as we see there. And I can do that again. So if you do have a long list of, say, you know, sometimes even 100, 200 results, depending on the type of scan or charts you're wanting to look at, I like to limit mine down, so I'm only looking at like a couple of dozen by the time I'm done doing my filters. But sometimes you want to look at more, and it's just really useful to click this next arrow here, and it'll load the next one in that list for you. So the Explorer makes it really easy to find securities that are ready to potentially be bought or sold today. Also, if I did buy any of these, I might save them into a list, and then I save this list as like, you know, my active trades or a watch list or something like that. And I can also run a scan to see if I should be selling it, and a scan on a list of just my current portfolio would take maybe 2 seconds to run each day because I'm never in more than, generally not more than 5 trades, but definitely not more than 10 at a time personally. But yeah, so there's different ways to kind of use the software here is what I'm getting around to. But this is a way using the Explorer to help you find these signals. Now, another really big question is, okay, well, you've shown me how to do this with the MACD, but how do I know if the MACD is the system that I want to use for my trading? Or how can I find a good strategy that works for my specific market? Because I know this is the Global Online Active Trader Summit, which it's kind of a US term, but if you guys didn't know, GOAT also stands for greatest of all time, just in case you guys weren't aware. But we're looking at all sorts of different markets here, and sometimes different strategies work better in certain markets. And that's something that I'm well aware of, and I'm sure a lot of you are aware of. You might have seen people trading with a certain strategy, then you go to use it on your market and it just doesn't look the same. Well, this is a reason why we have the system tester here inside of Metastock. And what the system tester can do is back test different strategies, but you can test it on the markets you want, on the time frames that you want, and you can even put in some of your own account parameters so that it's also giving you information that would be, based on you yourself. So let's kind of go through that and talk about it a little bit more. So in here, we have hundreds of different strategies already built in that you can utilize. Because we've been using it for our demonstration purposes, I'm going to come in here and we're going to do the MACD. If I hover over this, this will tell me what this does. So this system test back test for buys and sells when the MACD goes above or below its trigger line, which is a 9-period exponential moving average of the MACD. It will also use an oversold or overbought condition for the entry or exit if the crossover doesn't exist. This system's formulas match those used in the MACD by Metastock Expert Advisor. All right, so we're gonna test with that one, but also I'm definitely not saying that the MACD is the best strategy out there. In fact, our first speaker today, who did a fantastic job, Alex Spiroglou, he actually talked about the MACD that kind of he created, the MACD that also utilizes volume as well, and I think that's a lot better than the basic MACD, something to check out. But again, for demo purposes, we'll test the MACD as it is, but let's throw in some others too. I could select as many as I want here. One thing to note that's a little different with the system tester versus like the Explorer. With the Explorer, you're selecting one exploration. Well, you could do multiples actually and change settings on those. And then you'll compare it to a list of securities, and that doesn't quite quantify the same way as the system test, because with the system test, if I have a list of say 100 securities and then I put 5 system tests against it, that's actually going to be doing like 500 unique kind of scans and identifications on it. So it's a little bit different and can take longer if you're selecting multiple system tests and multiple securities. So something to note. But I'm going to do the same thing I did before. I want to look at what strategies work best on the S&P 100 and also the FTSE 100, just so that we're testing multiple markets here. So I'll go ahead and come in here. I believe I'm under the index constituents. Yep. So we'll do the FTSE 100 and the S&P 100. Testing the MACD, I can see I actually have a few selected here. I think I also went in just a popular one. Like Bollinger Bands, we'll test just crossovers of the Bollinger Band to see how that compares versus crossovers of the MACD. And then Metastock also has, it's about 80 now, what we call performance systems added into Metastock. That these are all really, these are proven and back-tested strategies that have shown to work historically for a very long time. So I'm just going to grab a couple of these, a couple pattern identification systems to go along with it. And now we can kind of test how all of these work versus these securities. We have a few options over here to select too. Maybe you only like to take long trades, you can select that. Maybe you only do short trades, you can do that. I'm going to say both. I'm also going to test this across the last 5 years. So we'll do 1,250 records. We're going to do a daily time frame. With Metastock daily charts, you can do scans on daily, weekly, monthly, quarterly, or custom intervals, etc. in between that. If you have Metastock real time, you can do all of that, plus look at 1-minute charts, 5-minute, 10-minute, etc. But for testing purposes, we'll go ahead and keep that on the daily time frame here. And now I'm going to go into my trade options, and there's a number of different tabs here. One that I really like to use, one that I'll often use, is this account tab here. And maybe you have a few different trading accounts. Maybe you're trading a retirement portfolio. So these can kind of change here, but just for this demonstration, we'll say, oops, we're going to look at a trading account with $100,000 in it that's willing to risk up to 25% of that available equity at a time. You can come into your broker if you have interest rates, on margin or money, or if you have a points per transaction type of commission, etc. You can enter those into here as well, so that you're actually getting true results based off of that. And then in trade execution, there's a number of different settings in here as well. You could say, okay, well, I always want to buy near the close. This is actually something you can do new now in Metastock daily charts. You used to only get the data about an hour or so after the market would close. But now in Metastock daily charts, on your current day's bar, you're getting the data at about a 20-minute delay. It's updating throughout the day. So you could come in and, maybe 20 to 30 minutes before the market closes, you can check the current prices to see where you think the market's about to close at, and then kind of make some trades based off of that time. That's something that I often do myself. 20 minutes before the market closes, I'll go in there, see if I'm getting any sort of signal. So you can do it that way. Or another option here, if you're looking at this, after work or the market's already closed for the day, if you have realistic market prices set, what this is basically saying, if a buy signal is generated today on, say, the MACD, and I'm looking at that data after market close, well, technically I'm not getting in until the market open of the next day. So that's what's happening when I click realistic market prices. So we'll just keep that selected for today's demonstration. And now I'm going to hit start system test. So if we look down here, you'll see this is doing a test across over 800 securities. And the reason for that is I chose 4 different trading strategies, and we're doing about 200 securities for each one, 201 for each one here. So if you're selecting a lot of different strategies in here that you want to use, or if you're testing really large markets, this scan might take a little bit longer. But really, I find I don't run these system tests that often. I often do them initially to find strategies I want to use, or to kind of just make sure everything's still been kind of testing properly in the last couple of years or quarters or etc. So if you want to do a large test to kind of narrow down the strategies you want to use, you can do it that way, and then use less system tests moving forward. There's so many ways to use the software. It's really all about finding what works best for you. All right, so I'm going to click the results here. And one thing you'll notice when I go into these, you're going to be seeing red. So this means that the performance system pattern trading strategy, actually, if trading all of the securities in that with those signals, you would have lost money. So you would have been down 0.31%. And that's okay. This is good. This is information that I want to see here. I want to look at data. I want to know what's not performing well in certain formats and what is. Well, if we actually look at this from the FTSE 100 and S&P 100 over the last 5 years, the MACD had a 5.63% average gain, versus Bollinger Bands came out on top of that at 6.79, and then our performance systems pattern trading system number 1 actually had an 11% gain based on the last 5 years with this. I can also see in here the average trade, the profit and loss. So that's something I like to look at as well. And I can see how many trades were taken too. So this is something to consider too. We'll see the Bollinger Bands only took 39 trades on this system test, versus like MACD taking 144. So if you want to be more active, maybe you prefer the MACD over Bollinger Band, even if MACD performs slightly less here, because there's other things that go into this. There's other things you might want to take into consideration before actually taking these trades, and not just following the blind signals, because sometimes you want to wait to confirm, volume, or you want to confirm overall trend first, and that can alter these statistics a little bit. And there are also ways to kind of go in here and update these to be more specific to what you're looking for too, to kind of adjust some of these rates. But because we've been using the MACD as our example here, I'm gonna go ahead and click into it and show you guys more. You'll see now there's a lot of information on the screen. Let's go ahead and sort this by net profit. Now, this is showing me, okay, well, trading the MACD on these, on the FTSE 100 and S&P 100, the majority of the securities from those, you would still make a profit trading with the MACD, but there is a good amount here, maybe a third or a little bit more than that, that didn't perform well with the MACD. And that's okay to see red. Again, that's just basically telling me, hey, the MACD is not a strategy that I would want to trade on these, on the securities towards the bottom of this list here. Something else to note here, so you can even have like single securities like Tesla here really kind of taking over and kind of can skew data sometimes because it might have such a large percentage gain versus some of the others. But there's a couple of things that I really like to look at with with the different strategies, and we can look further into this in Tesla. So I'm going to click on it, and here we can see the performance. So of my $100,000 account in the last 5 years, I would have had about almost 87% performance if I was to trade the trade Tesla on crossovers of the MACD and taking overbought and oversold conditions in as well. The annualized performance on that is 17.47%. But this is something big to note. If I would have just bought Tesla 5 years ago, because it's done some pretty remarkable things over the last 5 years, it would have actually had 186% buy and hold performance, and the annualized performance on that's 37%. So yes, the MACD would have made me money on buying Tesla, but also if I had just bought Tesla and held on to it, it would have performed even better. So that's something you want to look at and kind of take into consideration. Generally you want a strategy that's outperforming the buy and hold here. And I know Tesla is a pretty unique one, so it might not always be showing that. Also, I bet the equity curve on this might be a little interesting too. This is something I like to look at. Okay, I'm actually surprised. This isn't as wild as I thought. So with this equity curve, this is saying with that $100,000 account, if I started here, this is what it would have looked like over the last 5 years. So here for the first like 3 years there or so, it was really sideways, even some down and choppy, kind of up and down. I would not have wanted to trade the MACD from 2022 to like 2019 on this, but I know those were also some wild years. But over the last just like 2 to 3 years here, this is what I like to see. I like to see consistent improvements. I want to see, a diagonal line that's pretty consistent with these strategies. Let's look at some other securities from this list to maybe see some different examples here. So we'll go sort by net profit again. Let's jump a few down. Let's look at Ford here. So with Ford, with the MACD, it would have had 10% annualized performance. That's pretty good, 10%, honestly. Getting that every year would be absolutely fantastic. And if I compare that versus if I had just bought Ford, I would have only had 7.95% over the 5 years, which is just 1.6% return over the last 5 years if you're annualizing that performance. So the MACD would actually be a really good strategy to utilize on Ford here. It performs way better than just buying and holding. I can also get more information on this, like seeing the trade efficiency, my how many winners and losers that I had, what was my biggest winner here. We had a 8,894 trade versus like the lowest profit, also my highest loss versus the average loss, etc. So these are other statistics that you can kind of look at here. Let's look at the equity curve. Okay, well, now that I actually look at this equity curve, it gives me some additional information again. So again, I mean, this testing period that we're doing the last 5 years, with you're including some COVID in there too, the parts of COVID, I guess at least. You're looking at a lot of sideways markets here. Maybe you'll have a lot of downs depending on what you're looking at. But here, this was a good curve from about this period to here. But over the last, I don't know, 6 months here, it looks like, you know, the MACD's actually been losing some money. So even though over the last 5 years overall, it's been about a 10% average gain, in the last year, it hasn't really been performing that well against Ford. So maybe I wouldn't want to trade the MACD against Ford looking at this. All right, let's go ahead and go back again. Now what I want to do is go into one of these other system tests. So again, MACD only ranked number 3 out of the 4 that we tested. The pattern systems number 1 from our Metastock performance systems actually performed the best. If we look at this one, okay, so now we have different winners up here. NVIDIA, that's another interesting one to look at, as well as like Broadcom. Tesla is still up here, but it's not the number 1 anymore when you're utilizing this pattern here. Let's go into, you know, Netflix, sorry, let's check that out. So I can see, okay, by trading the PS pattern trading system number 1, I would have had a 9% annualized performance. That beats out the 8% buy and hold that would have been there. So this is something I might want to consider. Let's check out the equity curve. The equity curve's not great here. What I really want to see is this type of pattern where it's low to high here. I want to see that all the way across. That would be the most promising, but you're not always going to get that because sometimes you have some pretty interesting markets and interesting things happen. It's just something I do like to look at. Let's see if we can find a terrible example. Let's go back into there. Let's check out this one's equity curve. You know, something like this where it's really choppy, up, down, up, down, up. This has been okay over the last like year or so here, but sometimes you have all this up and down, and then it just had some really good trade recently, so that's why it's so high currently. That's stuff you want to look out for. This isn't something you're always going to be able to see with other platforms. So I really like to look at this equity curve. I like getting some of this information at a glance here. You can even like plot this onto a chart, and this will tell you every single day what it would look like. I can see exactly when I would have bought in, when I would have gotten out. It looks a little bit different. So I'm going to click on that. And then it's going to open up here. We'll close that. This chart's a little different. You can mess with the settings on this. But if I come all the way in, you'll see where your entries were and where your exits were based on that system test. They're numbered in here, and there's all sorts of different information. So sometimes that can be interesting to look at as well. Or you could, of course, just actually look at the expert advisor or the template attached to it as well. So this is just showing the trades you would have had, how many units you bought and at what price. So here I bought 37 units at 722, etc. And that's based on the parameters that I chose inside of the system tester options when I said that I was willing to risk like up to 25% of my 100K account at a time throughout all the kind of trades that I was in. And so with this one, it put me in at 37 units at $722, etc. That's how that works. It's also letting me see kind of an equity curve up here as well at the top from that system test. So this can be another place to kind of look at this and get some information. All right. So I was just reading some of the questions. Someone asked me to look at some of the results of these, and that's what we've been going through. So looks like I got to that one without having seen it. I'm going to see if there's any questions on the YouTube side. Okay, so we'll come here. And let's go back into my test. Sorry, lost my train of thought here. We'll just come open the report back up this way instead of grabbing it off my other monitor. All right, so let's just look at a little bit more here. Let's maybe check out the Bollinger Band and how that looks overall. Okay, with the Bollinger Band strategy, it looks like there were a lot more winners than losers compared to like the MACD and some of the others. I like that there's more green here. Some of these losers were pretty big though, because oftentimes you might see, you know, where I've even seen a lot of losers, but they're all really small and the winners were big. So even if this was majority losers, but they were all tiny compared to some large winners, that's something to consider as well. Again, you have to kind of look at your risk to reward ratio and consider all of that as well. But let's look at an example of one of these. There's also other tabs here, like I can go into the order tabs and we're seeing, okay, on this bar, I bought in, what I do, I bought or I sold or did a sell short, buy a cover, etc. You can see all of that. You can see your positions and kind of how they went over time. You have the equity curve, which you can see here, like this one, it performed really well, but then it's been kind of flat for a while. Something to look at. You can get more information behind the systems here too, if that's the type of stuff that you're interested in. Excuse me. Let's go back to my summary page, or actually, I think that kind of shows you a good example of what you can see there. Now, there's another way to use this too. And again, I'm just showing you guys some of the common ways to use the software, but there's all sorts of different things that you can do with this. So another thing we could have done, so earlier, you know, when we ran the MACD buy signal test, I had 5 giving me a buy signal today out of that list of 200. Well, something else I really like is when you come down to the system tester tab, down here, this says last exploration results. So if I ran a scan with the Explorer and I'm like, well, hey, these are the only 5 giving me a buy signal today. Granted, these would have been included in that previous list, but maybe a little bit harder to find. Well, let's say, I mean, I'm testing, oops. I still have everything else selected too. Let me actually go in, turn those off. Let's just look at the last exploration results. And let's turn off these other ones that I had selected. If I just wanted to see, hey, well, out of the 5 giving me a buy signal today, how have those performed over the last 5 years with the MACD? Well, hey, this is some good information to have. Well, even though a few of those haven't performed well historically with the MACD, really only FedEx and this RTO.L have performed well. So maybe I just want to look at these two, and this is going to really kind of save me a lot of time. So I'll come in here. We can see FedEx has been a little bit better with buy and hold, but sometimes too, you know, often you might have better performance than the MACD alone, because if you're actually looking at a chart, sometimes, you know, you might apply some of your own like support and resistance levels, looking at a larger time frame. You might want to confirm trend overall. So you can often even perform better than these results, or worse if you're not sticking to, you know, a base set, rule set to kind of help you along through it. But that's another thing you can do too. Another strategy I've seen people use, they're like, hey, well, I know that I only want to trade the Dow Jones Industrial or the S&P 100 or et cetera. Or maybe you just really want to trade FedEx or just Tesla. You could also come in and just choose a few companies that you want to trade and then apply a bunch of the system tests to it and then see which of those systems works best on the security that you want to trade. So that's another way of looking at it. Another thing that a lot of people like to consider once you've kind of started to use the Explorer to dwindle down your list and use the system tester to make sure that you're running your explorations or things like that, or at least looking at securities that perform well in your area. Once you've narrowed some of that down, you might want to do a little bit of additional research on a company. Maybe you're not super familiar with FedEx, which I think a lot of people are, but just as an example, another strategy or another tool that we have here at Metastock is we have Metastock Zenith. I'm going to open this up, and this is a great platform to use for, let me close this. It's a great platform to use for fundamentals and news and things of that nature. I think I've got it on my other monitor here. Over here. So I'm just going to get logged in here. Oh, and if you guys want to start asking some questions, or if you have certain companies or things you want me to look at, oops, wrong page, feel free to do that while I get this pulled up. Okay, here we go. Where has it gone? Sorry, guys. This is not my daily computer, so it runs just a little bit different than what I'm used to. I'm hoping you can all kind of still see my screen here. Looks like it. Oh, and I once again pulled it onto the wrong monitor. So let's try one more time here. Okay. Now I got it all pulled up. Let's go ahead and just open up FedEx. So if I type in FedEx here, it's going to know, hey, the symbol for that is FDX. I can see there's already a lot of information here, but what I want to do is just look at their overview page, because I know there's a lot of data that I can get here. So this is Metastock Zenith. This platform was developed by Reuters or Refinitiv. It's now owned by LSEG. And they put over $1 billion into the creation of this service, and it's primarily used by professionals and institutions, the icon which it's modeled after. But we here at Metastock, we're able to offer it to private retail traders like yourself at a fraction of the cost. They're often paying thousands of dollars a month, and we can get you access to this terminal here for as low as $110 a month. And you can see already there's a ton of information in here. So I can see an overall business summary of FedEx right here. I can look at, like some basic charts to kind of see the price overall. I'm getting breaking news coming into here, and everything in here I can click on. If I want to get more information about this breaking news topic that includes, FedEx, I can click on it. Here's the news report right here. I can also come in and see the StarMine models. So this is going to let me know, like, what is their credit risk rating? And if I don't know, kind of what exactly that means, I can click the question mark here, and it lets me know on a 1 to 100 percentile rank amongst other firms in the same region, what is the likelihood of this company defaulting on a 1-year time period? So that's kind of what that is. This one has a pretty high rating, but it does have a couple of bearish ratings on here too, like the analyst revisions and M&A target models are showing kind of bearish on this. So these are things you can look at here. You can also come in and look at an overall news monitor here. There's a lot of different charts and things that you can look at in here, like you can look at a seasonality chart and things like that, which I sometimes like to look at. You can look at the estimates and see your recommendations and target prices here. So I can see how many analysts currently recommend this as a buy, how many recommend this as a sell, how many as a strong buy or a strong sell, etc. I can kind of see what that's looked like historically here. If I go into this 360 menu, it's going to kind of show you everything I can look at for FedEx here. And this is only just like the overview page and seeing kind of some of the stuff in here. You also have like financials here. I can look at the income statements, the balance sheets. I can look at their cash flow. I can look at an ownership summary here, a shareholders report, etc. There's also other applications in here, like you might just have a monitor set up with like maybe you keep your portfolio in here or something you want to look at. Like if I put in like the FTSE 100 and I wanted to monitor that, or if I want to look at everything inside of it, I can see its last price, the current percentage change, things like that. But you can also add many additional fields in here as well. Like a lot of people don't know, you can put like indicators in here. Oops. So I can have like the Bollinger Band, upper band. Let's see here. I can look at the rate of the upper band for the Bollinger Band. I can see when crossovers happen. I can put all sorts of things in here. If I come into the information, you can see there's hundreds of different criterias and things that I can look at and apply to have in this monitor. And then I can easily jump into these different companies to learn more about them. I do an hour-long webinar on this alone often, where I'm just presenting on Zenith, and even then I barely scratch the surface. So I know this is maybe a little bit of an information overload. I just want you guys to know that this is an additional feature that's available. This is included if you have Metastock real-time, because real-time is powered by the Zenith data feed. So this is also a part of that. but you can also get it as a standalone platform if you wanted to really, look at news or fundamentals, things like that. But what I often like to do after I've done my technical analysis in Metastock, I'll open up Zenith and I'll do a little bit of fundamental analysis. I'll get an overview. I'll see kind of market sentiment and things of that nature inside of here. I also like to kind of follow along in some of the calendars and things in here too. And you can get some different like reports sent to you as well. Like I get a daily like newsletter sent to me that kind of covers the markets I follow in a whole or as a whole. So if I close that, here's like the home app right here, and you can customize this to show what you want. So you can have one of your main things being like banking and finance or company news or front page information, etc. You have indices, futures, you can look at options, you can look at major, hot options currently, index movers, and things of that nature are all available in here. And this can be fully customized and runs in like kind of different panes. You can see if I hover over countries here, we have a list of almost every single country available inside of here. So if you're wondering if this will work in your market, the answer is very most likely yes. Yeah, so I do see a couple of questions coming in. I know I'm getting close to the top of my hour. So can you combine custom-made technical analysis and custom-made fundamentals and exploration scans? So yeah, if you have a certain type of like exploration here that covers like some fundamentals or things of that nature, you can come in here and create your own custom explorations. You can also combine multiple explorations. So just to give a quick example here, coming back into the Power Console, into the Explorer, something like one-day surge volume. So, well, let's get a different one. So one thing I could do is I could take like the Bollinger Bands, just as an example. I know this is still, these are staying mostly technical, but if I wanted to select the Bollinger Band and the MACD, and then I have an option over here. So it currently says use the selected instruments for all explorations. So if I chose like the Saudi market, the TASI here, currently this is going to run one scan for Bollinger Bands across these 247 securities, then one on the MACD for these 247. Well, I could use the results from the preceding exploration. So, and maybe I even switch these. So I will run a scan with the MACD, and anything that gives me a result, remember last time our scan had only 5 results. Well, then this says next, take those 5 results and run the Bollinger Bands against it as well and see if that has a crossover happening today. And then this way you're kind of combining two, and the scan becomes a lot faster because first it's going to scan 200 securities in my example I gave, and then it would only scan 5 on the next one. And you can combine multiples in here to do that. You can also come in with these systems, and you can, we do have like a Metastock formula language that's very similar to Excel, and you can come in here and create your own custom scans too. We also have like an indicator builder, and then you can often copy your indicators and paste them into explorations. Basically, we have some really good videos on this on our YouTube channel as well as on our website, but you can come in and create your own custom indicators as well as custom explorations, system tests, etc. And yes, you can combine multiple things. Someone wants to know if you could combine 2 experts on the same chart. So for the expert advisor, you can't have 2 on the same chart, but you can have like a multi-chart layout. And then you can apply the experts to the different charts in that same layout. But the expert advisors themselves, because they have their own distinct commentary and their own highlights and things to make it so that they play friendly, they have to be on their own charts. But you can apply multiple indicators to your charts and then just have like the commentary from one of the experts applied. So that's an option for you there. Someone asked, how many years of fundamentals does the real-time service give to you? So I know that you have at least 5 years on some, but some I think is even more. So if I come in, what am I thinking of here? So let's see, LSEG fundamentals. Excuse me, hiccup. So this is showing me 2024, 2023, 2022, 21, 20, 2019. And so looking at this like income statement here, I can see gross profits. I can see their operating income. I can see their net income before taxes. I can see how much taxes they paid. I can see all sorts of different stuff in here. So yeah, you get at least 5 years of fundamental data. All right, let me also make sure I'm giving YouTube the attention it deserves as well. And see if I had any questions come in here. Someone asked, are there any live mentorships or chat room support groups of Colin apart from his system? So Colin is a part of several different groups, I know that, and he does do some type of mentorship programs. I can't remember all of them specifically, but you know, what I would recommend you do there, Nathan, is reach out to metastock.com/sales chat, and they can kind of go in and look and see some of the different contacts, or you could also send me an email and I can get the information afterwards and send it over to you. So let me go back into my PowerPoint here. Well, do you want, I don't want to just leave you hanging after I said I'd give you my email. I realized I don't think that this specific presentation has it, so I'm going to give it to you right here. Bobby.hiller@metastock.com. I've spoken with all of the presenters today. I kind of helped organize everything. I've been in contact with them. So if you guys have certain questions that you weren't able to ask the presenter and you didn't see their contact information, feel free to send me an email, bobby.hiller@metastock.com, and I can relay it to them. And I'm more than happy to do that for you. Kind of diving back into this though. So if we're talking about Metastock, everything I've been demoing today has been inside of Metastock 19, where we have quite a number of improvements here. I noticed, you know, with some of the speakers, they hadn't updated their charts yet, which they're totally missing out. But everything you saw on my platform was fully up to date, and you can, these are some of the new things you'd be looking at compared to some of those that haven't seen them yet. Metastock 19 did come out in the last year though, so can't blame them. If you're wondering what's the cost for Metastock, you want to sign up for a trial. Metastock daily charts, which everything I showed in Metastock was done on a daily or above time frame today. It includes now global daily market data for just $74.95 a month, and the current day's bar is coming in at a 20-minute delay, so you don't have to wait until after the market has closed anymore. But that's starting at $74.95 a month. You can also buy Metastock outright and then get this data feed for just $39 a month, $39.95. Or there's some other data options, local data options that we have too, if you just want to buy the software and then use a local source. With Metastock real time, if you're getting like a regional plan and you want to be able to sign up for exchange fees for live data, you're looking at $265 a month plus exchange fees. But if you're okay with having, you know, a 10 to 20 minute delay on stocks and futures, and then but you want live Forex, we have a package for that too, which is $110 for Zenith plus the $100 on Metastock real time, so $210 a month. If you wanted to sign up for a trial for any of this, or if you wanted to take advantage of any of the kind of premium toolkits that you might have seen today, come visit us at metastock.com/summit-savings, and we can get you hooked up with that. We'll offer you free unlimited support with all of this. On all of our one-time purchases, we also have a 30-day money-back guarantee for you guys. But we can not only help you kind of get installed, we can do a full hands-on demonstration in the software. Basically, what you saw me doing today, you can have a Metastock expert, which I'm not even a Metastock expert, but our support team, they are, because they know the ins and outs of everything. There's so many things you can do in there. I know how to do the things that I like to do in my trading that I've often presented on, but you might have a completely idea of how different idea of how you're going to use Metastock, and we can kind of go through it with you and show you how to make Metastock work best for you, and that's at no additional cost to you. So again, you can come to our chat room, the metastock.com/sales chat. And then just to touch on this, so this one, I forgot to update the title. This is our international summit, not just a Euro focused, but all these products are correct. We have discounts available right now on several of our different trading strategies that you've seen today, and you can get those individually at metastock.com/summit-savings. But we also put together an extra special deal that can't be made available online because the discounts are kind of too big. Funny enough how that works. So we can't put it on the website. It has to be a call in or chat in only, or email too. You can go to metastock.com/sales chat and you can get everything for over 50% off if you were to buy everything that's presented today. And that comes at just $24.92 instead of over $5,000 for a full bundled offer. We really were kind of just focusing on a lot of free content today, and there's some paid programs, but I thought, hey, if people really want to try everything out and get the best possible deal, then I'm going to see how big of a discount I can possibly get on everything for you guys. And I packaged that all together for a call-in only offer that's available at $24.92 total to get all the different strategies we've kind of shown. And just to clarify, because I see one wrong picture, that's the Market Edge technology, Elasticity 2, Power Bundle 360, and the Paragon Toolkit. So we have Stocks and Commodities Magazine has kind of sponsored this event. They're fantastic. They had even like a premium offer. All of our speakers actually had some free bonus offers you guys could have received when registering for today's event. If you're over on YouTube and you didn't have a chance to register for the event, I believe that's still possible. If you just go to metastock.com/international-summit, you can click register now for free. And we had several bonus offers from all of our speakers. These are all absolutely free that you could select to receive from them directly, and then go ahead and click submit. That'll register you. That way you'll for sure get a copy of the recording from today's event, and you'll be able to take advantage of some of these special deals that they had to offer. All right, now I know I jumped ahead. I took up a few minutes here of Tim's time, but we are gonna go ahead and get things moved over to him. So, hey, Tim, are you in here with me? I can see that you're unmuted, but I can't hear you if you're talking. I do see that there was another question that came in. Someone wanted to know if there's a boot camp on the 30th for Sublime's Market Edge technology, and the answer to that is yes, there is a boot camp. It's coming up on the 30th. You have to own Market Edge technology, and as long as you do, you're going to get an email invite to attend that. That'll be coming within the next couple of days here, but it's going to be the 30th at noon Eastern, and it will be several hours of kind of training. And
Zaheer.
Oh, there you are, Tim. I just heard you.
Right, that's good. Yeah, I'm just putting.
Yep. Well, I don't hear you anymore. Let me scroll up here, see if there's any other questions.
Bobby, just to be sure, I also cannot hear Tim. It's not just you.
Okay, I did hear you for a moment there, Tim, and then I lost you. Well, it seems like the sun's finally coming out, guys. I think I can take off the Metastock jacket. I don't know if you guys heard before, but it was 17 degrees Fahrenheit. I'm not sure what that is in Celsius, maybe like -10 or something. So quite cold this morning. But Utah likes to really fluctuate. We'll get like a 40-degree range in a day or 50-degree range. It's starting to warm up in here.
How's it now? Can you hear me?
Hi, Tim. Yes, I do hear you.
Okay. All right, that's good. Okay. Well, my presentation today is going to be split up into two parts. Firstly, I'm talking about how to optimize or make a stock portfolio optimization, because the problem is with stocks, if you're even the best trading systems, we're going to deliver disappointing performance results when applied to markets with weak deterministic trend characteristics. So here's what I'm just doing a PowerPoint presentation here. I hope you can see it.
So I'm currently presenting, but here I will make you the presenter.
Okay.
So you should have just received a pop-up there asking you if you want to present, and you do have, yeah, about 50 minutes here to take up.
Okay, fine. Right. Okay. So
great. I'm gonna let you take over, Tim. I'm gonna go just grab a quick drink of water, but I'll be back in 2 minutes. But you're good to start.
Okay, fine.
Continue on.
Okay, lovely. So this presentation is, well, it's doing in two parts. We're going to address difficulties associated with stock picking, and what we want to do is discover means to select stocks which are more likely to deliver outstanding trading returns. So we have, the problem is trading financial instruments with an unsuitable behavioral profile. So I've come up with a way how to address this problem. And I must thank Alex Spiroglou, because thanks to his MACD-V indicator, I've been able to use that in a way to scan through stocks which have a strong deterministic footprint. That means stocks which are tradable. So as you heard from Alex before, I don't have to explain that. He explained everything very well. It's a volatility normalized momentum indicator. And what I've done, I've used this in a scan to sort out stocks with not only high trend momentum, but also trend duration. That means to scan stocks which have showed performance over an especially long time. And the difference is, as Alex also said, the MACD indicator is the difference between two exponential moving averages. It has a lot of drawbacks. One of the main ones, it can whipsaw very easily. So I never use it as a trading to trade signals off that. And this is how it looks. You have your exponential, your fast. The red line is the fast exponential moving average 12, and this is the 26 one, the slower, with the histogram in here. And this is the Metastock code for this indicator. The good thing about the MACD-V indicator is it's a boundless oscillator, which means it doesn't just reach 0 to 100, but further on, and it's volatility weighted. So I'm just going to show you, this is actually here, this MACD-V indicator, and you'll see you've got the 0 line, you've got 50 plus or 50 minus. And this particular stock, this is 3M, the momentum exceeded 50 for a long period of time. So this is what is interesting here. This is bullish for a long time, going over 100. In comparison, we have a stock here, this is Paychex, where you can see that the same indicator has stayed within the plus and minus 50, which means it has no real trend direction. You can see to trade this stock, it must be a nightmare because you're going to be whipsawed in and out most of the time. This is the paychecks, another example of this. Okay, so what I've done, I've created 3 explorations using this MACD indicator. I've got 3 of them. It's just for bullish stocks, if you want to go long, if you want to go short, or a combination bullish and bearish trend filter. What this scan will do, it'll only display stocks which have traded above the 50 plus 50 level in 80 or more days out of the last 100 days. So, and this way we can, those stocks which are selected, we know they've been in a good trend and will offer pretty good trading opportunities. So this is just a copy of the exploration. Here you have the MACD indicator. And what it's doing, we're going to filter only those stocks which have traded. We want to see how many times they traded above 50 in the last 100 days. So you have a few, this has to be over 80. So having done an exploration, this is just the bullish side. We've taken out of the New York Stock Exchange 5,650 US optional stocks, which matched 80% trend strength and duration. And we came up with a selection of 49 stocks. You could see these values here, MACDV values, pretty high. So what I've done is to save this as a custom list. You can just save it. And then we've tested just these stocks on a number of trading systems. This is the system which I developed last year. Total Trader, MACD Expert System, just a number of systems. So you can see all of them, this is over a 1-year period, made substantial gains. What I would just mention here, if I take the elasticity results out of this system, you see you've had out of these 49 stocks, you had 2 losses. The other important thing about this system is the profit-loss ratio. Now, when you're trading, if you, out of 10 trades, you make 9 losses and the last one is a fantastic gain, you will give up after about 2 or 3 losses. So it's very important to have a system which generates a good high ratio of profit to loss. You see all 3 these stocks, how impressive the returns were. 6-2, 6 profits, 8 profits, 3 losses, 5 profits, 1 loss. This is a very good profit-loss ratio. Right. Just take this away. Now, on the other hand, using the same filter, but we've changed the values, we've made sure that out of those stocks, we're filtering stocks which traded only 30% were above that 50 level. Using the same systems, they all made losses. So it just proves how important it is to be able to select stocks which have a really high, a good trend force and trend duration over a long time. Otherwise, you're going to end up with really bad performance. So that's the end of this presentation. I just want to say we have run a website called Metastock Swiss. It's already been running for about 15 years. And we have in there a code source database which covers all sorts of indicators, trading systems, and explorations. And for any of you who are interested, you can sign up, send us an email to admin@Metastock Swiss, and you can get 3 months free access to this. And we would send you just the username and password so you can log in and go through it. It's extremely useful for people who want to develop their own systems. And there's a lot of code in there which they can use. You can copy and paste it and do what you like with it. But it's a great assistance and it's quite popular. I just go now to our website. And this is the code source here. This is the list. Just take this away. Here you have a list of all indicators which are in there. And this is being added as soon as something new comes in, it'll be put in the database. Custom systems, custom explorations. Here, this is the one we were demonstrating just before, the MACD bullish trend filter. All the code is in there, and you can just copy it and test it out yourself. And I must say, this is a great help. It helps you to select stocks which are going to deliver good returns. Okay. What I'd like to do now is just to come back to a little bit about the elasticity 2 system. Just to show how this works. This is a system which generates buy and sell signals through an inside bar. So an inside bar this is a bar which is the high and low are within the range of the previous bar. This is the so-called mother bar. Now, if the trend, we use a 29-period exponential moving average, and if the direction is up, then as soon as this level is broken, this will give a buy signal. Okay? Exactly the same here with the sell signal. You have your mother bar. You've got the following bar, which is within the high and low of the previous. And when this low of the mother bar is broken, this gives a sell signal. What it also has is a trailing stop, which is an average true range weighted ratchet stop. So when you're long, it's always going up until it's hit. The same for short positions. You have protective short stop until it's hit. So that's protecting your open positions. But what it also does is generates target exits. This is also an average true range as volatility weighted target exit price. So let's say you have a long here. As soon as this is hit, you'll exit. So you're protected on both sides. You're protected against losses, and you've got a target exit. Same thing in the short side, short entry, and this is when it breaks through, you've got your exit short. This is actually how the template looks. You can actually select this either to only trade long trades, long and short, or only short, depending. There's one disadvantage with shorting stocks. It's not like currencies where you can just borrow one and invest on the other. the shorter stock, it has to be available, and this is not always the case. And if it is available, there's often considerable borrowing costs. And the other thing is, of course, in drastic situations, there is a small potential for unlimited losses on short positions. I can only suggest people who want a short, there is a workaround on this, is to buy deep in the money put options. The reason for that is if you're spending more on a put option, you're losing less time value. So it's probably the best workaround for shorting. What this system has is also an expert commentary. It shows you what the trend is through RSI. It shows you where the system is. Short position here, weight is currently open and protected with a stop loss at 122. The current performance on this open position is 3.63. And it gives also the suggested profit target on the short position here. So this is updated. I use it on a daily basis, but you can also use it on a weekly or in real time on hourly or so forth. Generally, I find performance on in a daily time period is the best, so the most stable. What this system also has, it has expiration scans. It'll show on your portfolio of stocks the current open trades you have. So that's the close. One, it means it's long. The stop loss, the long exit price, where it was entered, and the current profit. And this is noted for all stocks in your portfolio. And this is open positions, which I have here. So if any of these comes out with you can also check. It scans also for exits where you should go out. Also in this software, there's a lot of information on psychology of the markets and so forth. Succumbing to the herd mentality, news trading, believing in price forecasts, lack of self-discipline, leverage, a lot of subjects which are very important in trading. And so forth. So I'll just close that down. Okay. What I wanted to show also on Metastock Swiss, there's a lot of calculators, pivot points, Fibonacci retracement. This is interesting, position sizing. A lot of people are unsure how much money to risk on a particular trade. Let's say we have NVIDIA, which is now 117. It's dropped about 17% today. Let's say now we're going to buy prices here. We're going to put a stop loss at say 112. And I say, well, I'm prepared to lose $1,000 on this trade. So here, it'll tell me how many shares I can buy, so that whatever happens, when that is hit, I've only lost the $1,000. just going back into Metastock here, just shows you. This is actually the template of elasticity too, which gives you here the performance on any open trade. So this just went along here. This price, I think it's 605, and this is calculated in real time, so you can always see the performance. The trend, this is the moving average. This shows the trend. So as long as this is rising, it'll only take long entries. And these are the breakout of inside bars here every time. And you can see here, this was bought here at 610. Exit price 684. This line here is the target exit line. So on your template, when you look at the chart, you've got all this information. You've got your stop. The red line is the long stop loss level. On short positions, the green one is the short stop. So you're protected all round, and it's been quite a success. I'm very pleased with it. I've had a lot of positive echoes on it, so I can really recommend it. Are there any questions?
Hey, Tim, we haven't had any questions come through yet, but yeah, if anyone has any instruments you want to look at, or if you guys have questions, feel free to put those in, but nothing so far.
Okay. That is more or less that's the end of the presentation. As I said, if anyone is interested to go into the Metastock code source, just send us an email to admin@Metastock Swiss, and I'll be happy to send you the login. And this is the page where you can just put email and password, log in, and away you go. So, Bobby, I think that's about it from me.
All right, Tim. Yeah, I can take back over here. No problem. Thank you for demonstrating kind of some of the things you put together inside of Metastock here. So I just get this all pulled up here. And let me see if I can share my screen again here. All right. Okay. So we have things moved over here. All right, so that was Tim. So Tim has been a partner of Metastock for many, many years now. He operates the Metastock Swiss as well. And he has his elasticity toolkit, which kind of just demoed for you guys and showed you some of the things that are available on his website. So just to talk a little bit more about the elasticity add-on. So it includes multiple different indicators that he kind of went through. It has long stops, it has entries, long stops, short stops, and it kind of lets you know the state of it. It also comes with multiple explorations, and it has a system test to go along with it as well. I know Tim showed in the past kind of like what that test looks like, and also what it looks like, funny enough, when you run it on securities that are showing trending using the MACDV. And actually our first speaker today, Alex Spiroglou, is the creator of the MACDV, and we're actually working to kind of like officially get the MACDV and some of its indicators into Metastock, and then looking around making like some additional systems for it. But yeah, I think that's pretty neat. I know, Tim, actually for a while now, you've been talking about the MACDV and its performance and how you can combine it with other strategies to get really some improved results. And so I thought it was great that we actually had Alex on, the creator of that system, today. I'm sure Alex would appreciate knowing that you've, that you liked his indicator and that you've been using it as well. Something I do like to mention about, are we on the right things here? The elasticity toolkit. So it does come with some additional training that comes with it as well. There's 5 different videos or kind of classes on it that go over kind of the technical analysis side, but I also really like how you go into the trading psychology behind it as well, and the fund allocation and kind of all the different like risk management tools and things that you have available, because I think that's all really important to showcase too. And then so here's the class 4 and class 5. All of that comes for free if you order the elasticity toolkit. And we do have that available for just the elasticity at metastock.com/Stratton-A. Or we have several different programs that were kind of featured today alongside with all of the multiple different free kind of things that we've shown. And we did decide to put together like a bundled package to give you guys a huge discount if you're interested in like getting everything for over 50% off. We made that a call-in only offer that you can get by visiting metastock.com/sales chat and asking to speak with our chat team, our sales team. And if you wanted to, maybe just order anything, or if you want to come back and watch the recording later on, metastock.com/summit-savings is going to allow you to do all of that. Now, with that said, I know that we still have, where is it here? About 25 minutes until the next speaker is set to go on. I actually did see that Adrian's joined. So Adrian, if you're here, you're welcome to start early. Otherwise, I do have something prepared that I can showcase as well until we get up to the point here. So let me jump in to my other view here. All right, so I got to show a little bit of this at the end of the demonstration that I was doing earlier, but something that I kind of wanted to be able to spend a little bit more time on before my time had ran out was the Metastock Zenith platform that we have available that allows you all these additional tools to access like news and fundamentals. And I wanted to show you guys some of my favorite apps and things that are available inside of there. So I'm going to go over here, up here at the top. I believe you guys can see this. You might actually not be able to see it with the view that I have applied. Let me see if I can change that real quick.
Probably what I see right now is a blue screen, but
yeah.
I did pull the menu down. I saw the menu come down.
Okay. I'm just going to see if it lets me change the screen I'm sharing. Well, actually, if I just open this up, we'll be all set.
Yeah, now I can see Zenith.
Okay, perfect. So this is Zenith. This is the home page. I know I got to show this just a little bit towards the end of my last presentation, but there's a few other apps and things that I wanted to show you guys that I think can kind of be helpful for pretty much any trader, regardless of what you're doing. I think it can be good to learn a little bit more about like the securities that you're purchasing, and this is the platform to do that. So inside of Metastock Zenith here, which is like a retail version of previously Reuters, then Refinitive's now LSEG's Icon platform. You could come in here and it's going to give you the option to really kind of personalize things here and see the data that you want at a glance. You can also set up your own kind of custom workspaces, and that's what I maybe want to show you guys here is how I'll set up like a workspace that kind of works for me and helps me do a little bit more analysis on the markets in just a few minutes each day, especially after I've kind of finished doing my technical analysis scans and research and stuff like that inside of Metastock. So in here, I might have the home page where I can jump into things. If I'm interested in looking at some of the top like equity indices and what's going on there, I can do that. This is just access to our FX package here, but it still includes stocks and futures and things of that nature as well. It just doesn't have live data on those, and there's a few securities that are behind an exchange fee for a couple dollars more a month that the FX package doesn't have, but you can get those on the other plans. With that said, let's kind of just explore some of these apps here, and I'll show you how you can start to put some of this together in kind of your own custom workspace here. I'm just going to take about 15 minutes to kind of go through this. So if I wanted to like jump in here and just kind of start looking at some of the major benchmark indices and learning about them, I can do that. There's tons of great overview pages here, but one thing to note is pretty much whenever you see something, you can click on it to get some more details. So here, I just clicked into the Russell 2000 index, and now it's going to tell me like what that is, and I can start to see like news and things on this market here. You can come in, and there's actually a lot of different charts available in here as well inside of Zenith. So I can come in here and look at like price history or very specific charts as well. You can get investment information and things like that. Actually, let me just jump straight over into the 360 menu, because this is where you can start to see a lot of things. You'll notice that there's less here than there was earlier when we were looking at a specific security, because, well, let me actually just go back to something like that. I think it would be a better example. And so you'll see one thing, this is very intuitive. I actually typed in Facebook as just kind of a habit, and it knew that I actually wanted to look at Meta, so it pulled up Meta for me here, so that's nice. I love how intuitive it is. It can kind of help you out with things like that. If you can't remember the name of a symbol or something, you just start to type it in, it's going to help you out. But once you come in and look at specific securities, you have like the overview pages here, which you can move some of this around to kind of show what you want. I also showed you guys like the 360 menu. This is where I meant you can see a little bit more, because it has things in here like the statement views and company news and things of that nature that you can dive into. So one of the things I really like to do is to keep like this overview page and have it as part of my core kind of workspace that I use. And so what I'm going to actually do is make it so that this is no longer full screen. And I just want this to be, you know, maybe the left side of my monitor here. So I'm going to set it up like this. And then another application we briefly looked at previously was the monitor. This is another one that I really like. So I'm going to open up this as well. And I'm going to, let's actually make this one a bit smaller and attach it here. Now, currently there's not anything in here, but I could open up a saved one. This isn't my personal computer, so it doesn't have my exact lists on here, but you can put all sorts of things in here, and it doesn't just have to be you know, stocks. I can look at Bitcoin, so I could put in Bitcoin. If I wanted to look at, say, the FTSE 100, I can put in an index and do that. I can also put in like headers, so insert a header row, and maybe I put indices here, and then I actually take this and I drop it below the indices, and then I have, let's do another header row, and like this one's crypto. So I have that, and I want to keep crypto underneath this one, which we do have other things like we have Ethereum, Litecoin, Ripple, things like that. So LTC equals is Litecoin. But also with the indices, I really like that you can click down this menu and it's going to populate it like this. And again, I was showing this earlier too, but not, you can have like basic things in the monitor, but you can also put in like specific indicators and things in here too. There's thousands of different things that you can put into this monitored list to look at, but for this demo, we'll just keep it basic with some of this basic pricing. What I want to show you guys is how kind of neat these workspaces can get once you've kind of found everything that you want and put it in here. So also maybe I want to catch, you know, breaking news. So let's go ahead and put in a news application here. So I'm going to come in, and you see if I kind of drag this here, it kind of sticks right there. So I've placed this here, and now this is showing me news that currently includes stuff on the FTSE, because that's the last kind of symbol I had clicked into. I can also see like market sentiment of these news stories. So instead of actually going in and reading this whole thing, I can see, well, hey, this is primarily saying that this news is negative on this. The market sentiment here. I really kind of like having that indicator at a quick glance to kind of pull all of this up. But let's keep going. Let's keep adding a few more little applications into here. So another, well, let's actually look at a list of some of the apps. So if I open this up here, it's going to show me some additional apps and tools that I can go into. Maybe I also want to have a seasonality chart pulled up. So let's go ahead and, oh, I should just click on it actually. So we're going to open up the seasonality chart. I think this is pretty neat to have. And let's, yeah, make this a little bit smaller. And I'll grab this again and stick it in here. I'm gonna have to make that smaller as well so that it fits. Here we go. And let's pull up one more application here. Maybe we want to look at something around, let's look at a quote list. That's another one, just a real basic quote letting me know exactly what's going on. So I've opened up the quote here. And let's stick this here. Now, all right, so far I know, okay, this is just putting a bunch of applications together so it has a single view. Like, what's so super neat about that? Well, there's another step here. I can go in and I can link all of these different windows together so that they're not just kind of connected visually here. But if I come in here to this link and I assign this to red, and I'll assign this to red, and this to red, and this to red, and this to red. Now here's something that I really love about the service here. So if I come into a different security, we'll go ahead and click on AB food here. And now that I've clicked this, all of my linked applications that are open have now updated to ABF. So now it's the ABF overview is over here. This is the ABF seasonality chart right here. And here's a quote on ABF that's popped up. And all of the news that I wanted for ABF is showing here too. So this is a way to really quickly kind of link your workspace together to kind of operate through. And you can have all sorts of different applications here. There's also other ways of setting this up too. Like I could come into here and click layouts, and I can say, hey, I want like a 6-panel layout here, or I want to use like a certain template to help me build this. So I could use an equity template for Americas, and then open this up. Now here's kind of just like a populated template that I might want to use. Let me open that back up. So here's another like kind of template style, and this can be on one monitor for me. Oh, this was on read only because it was copying something else, but you can see here, there's a lot more fields on this monitor, and you can have kind of different setups here. Another thing you can do is you can have multiple different workspaces kind of saved. So I'm gonna not keep that one open, but this one here is currently saved as Web 2. Well, it looks like someone else had like a bond. This one is called bond, this workspace that they had, and this one's saved here. And you can see there's other information here. Well, it's really easy for me to kind of click between the workspaces. Maybe you have one for certain regions or countries, or maybe you have them for certain asset classes or sectors or something like that, but it's really easy to kind of dive between these. You can also put them on multiple monitors, and it'll remember the monitors that they were on in that layout, and it's really easy to go back into them later. I'll show you guys some other like examples. Here's like a test of just some of the most popular apps here. So this one has a quote list, slightly different from the monitor list we were looking at before. Monitor, news, it has a different type of chart saved right here. You have a world clock down here, and then some additional news and resources here. And you can also have multiple tabs within each of these sections too. Because I am broadcasting here, it is a little bit slower to load, but normally everything kind of populates instantly on my own work laptop when I'm not broadcasting. But just to kind of show you, you can really kind of customize this to suit your needs. Something I often do too is I'll take my like exploration results out of Metastock, and sometimes I'll save those inside of like a spreadsheet or something. And from there, I might take them out of the spreadsheet and I'll just paste them into a monitor list or a quote list inside of here, and just kind of work with both Metastock and Zenith. But you can do so much analysis inside of this platform. There's hundreds of different applications and things inside of here that you guys can utilize to kind of help you with your trading. And I can find myself getting lost in here kind of going through it because there is so much, but oftentimes, once you've kind of established yourself, you can just put in the information that you want, create your own custom workspaces, and really quickly get a lot of information at your fingertips. Another thing that I really like is some of the newsletters you can get in here as well. So Zenith has access to over 2,700 different reporters from like 200 different news bureaus. So you can get a lot of data in here. You can also sign up for different, see this subscribe option here. This is to subscribe to free newsletters, I should say. One of the ones I really like is this Day Ahead for North America. So I'm going to go ahead and click this one. And what this will do is show me kind of what's past here. And so this, the Day Ahead North America, January 27th. I'm going to open this up and just kind of show you guys what this report looks like. You can have this emailed to you every day if you subscribe to it. So it'll just say like, hey, coming up for the next day, on Monday, it'll let me know a market recap of what's kind of happened, where some things might have gone on, like the dollar weakened due to expectations from tariffs. That pushed up gold, and oil prices saw a modest increase. It lets me know some of the major movers for the day, and then gives me just a real quick, this is, let's see here, just a few pages really, because there are a lot of images in here too, but it's maybe like a 5 to 10 minute read depending on the day, but it can kind of really get me up to date. Okay, these are the global markets that kind of really moved a lot. Here's what happened in Canada on this one too. This one's the Americas specifically, but there's a lot of different things that you can subscribe to in there, and you can get a lot of information that kind of prepares you for the upcoming day. So that's something I really like. There's a lot of different newsletters and things in here. There's also a lot of kind of pre-built templates that you can use. And we have a lot of partners that have kind of created their own workspaces that they share with their followers too. So if there's someone else who you kind of follow that you know utilizes our service, one of our partners, you can feel free to reach out and see if they have a workspace that they kind of share with their users, or you can come in here and kind of access some of the templates and utilize that. So like banking and research, equity research. Let's go ahead and just see what this template looks like here. It opened it up on my other monitor. Let me minimize that and drag it over here. So then it has some additional things here. You also have inside of here, there's help functionality. So if you need kind of quick tips on how stuff works, you need some help or some training, you can come into that and utilize that as well. Oh, that link that I clicked didn't work, but there's a lot of different things you can learn in here. This will go through kind of a quick training like, hey, here's my main menu up here. Here's where I access my workspaces and the workspace menu, etc. So you can utilize those tools too. And we, of course, have a free support team here at Metastock. And we even offer like one-on-one sessions where we'll kind of do like a demo of not just our Metastock software, but we can also go through Zenith here with you as well and kind of show you a lot of the great features in here. So I think this is a fantastic way or tool here to kind of partner in with the technical analysis side inside of Metastock, and then also be able to have all the news and fundamentals and things here as well. You can also go in and look at just like regional information. So if you're in the United Kingdom, I can come to the main United Kingdom app here, and now I have news tailored just to that area. I can kind of see what the FTSE's doing. I can look at their market instruments and kind of see some of their benchmarks just at a quick glance in here. And then I can dive into news and events, financial markets, their central bank. I can look at their debt structure for the area, the economics. I can do a comparison of it as well. So there's all sorts of really neat tools that you can kind of come in here and access that could really likely help you out with your analysis. And one thing I'll say is, I know showing all of this might be a little bit of an information overload, but what I recommend doing is just if you think you saw anything that might be useful, that might help you out with your trading, is that you just do a trial. Come to our chat room, metastock.com/sales chat. We have a bunch of friendly team members over there that would be happy to answer any specific questions for you, and they can help you get set up on a trial, whether it's for Metastock or for Zenith as well. We do offer like a buy 1 month, get 2 months for free, so you can have like a full 90 days to really test and kind of learn everything and see how it can help to improve your trading. So that's something I recommend that you do. Now let's go back in and maybe check out a couple more of these templates here. Let me see if I can look at something else. I know we've done a lot of like equity things. Oh, And I'm just pulling up random templates here. So some of these might be linked. Well, I don't know what they're linked to. Let me actually go into this one down here. I think this will give us some better things. All right. Oh, options data. That's something that we haven't really looked at. So here are some of the option applications that are here. So you can see, I think someone, just set this up. You can see the test 1, 2, 3 buttons here, but this actually makes me want to look at the option watch. Option, have a space, here we go, option watch. You can pull this up. Now you can come in and see things. I guess I should probably type in a symbol. We'll put in Meta, and now I can see like options data on Meta inside of here as well. You can alter this too. You can look at, things around a certain percentage around the money, greater than or less than, or all the strike prices, whatever you kind of want there. You can see the Greeks in here, so you get like the delta and all of that as well. And then also when you're in here, you can come in and you can like kind of open up the specific ones as well. You can see it's populating it up here. And then I can open up a quote for that. You can also then go in and chart these inside of Metastock too. If you want to look at a chart for a specific like option chain, you can do that too. We also have options data. This is linked into Metastock as well, so you can do additional analysis in there too. I think there's one top dog. I'm trying to remember the name of one of these. I hadn't prepared to do this additional kind of preview here for you guys, but I didn't want to just leave you hanging. I know that our next speaker, he's actually up in just a few minutes here. He's in Australia, and the time zone difference there is pretty great. So I know that he woke up really, really, really early to be able to be here to present with us today. So I am pretty excited about that. But I'm hoping that I've showed you guys maybe a few cool little things that you might not have known that you had access to if you had a Metastock Real Time or Zenith. You can get just tons of different applications and things inside of here to help you further with your trading analytics. With all that kind of being said, and because there are just a few minutes until the trade over, let me go ahead and get this all closed down, and let's jump back into the PowerPoint here. Well, I'll just close it that way. We'll get Metastock opened up. All right, so yeah, as you've seen, all the presenters today, they have utilized Metastock for some of their charting or fundamental analysis needs. And Metastock does let you, scan the markets, test your different trading ideas. I tried to show a lot of that in my demonstration that I did earlier today inside of the Metastock side. We also have a forecaster that lets you see like potential future price movement of securities on a heat map, which is a very powerful tool. And you can set up like alerts and get commentary as well as signals. And one of my favorite features of Metastock is the expert commentary that we have, where we worked with a lot of like the presenters you saw today, as well as other professional traders and institutions and things like that, to incorporate in expert commentary from them onto your charts with our like expert advisor. So that's one of our favorite tools, my favorite tools as well. You can get all of that starting at just $75 a month, or if you own Metastock outright, the data gets as cheap as $39.95 a month. We even have some local data options too. Or Zenith, the service I was just showing you guys, that starts at just $110 a month if you want access to that FX package with delayed stocks and futures. If you guys were interested in taking advantage of any of the different offers that you saw today, or if you want to find a recording of today's session, then just visit us at metastock.com/summit-savings, and you can get access to all of those offers, as well as sign up for a trial. And okay, with all of that said, it looks like we do have Adrian in the room. Adrian, can you hear me? Are you able to come on? Hey, there, I can see you.
Hey, I'm here. How are you?
And I can hear you. Fantastic. Hey, I'm doing very well myself. It was quite chilly this morning here, 17 degrees Fahrenheit, but now it's getting a little bit warmed up. And yeah, I'm feeling good. I'm ready to kind of see what you have to share with us today. I was really excited to have you on. I also, Kelly Clement, when he saw that you were presenting, he came over to my desk and he's like, oh, I'm so excited to have Adrian speaking with us. So great to have you here.
Fantastic. Thank you so much for having me. I'm looking forward to it.
Yeah, great. Well, with that said, yeah, you are the last speaker today. So you have an hour, but if you go a little long or a little short, that's totally fine.
Okay.
We're all okay with it. And you know what I'll do here is I'll make you the presenter. So you should get a pop-up here in just a moment. And I will be hanging out in the background. So if you have questions or issues or anything, I can help you out. But I did just send that over.
Let me just, I can't see my screen. Can you see my screen yet?
Yep, I see Crack the Code, How Systematic Trading Unlocks Real Market Success.
Okay, you can see my slide change?
Yep, I saw that.
Fantastic, okay. All right, I'm good to go.
All right, perfect. So I'll get out of your hair, but I'll be here along with our marketing guy. So if you need anything, just holler. We do also have people watching on YouTube and in GoToWebinar. Do you want to hold questions until the end, or do you want me to come in if someone asks something, or how do you like to do it?
Look, if there's a question during, that's okay if it's really pertinent. Otherwise, I'll definitely have time for questions at the end, so that will probably make it a little bit of a smoother. But if people could put their questions in the chat as we go through, I think that'd be really great. I'll kind of keep a little bit of an eye on that, but maybe you can kind of feed me the questions at the end.
Okay, yeah, that sounds fantastic.
Okay.
All right, it's all you.
Good to go. All right, thanks, Bobby. All right, welcome everyone. As Bobby said, my name's Adrian Reed. I'm founder of Enlightened Stock Trading, and today we're talking about Crack the Code, How Systematic Trading Unlocks Real Market Success. And you've heard a lot already from various presenters today about, you know, indicators and systems and rules-based trading and processes. And I just want to bring some of that together and share with you some thoughts about why systematic trading, and I mean purely systematic trading, is possibly the very best and fastest way for you to master the markets. So let's get into it. Before I go any further, I just want to remind you that everything we talk about today is for general education purposes only. Please consider whether it's right for you before taking action. Alrighty, so do you want more confidence and control over your trading and better results in all market conditions? If that sounds like something you want, you need, give me a yes in the chat just so I know that we're all in the right place. If you don't want that, give me a no, that's cool too. I just want to understand where we're sort of up to and what everyone's looking for. So confidence and control over your trading and better results in all market conditions is what I'm going to show you how to get today, right? Good? Okay, great. Now here's the most important lesson, and I know we're well into the agenda here. You've been listening to a bunch of speakers, but if you take anything else away, this is the one thing that's the most important for you to take away, and that is learning requires energy. You've been listening to a lot of speakers, and I could sit here and I could show you 5,000 PowerPoint slides with 50 bullet points on each slide, and there might be a lot of dense information there, but you'll get absolutely nothing from it. But what I'm going to do today is I'm going to put in a whole bunch of energy to make it interesting and captivating for you, hopefully give you some interesting learning. But in return, I need you to give me some energy back so that you're engaged, so that the lessons actually go in. And just in case you're wondering, this is what energy looks like when you're learning on a webinar. Pretend we're in the same room, look at your monitor, sit up, lean forward, write notes, ask questions, and I guarantee you'll get so much more out of this presentation than you would if you just sat there passively. So can I have your commitment that you'll actually pay attention, write notes, and ask me questions, because asking questions is the path to trading success. I see it time and time again with my students, my mentor students. The ones who ask the most questions make the most progress. So I'm really hoping we get to the end of this presentation and we have a ton of questions to answer. Sound good? Great. Okay, cool. Let's keep moving. So in the chat, I want to know where you're from. I love to know where my audience is from. So just type the city that you're in right now. What city are you in? Just so I can have a bit of a view about our global geography, where everyone is. And that'll also help me kind of tailor a few things later on. So in the chat, type the city that you're in, let me know. And here are my goals for you today. This is what I want to achieve over the next 60 minutes or so. And it might be a little less, might be a little more, depends on how many questions we get. First of all, I want to highlight the main challenges that traders face. And I'm going to show you how to resolve them fast. I'm not talking about years of learning and study. I'm talking about fast, in days, weeks, or at the most months. Second thing I'm going to do is I'm going to give you a real trading system, one I actually trade and I have been trading for quite some time. I'm going to show you all of the rules, exactly how it works, exactly why it works, so that you can go and adopt that system for yourself. How's that sound? Good? Also, I'm going to show you the benefits of self-directed systematic trading, as in you take the system, you follow the system, you trade the system. Why is that so powerful? And then I'm going to show you a game-changing process that will save you hours each day, improve your results, reduce your stress, and basically make you a better trader fast. So how does that sound for the next 60 minutes? If I achieve that in the next 60 minutes, would that be good progress? Give me a thumbs up. I know we're not in the same room, but that's okay. You can still give me a thumbs up. Good. So that's what I'm going to achieve in the next 60 minutes for you. Alrighty. So since I'm going to be talking to you for a little while, I thought it might be worthwhile sharing a little bit about my background, just so you know who I am, why I'm talking to you, and why maybe you should listen. Would that be okay? Okay. So my name's Adrian Reed, founder of Enlightened Stock Trading. I've been trading stocks profitably for my own account privately for over 20 years, well over 20 years. As a result of that trading, I paid off all my debts. I built a 7-figure trading account, bought a couple of houses out of my trading account. And in 2012, I escaped the corporate world based on nothing but my trading profits. In 2012, I worked 12 to 14 hours a day in my day job, and I was stressed. I went gray. I lost my hair. Basically, life was terrible, and I was in the office maybe 6 days a week on average, I would say. And at the end of the year, come September, I was just at the end of my tether. And I had made $230,000 in my corporate job that year. And I looked at my job and my life that my job was giving me, and I looked at my trading, and my trading had made more than $230,000 that year in profits. And I thought, okay, time to give the job up and trade full time. So I did. Fast forward to today, now I coach and mentor hundreds of traders from all over the world to profitability every year. My trading is fully automated across both stocks and crypto. And this systematic and automated trading process has allowed me to spend all of 2019 traveling around the world with my family. We took the kids out of school and we went traveling. We spent 3 months in the US, 3 months in Europe, and the rest of the year in Asia. It was fantastic. At the end of the year, the kids said, okay, we've been to 7 different schools. It's time to settle down in one place and stay in one place until we finish school. So we did. We're now in Australia on the East Coast, 4 hours drive north of Sydney in a little coastal town. So that's where we are, and that's us. So there's a little bit about my background and my results. I hope that helps. Happy to take any questions about that later on. Okay, before I go any further, I want to deal with the elephant in the room because you're probably all wondering a couple of questions that are on your mind. In fact, there's 2 elephants. The first elephant is, Adrian, if you're so successful, why are you doing this? Why are you teaching? Why do you have Enlightened Stock Trading to teach traders? Why do you need to do that instead of just trading for a living? And the second elephant is, most likely, Adrian, are you going to try and sell me something? And I don't want to disappoint you. And I figured I'd just answer these 2 questions right up front, because otherwise you're not going to take in the lessons that I'm going to share, because you're going to be too busy wondering whether or not these things are going to happen and why I'm here. So first of all, elephant 1, Adrian, if you're so successful, why are you doing this? And this is a really interesting sort of question, because almost everyone asks. And what I experienced in 2012 in September, I left the corporate world forever. And I went home to continue my trading. I didn't change anything about my trading. I just continued what I was doing. And after 6 months of trading from home, I was bored, lonely, and depressed. Why was I bored, lonely, and depressed? Because I didn't know any other traders in my life. I was the only one. I had no one to talk to about trading. All my friends were at work. Most of my friends were investment bankers and strategy consultants. They worked like 500 hours a day, 7 days a week. And so really, I had very little human interaction. And look, I'm a bit of an introvert. You might not be able to tell it from the presentation, but I am. But I do need some human contact, and I do like to talk about what I love, and that is trading. And so I started teaching traders because people were asking me, hey, how did you manage to quit your job? How did you manage to trade full time for a living? Can you show me how to do that? And so I started kind of helping people and showing them how to trade and so on. And I would spend, I was at home and everyone else was in the city, so I would get the bus into the city. I'd meet people for coffee and talk to them about trading and show them what I was doing and how they could do it and help fix their problems or find their challenges and fix them. But when I was doing that at the beginning, I was just doing it, for fun, pro bono, for free and as a favor for people. But I would spend an hour on the bus to go into the city to meet people, and they wouldn't turn up because they had, a last minute meeting pop up. And that was really frustrating for me. It was a waste of time. And I realized that the reason that they weren't turning up on a regular basis is not because they weren't getting value, it's because they didn't have any skin in the game. And so at that point, I started to, I converted to teaching professionally. So I created a course. I started requiring the students to invest in their education, obviously taking payment and that sort of thing. And all of a sudden, the teaching results skyrocketed. I was getting students who would go live, who would make money and so on. And it was, it really just went on from there. And now Enlightened Stock Trading is really a passion project. I love what I do, and I love speaking with traders and helping them. It's about building the community that I didn't have when I started trading. As I said, I was at home trading on my own. I didn't know any other traders, and that was just terrible. I was depressed, I was lonely, and frankly, I was a pain in the backside to my wife. She didn't want to hear about it. She said, look, go find some traders, and so I did. And I also feel like there's a responsibility. If you know something, if you know how to succeed, it's your responsibility to share it. When I was at various personal development events and investment events, I would have people who come up to me after they found out what I did in tears, grown men in tears talking about how they'd lost their life savings because they'd done the wrong thing, they took too much risk, they had too much leverage, they'd blown up their account again. And I felt it was my responsibility to share how to avoid that and how to actually succeed. Of course, there's also a business element to this. Enlightened stock trading is a business. It's great diversification for me. I got income from my stock trading. I've income from my crypto trading. I've got income from real estate investing, and I've got income from business. And I think more diversification is better than less. Don't you? Of course, right? And then finally, it's legacy. Because if I never taught anyone and I died and left this earth, all of the knowledge, all of the research disappears with me. So I feel like putting this out there and capturing it, documenting it in a great format allows the learning to live on, which I think is really powerful. That's why I teach. What about, are you going to sell me something? And look, yes, I do have an offer, but I don't want you to worry about that because I'm not going to ask for any money at all today. What I've got for you is 100% free for 30 days if you decide to take me up on it. So all I need you to do now is just sit back and actually listen to the lessons that I'm going to share about why systematic trading is so powerful. So would that be okay? Awesome. Alrighty. So in the chat, I want to know, what is your trading like now? Give me 3 words to describe your trading. Let me know what they would be. I just, is it frustrating, volatile, variable? Is it consistent, confident, and empowered? What are your 3 words? Whatever they are, I want you to think about them and write them down, either in the chat or in your notebook. Because if you could write down what your trading's like now, and then write down what you want your trading to be like, then you've got a goal and you've got a path that you can start to follow. My trading is low risk, low effort, and high reward. So they're my kind of 3 phrases, if you like. I know there's a couple of words in there, but they're my 3 phrases because fully automated systematic trading, that's exactly what it's like. So let's talk about the challenges that most traders face. There's many challenges, and I've got 25 challenges that I've written down here. And what I'd like you to do is just look down this list real quick and just take a mental note of how many of these challenges you've suffered from. Stress, I certainly Suffered from a lot of that at the beginning, conflicting signals. I was confused about what methods worked. I didn't diversify properly. I mean, I basically did all of these at the beginning of my trading journey. So how many of them are relevant to you right now? I'd be willing to bet that for most of you, it's more than 1 or 2 of these. There's going to be 5, 10, 15 of these challenges that you're facing right now. And what I want to do is show you how to eliminate all of these challenges with one simple move. How does that sound? Good? Okay, great. Let me show you how to do it. Before I do that, we just need to step back and explain why trading is so hard. So here's the thing. When you're making trading decisions, we typically take multiple inputs. We see the price movements in the market. We see news flow. We see analyst recommendations. We get tips from friends. We get tips from brokers. We get tips from newsletters. We get our movements in our current portfolio. And we have all of the stuff going on in our personal life. We have all of these inputs coming into our mind all of the time. Then what happens is we process these inputs through many beliefs and cognitive biases that we've got in our head. And we have all of these rules and beliefs and biases in our head that we're not aware of. And then we use this to make decisions and take action. And we wonder why we generate inconsistent actions and results. Multiple inputs, lots of different beliefs and biases generate inconsistent results. It's hard to avoid because we're human. Now, there are literally dozens and dozens of cognitive biases. But a cognitive bias is a shortcut in our head, the way our brain makes a decision or thinks about things to save us energy, right? There are dozens of these that we know about and probably many that we don't know about. Now, I'm not going to go through all of these, but these are just some that I've researched that I know affect traders. And there's the thing is we don't know which of these we have. But because we have all of these cognitive biases, it makes it very difficult for us to succeed because these are all shortcuts in thinking that make us make decisions that might not be financially profitable. Now, humans just don't make very good traders naturally as a result of all of this. It's because of our psychology. And you've probably heard that trading, your psychology is one of the most important factors in your trading success. And it's absolutely true because we all have so much junk going on in our heads, so many beliefs, so much past scarring, so many hopes, fears, and dreams that our decisions get tainted by all of that, and we don't make good, profitable, consistent decisions. There's actually 2 ways to resolve this. I've got a solution, actually 2 solutions for you. The first is the slow way. And the slow, hard way is to do years of psychological work. Basically work on processing, clearing, and working on your psychology to improve it. So you can take a small number of inputs, process them through a clear psychology, and take consistent action and get consistent results. Now, I can't emphasize enough how much effort this takes because it doesn't matter how much work you've done, there's always more to do. And I've done many, many clearing and psychology sessions on myself, and it doesn't matter what I do, there's always more things that come up. So this slow way takes years and lots of effort. So what's the easy way, the fast way? The faster, well, it's quick and easier. It still takes some work. But what you want to do is bypass the psychology problems by systemizing your trading. Instead of processing and making decisions in your mind through all of those psychology issues, what you want to do is remove all of that, just take the price data, overlay 100% pure objective rules. If A and B and C happen, you buy. If D or E happen, you sell. Objective rules that aren't subject to your psychology. And then once you do that, assuming those rules are actually profitable, which we'll talk about, you can start to generate consistent results, regardless of what your psychology is like. So the answer is objective rules. Rules that make the decision to buy or sell so that your psychology doesn't get in the way. Now, there's a bit of terminology. Objective rules basically means the same thing as trading strategy, basically means the same thing as trading system, basically means the same thing as trading algo. So all of those are just ways of describing a complete set of rules that tells you exactly when to enter and exactly when to exit the markets. So a trading system defines every action that you want to take in the market. This is the way that you eliminate subjectivity, you eliminate judgment, you eliminate your psychology from your day-to-day trading decisions. So what is involved in a trading decision? What do we have? We've got the setup, which are the conditions under which you're willing to look for a trade. We've got the entry, which is the precise moment, the precise conditions under which you'd buy or sell short that instrument. We've got the initial stop loss, which is where you're going to get out if you're wrong to protect your capital. We've got the exit rules, which will get you out hopefully with a profit. And then wrapped around all of that, we've got the portfolio risk management and position sizing rules. This is a complete system. If you've got rules that define each of these components, then you don't need to think, analyze, or worry about what's happening in the market. You just look to the rules and you say, is this a buy? Is this a sell? And it's objective. And the great thing about this, if I have these rules and I give them to you, now you have these rules, we generate exactly the same trades. And this is how we get consistency. You wanted consistency as part of your trading goals, right? Consistent results, consistent process, consistent confidence. This is how we get consistency. We have rules that aren't subject to interpretation. And when we do this, all of a sudden trading becomes a whole lot easier and more profitable. So how does this change the game for us? Well, there's a couple of things. Systematic trading is a process, or gives us a process, which is light years ahead of what most people are doing. Here's the old way to make trading decisions. Typically, we update our data and then we run our scans for our favorite setups. We get a big long list of stocks or instruments that we're potentially interested in trading. And then we check all of the charts and we're looking for support and resistance and what's going on and what happened today versus yesterday and highs and lows. And we're looking at trend lines and we're drawing those on the charts and we're trying to interpret where the market is going and forecasting that. And then we're putting indicators on the charts, looking for confirming indicators, and then looking at announcements and looking at news to see if we can get a consistent view of what this stock is going to do. And then we decide on our entry points and our stops, and then we calculate the position size based on sentiment, based on our confidence, based on how much money we've got, based on how much money we lost yesterday. And then we watch the markets at a lower time frame, because the lower time frame is always important. That's what people say, right? We watch the market and we're trying to find the right entry point. And then finally we enter the trade, and then we watch intraday and we review the chart each night and we look for exits and we stress about our position when we go to sleep. We check news and announcements to make sure nothing's changed. We look for indicators that tell us that something negative is going to happen. Then finally we get an exit and we exit the trade and we sit back and we wonder why trading is just so damn stressful, because every single step of the way we're putting subjective judgment into what's happening in the market. This is why people can't be successful consistently. Yes, you probably get some wins, here and there, but it feels a little bit random and it's certainly not consistent, right? We get strings of wins. We feel like we're in tune with the market, and then something happens and we get out of tune with the market. All of a sudden, we're in a deep drawdown again. That's the old way of trading. The new way, the systematic way, is far smoother and easier. Here's what we do. We update our data. We run the backtest or scan to generate our buy and sell signals and size the trades. We place the trades, and then we close the computer. Job done. This is a couple of minutes a day exercise and dramatically less risk, stress, emotion, inconsistency. And if you do it this way, you can even automate it, because when it's purely process driven and it doesn't require subjective judgment, you can program it into the computer and get the computer to run the trades for you, which is what I've done. I have an automated portfolio across Australian stocks, US stocks, Canadian stocks, Hong Kong stocks, and crypto. And the computer does all of the trading for me, and my job is to do the monitoring. More about that later in the presentation. So would you agree that the new way, the systematic way of trading, is dramatically less stressful, dramatically more consistent, and dramatically faster than the old way? Yes? Great. Okay, so what are the benefits of systematic trading for you? There's a couple of things that it really does which are game-changing for you personally and for your trading. First thing, it shortens your learning curve. because I can teach you a system, and I'm going to teach you one today, and then you can take that system and apply it right away and get exactly the same trades as me. That means you learn the system, you apply it, you get the same results. You don't need 20 years of experience to do this. Whereas with a discretionary approach or a technical analysis approach, you've got to learn how to draw the trend lines, you've got to learn how to interpret the indicators, you've got to hopefully hone your judgment so that you can start to make profitable decisions. Whereas when you're trading systematic, all of that is out the window. You don't need it. So the learning curve is much, much shorter. We're talking weeks and months, not years. Secondly, it eliminates emotional decision making. I tried discretionary trading at the beginning of my journey. I spent 3 years trying to get profitable right at the beginning of my journey. And let me tell you, discretionary based trading, subjective trading, technical analysis, all the typical approaches people use is really tough. And you're probably finding that. Having a system eliminates the emotional decision making. I would wake up some mornings feeling optimistic and I would want to go long and go big. I'd wake up some mornings feeling pessimistic and fearful, and I'd want to go short or not trade or go trade small. And those were just emotional decisions based on my personal life and what I saw, what I read in the press. That's not good trading. That's not profitable financial decision making. It's just purely emotions. And it's hard to avoid that as a human. Now, systematic trading also gives consistent, repeatable results because you're making the same decisions the same way every single day. It's repeatable. The great thing about being repeatable is like this, is it doesn't take much time. You can run a scan or a backtest in your trading software. Metastock runs a scan of the entire market very, very quickly, just a couple of minutes to get all of your signals and setups. And it eliminates most of the analysis if you have a complete system. It also allows you to build confidence. I'm going to show you a great example of this later on in the presentation. We can build confidence in our rules by backtesting them. You saw a little bit about the Metastock backtester. There's other backtesting platforms in the market as well. But backtesting means you take your rules, you apply them to past data, you see how they performed. You can also change the rules, optimize the rules, test additional rules, and see how they work. That allows you to build confidence and follow your rules more consistently. It also allows you to improve diversification almost effortlessly. The extra effort of running 2 systems instead of just one is very, very small. And in fact, I run 20 odd systems in my personal account, 20 odd systems in my retirement account, and about the same number of systems in crypto. So, and that takes still very little time each day. If you trade systematically, it doesn't take much time. You can diversify much more easily. You don't need to look at 1,000 charts. Also improves your profitability because you reduce mistakes and allows you to evaluate whether your emotional impulses are helpful. I'm going to show you a great example of this towards the end of this presentation. So I want to cut to the chase now, and I want to share with you a real trading system. And this trading system is called QBounce. It's one I actually have trading live in my account. And I really love this because it's super simple, but also very, very profitable and consistent. So here's the overview. QBounce is a single instrument mean reversion strategy. It trades one highly liquid ETF listed on the US market. It enters and exits with a limit on close order, which is easy to place, has minimal slippage. Total amount of work it takes each day is less than 5 minutes. You can trade either TQQQ or QQQ. I use the leverage version, TQQQ, and the rules are very simple. I'm going to share them with you in their entirety now. Here's an ideal move. Now, it's a mean reversion strategy, right? And the way mean reversion strategies work is you find a stock or an instrument which is kind of trending, then it gets some bad news. We're not looking for the news, we're looking for the impact of the news, which is several big down days in a row. When the ETF has several big down days in a row, we're going to buy it, and then we're looking for a small uptick. So you can see here on the chart, which I've taken out of Metastock, the TQQQ made a high, then something happened, I don't know what it was, and frankly, I don't care, but it had a couple of big down days on this chart here. At this point, we bought, and then it ranged a little bit, and then we got an exit signal, exit a couple of days later. This doesn't look like much because it's only a very small rally, but this is enough to get a couple of % profit, which done over and over and over again compounds into very significant results. So what are the rules that generate trades like this? Let's go through our system framework, and I'll show you what each part of the system looks like. Firstly, setup and entry conditions. What we're looking for is yesterday's close was lower than the close before for 2 or more bars. So 2 down closes in a row. That's the first step. Second step, we're gonna, if the previous 2 closes were down, we're gonna enter today with a limit on close order if the close is lower than the previous day's low. So we're looking for another big burst down. It's got to be, the close today has to be lower than the previous close. And you can achieve that by placing a limit on close order. And when just before the market closes, that limit on close will go live. And if the price is lower than yesterday's low, then you'll be into the trade, you'll buy. Once you're in, we've got a stop loss. This is just a disaster stop. We're going to exit if the price falls 40% from the entry point from the entry price at any point during the trade. Now 40% is big, it's a very wide stop. Frankly, I never want it to be hit. It's just there for a disaster in case something really crazy happens to get me out. Now, when do we get out with a profit? The first sell rule is we exit the trade at the close if the close is higher than the previous day's high. So it's a bit like the entry rule, but the opposite. So we're going to place a limit on close to sell above the previous day's high for each day we're in the trade. That way, if the close is up, we're going to get out right on the close and we're going to snatch that profit. How do we manage risk? Okay, there's no leverage. TQQQ is already leveraged, so we're not going to leverage this this system. You could, but I wouldn't recommend it because you can end up with a very volatile equity curve. You're going to put 100% of the capital allocated to the system into each trade. However, and please listen to this, you only put a small percentage of your portfolio into this system. You never want to put 100% of your capital on one trade. You never want to put even 50% or 25% or probably even 10% of your capital onto one trade. We're going to diversify broadly across multiple systems. This is one of many systems that you're ultimately going to want in your portfolio. So you put a small percentage of your portfolio into the system, and then all of that capital goes into each trade because we're only trading one instrument. So here are the rules. Dead simple. You could write them on the back of an envelope. Enter at the close if it was down 2 closes in a row and today's close is lower than the previous low. 40% stop loss. Sell if the close is higher than the previous day's high. No leverage. 100% of the allocated capital to this system goes into each trade. Allocate only a small percentage of your portfolio to this system. And then there's no ranking or anything like that because there's only one possible system signal each day. This is the whole set of rules. Now this is dead simple. You can code this in Metastock or any other backtesting platform in just a couple of lines of code, which is brilliant, which means you can then backtest it. Now before I show you the results, what I want to ask you is why do you think these trading rules are profitable? If you're listening, if you've got your trading journal, hopefully you're writing notes. I want you to write down why you think they're profitable real quick. Now, there's a couple of reasons. I want to go through these with you now. First one, markets overreact to bad news and subsequently correct back towards the mean. This allows us to capture a profit by buying during panic and selling during relief. If the markets are going up and something bad happens, something scary, the markets overreact to the downside. If we can buy then in the heat of the panic, then when the panic subsides, the market usually rallies a little bit, giving us a profitable trade. The historical price data for the Qs or TQQQ show consistent patterns of mean reversion. This ensures that a simple mean reversion system has an edge. This has been happening for years, and I'll show you the results. These are highly liquid ETFs, so we can get in and get out with very minimal slippage. They've got tight bid-ask spreads, and that allows us to profit from a low average profit per trade system. The diversified nature of this ETF reduces the risk and impact of individual stock volatility. If you buy any of the stocks in the NASDAQ 100, they're quite volatile, but the ETF, which is the amalgamation or the kind of combination of all of those stocks, is much more stable and much smoother in its movements, which makes mean reversion more predictable and reliable. The tech sector is typically mean reverting. It exhibits strong trends, sudden reactions, and then reactions. So that makes mean reversion quite profitable. This system enters with a limit on close order. Now this is cool. If you've ever looked at the S&P chart, S&P 500 chart, zoom way out on the S&P 500 chart and look at over 30, 50 years, and you'll see that it moves upwards. And so that's great. That shows you that buying and holding has an edge. However, what you might not realize is that most of that upward drift actually happens outside of normal market hours. If you take the S&P 500 daily bars and you calculate the movement from open to close, that's during market hours, and you calculate the movement from close to open, which is outside market hours, and you add those up, what you find is that a big chunk of the upward drift in the S&P happens outside of market hours. There's an edge in holding overnight. And so with this system, because we're entering limit on close and we're exiting during trading hours, that first day we get to take advantage of the overnight edge. Now, day traders who are in and out within one day miss out on the overnight edge, obviously, typically because they don't want to take on overnight risk. But I'm going to show you that doing this consistently actually rewards you very, very handsomely. So if we run the, if we put these rules into the backtester in Metastock, and we run the backtest over the entire history of the TQQQ, this is what we get. You can see that the equity grows very consistently. Yeah, of course, there's drawdowns. Every strategy has drawdowns, but over time it grows pretty consistently. You know, the equity curve is nice upward sloping hockey stick compounding growth, which is exactly what we want to see in our portfolio. The drawdown profile, now if you haven't heard of drawdown before, drawdown is just the dips in your account, which are inevitable as a trader. You don't just make new highs every single day. You go through, you know, winning periods and losing periods, and your account kind of goes up and down in an ebb and flow sort of fashion. The drawdown profile is shown here, and you can see the maximum drawdown is about 30%, just a little over 30% in this chart, and it's a very short-lived drawdown just here. But most of the time, it's pretty close to new all-time highs, and it has a bit of a dip, and close to all-time highs again. So this is the profile of what you would have experienced in your account had you always followed this system. So what are the performance stats? Compound annual return, 21%. Average exposure, 13%. Now this means the system is only in the market 13% of the time. So let me ask you this. Would you like to make 21% compound annual return while only being invested 13% of days? Does that sound good? Do you think maybe you could do something else with the money on the days that you're not invested with this system and boost your returns even more? Absolutely, and I'll show you how to do that shortly. Risk-adjusted return, which is the return per unit of time you're in the market, 162%. Average profit per trade, 2.6. 3 bars held on average. 78% of the trades are winners. Max drawdown, there you go, 32%. And the compound return divided by max drawdown is 0.65. So the equity curve is fairly smooth. And for such a very simple system, these stats are quite incredible. Wouldn't you agree? Yeah. So high return, very consistent, very low effort, very simple, and also not invested in the market all that much, only 13% of the time. So this is my favorite type of system, dead simple, tests consistently over time, and really strong performance stats. Now, one of the things about systematic trading is you have to know what you're in for. You know, if you have an understanding of what could happen, what behavior is likely to happen, it becomes much easier to follow the systems. Here on this chart, I've already showed you the performance stats that you would have got in the past. Now, of course, the past is not a guarantee of exactly what the future is going to be. It's just indicative, hopefully. But we also need to know more than just the performance stats. We need to know what it's going to feel like to trade this system, right? If we know what it feels like, then when the bad things happen, we're more likely to have the confidence to follow it through. If we know what to expect, we're more likely to have the confidence to follow it through. And this is where deep backtesting is just so powerful. So if you look at this, the percentage of days on this equity curve, so this equity curve here, which is what the system would have done had you always followed this system, 7.7% of those days are up compared to the previous day. So that means on only almost 8 days out of 100, you're going to be up compared to yesterday. On 9 days out of 100, 8.9%, you're going to be down compared to yesterday, and 83% of days you're going to be flat compared to yesterday. Now, if you didn't know that before launching into the system, because if you hadn't done the backtesting, then you would be sitting there going, well, when am I going to make money? When am I going to, I haven't had an update for weeks, right? And if you look at this equity curve, you'll see there's lots of little flat spots and there's quite a few down days. And if you're not prepared for that mentally, it's going to be very hard to stick to the system. But backtesting allows us to prepare for what's going to happen, what's likely to happen. This is why systematic trading is so powerful. If you use discretionary technical analysis in your trading, you have no idea what's going to happen in your account. Hopefully you're going to be profitable, but you don't know how many days in a row you're going to be up, how many days in a row you're going to be down. You don't know how deep your drawdown could be. You don't know anything about the profile of what your trading results could be. But with systematic trading, you do, and that is just so powerful. So we know that we're going to have a lot of flat days. We know that we're not going to spend a whole lot of time at all-time equity highs. We know that we're only going to have a maximum of about 4 up days in a row before either a flat day or a down day. We know that we could have 8 down days in a row. That's what happened historically. It could even be a bit more than that. And we know that we could be flat for up to 108 days between signals. If we know all of that, do you think it's going to be easier to follow the system? Just knowing that we're going to have to wait for a period of time before we get a signal, before we get an update. Of course it will, because you know what to expect. And this is the power of systematic trading. We can see what happened in the past, analyze it, and prepare ourselves for what's going to happen in the future, which will eliminate a lot of the emotional challenges we face. It's also useful to know the distribution of trade outcomes. So I've run the backtest, and I've taken all of those list of trades and I've dumped them into Excel and produced a frequency distribution chart of what the trades looked like, the winners and losers. And you can see here, this system generates lots of small winning trades and infrequent larger losing trades. Now, if you know that this is the profile of trades that's likely to be generated from the system, if you've got a 15% loss, you won't freak out because it's perfectly normal. But if you didn't know this and you put too much leverage into the system, or you bet too much on each individual trade and you've got a 15% loss, you could be caught unawares. And again, for discretionary traders, you don't know what the full distribution of trade outcomes could be. But when you're systematic and you backtest your system deeply and you look at all of the trades and you look at the distribution of them, you can prepare yourself for what that distribution looks like and make sure that you're comfortable with the dollar loss that this worst case losing trade could generate given your position size. So we need to prepare ourselves so we know what might happen in our account. You can also look at the duration and profitability. And what you can see here on the horizontal axis, I've got trade profit from minus 25% to 0 up to plus 20%. And then the duration from 0 days up to 12 days. And you can see that most of the trades are small winners that happen very quickly. So we know we're going to be in and out for the vast majority of trades very quickly. And then occasionally there's going to be a few losing trades that drag on and they lose a bit of money for us. But on average, we're only holding for 3 bars. So we know a lot about what's going to happen when we follow these rules just by backtesting it. And I want to encourage you, if you're not systematic already, then consider whether maybe you should be, so that you can get better insight into exactly what could happen in your account. Okay, you can look at the monthly return profiles. Again, we want to know what's normal. What's normal for this portfolio, for this system? We can see there's some great months, plus 15%, plus 12, almost 12%, plus 11.4, plus 9, plus 14.8, plus 18.2, plus 12.2. There's some great months in there. There's also a lot of flat months where you take no trades with this system, 0%, 0%, 0%, 0%. And then there's a few down months. You know, minus 20.4% is the worst down month in the whole backtest of this strategy. And that doesn't sound great, right? But in the context of a 30-year backtest, or 20-year backtest, whatever, that generates over 20% return per year on average, you know, if we know that there's going to be some volatility in these results, we can continue trading through that. We can follow the rules, knowing that the system will come good and generate more profits in the future because the drawdowns are all short-lived and temporary. So this is the power of systematic trading, is knowledge of how the system behaves. And in the backtester, I've just given you a snapshot here of the stats you get in the Metastock backtester. And typically when I'm backtesting, I'll also dump the trades into Excel and do a whole bunch of more analysis like I've showed you of, you know, winning days, winning trades, losing trades, distributions, and so on. You want to do that to maximize your understanding of what's likely to happen when you follow these rules. And that gives you the confidence to keep following them no matter what happens. So while we're talking about confidence, I want to give you a real simple example. And this is probably what a lot of you thought when I started to share the rules. And I talked about the 40% wide stop loss. The instant reaction is, oh my God, 40%, that's way too wide. I don't want that much risk. I want a tighter stop loss so I get smaller losses so I can make more money, right? So you have an emotional reaction to the rules that get presented with you. So what do you do with that? Do you just tighten your stop and trade because that's the right thing to do? No. You've got to do this analysis to identify whether the emotional reaction you had is actually profitable. So first of all, you're going to backtest the system as I've published it with the 40% stop loss. And then you think, all right, let's compare it to a 5% stop loss because I don't want to risk much money. I don't want to lose that much money. I want a 5% stop loss. That's much less risk, right? So you backtest it then with a 5% stop loss and you realize, hang on a minute, with a wide stop loss, it makes heaps more money than with a tight stop loss. Why is that? I'm supposed to be taking less risk by having a tight stop, right? Well, when you have a tight stop, it gets hit more often. If it gets hit more often, you have more losing trades. If you have more losing trades, your equity curve doesn't move as smoothly. If it doesn't move as smoothly, it doesn't compound as well. If it doesn't compound as well, you don't make as much money. So instead of having emotional reactions and acting on them, we want to have these emotional reactions and test them to evaluate whether or not it's real. So this is where your journal becomes really, really powerful. If you're not journaling the feelings and the observations that you have in the market, you're losing out on huge value, because in your journal are little snippets of little bits of gold that you can test using the backtester to evaluate whether or not they would help or hurt your trading. And just a little hint, most of the emotional impulses you have for your trading are going to destroy value. They are. They're going to lose you money because humans, as we said right at the beginning of this presentation, are not good traders naturally. But every now and then, you're going to have an observation or an emotional reaction which is going to generate you more profit. I had one very early in my trading career. I observed that I was nervous when I was taking trades in volatile stocks for my trend following system. I have a long-term trend following system and I've been trading for many, many years. And there were some trades in stocks that were very volatile and they moved around a lot from day to day. They had overnight gaps and they just made me nervous. And I thought maybe this system will be better and I'll sleep better at night if I just eliminated these volatile stocks. And so I added a volatility filter that required the average true range divided by the closing price to be less than a certain amount, less than a certain percent. So it filtered out all the high volatility stocks and it kept all the low volatility stocks. Now you might think that sounds like a bad idea because volatility means movement means profit, but for trend following, it turns out that low volatility is actually way better. So I added this filter, the profitability of the system improved massively, and as a result, my compounded profits over the next many years is hundreds of thousands of dollars more than it would have been without that rule. And the only reason I found that extra rule that made more money was because I was journaling and I wrote down the observation, the fear that I had, and then I tested it exactly like you see on the screen here. Now that rule works for a certain type of system. It doesn't work for other types of systems. So it works for trend following. It doesn't work for mean reversion. In fact, the opposite is true for mean reversion. You want to filter for high volatility stocks. And this stop loss example on the screen is a really great example. Most people don't want a wide stop, but by having a wide stop, it doesn't get hit very often. Sure, when it does get hit, you lose more money, but it doesn't happen that much. And the system compounds much more smoothly. So we're going to test those emotions objectively using the backtester rather than just acting on them and assuming that our idea is sensible. Because frankly, most of our human ideas are not sensible. They don't make money, they destroy value. So when you do this, you go, oh, okay, I'll just trade this system as is with the wider stop loss because I'll make more money. Make sense? Great. Okay, so finally, you can build confidence because every little thing that you worry about, you can translate into a rule and test it. And that then either tells you you're right or tells you you're wrong, gives you the confidence, so you can just follow the rules. This is how you get consistent, confident, profitable trading. Have a system, test all your emotional reactions to that system, to those rules, to those trades, and that allows you to eliminate all of the fears and concerns because you've addressed them objectively with data, and you can follow the system with confidence, knowing that it works. So the secret to trading consistently, no matter what the market is doing, is about having, it's not just about having one system. This is one system. You can see it makes money over time, but there are periods of time where it doesn't make money. So how do you make money no matter what? Well, what you want to ask yourself is, what could the market do? What could the market do next? I've got this framework called the market system map. And there's basically 3 types of markets. There's bull markets, sideways markets, and bear markets. Would you agree? Of course, it can only go up, sideways, or down. Now, within those 3 up, sideways, and down markets, the trend can continue in that direction. It can continue up, can continue sideways, or it can continue down. There can be a temporary shock against that trend, or it can change trend. So 3 by 3 gives us 9 possible combinations of what could happen in the market next. Now, the secret to making money consistently is having more than one set of rules and having those like this, and having those rules that make money in different market conditions. So what I do is I construct a portfolio of many, many systems. On this chart here, I've got 57 systems. And these are all different strategies, different markets, different timeframes. And you can see the backtest results of how they make money over time. Some of them make money together, some of them make money at different times. When some of them are losing, others are winning. This is the secret to consistent long-term profitable trading, is a diversified portfolio of systems. So we start by sourcing a whole bunch of systems, and then we combine them together strategically with different capital allocations to maximize our expected return. So here you can see my portfolio allocation spreadsheet. This is something that the students in the Trader Success System get. And you run the back test, you generate the portfolio, the equity curve for each of the different systems, and you combine them together into the capital allocation spreadsheet with different weightings. And by varying the weightings, you can improve the return and the drawdown profile of your equity curve. So here we've got all of the different systems listed. We've got all the different capital allocations. Now here is the combined equity curve that you would have achieved with that capital allocation. And what we do is we vary these capital allocations and we find the combination that gives us the results that best meet our objectives. This is the secret. This is the hedge fund secret to consistent, profitable, systematic trading. If you look at all of the systematic hedge funds, this is what they're doing. They have a massively diversified portfolio of systems. They trade many systems with their money with a little allocation to each system, and that generates the smooth returns over time. Now, depending on how much money you've got, that will determine how far you can diversify. If you've got a small amount of money, you might be trading 3 or 4 systems. If you've got $100,000 or more, you might be trading 5, 6, 10 systems, and above that, 10, 20 or more systems. But the secret to consistent, profitable trading is a portfolio of systems that make money in different market conditions with a small allocation to each system. That way, you've got one portfolio with many systems. Each system doesn't matter that much. And then each system might have many trades, and each trade matters not that much. So we can be much more consistent, much less emotional about our trading decisions, because every single buy and sell doesn't mean much in the context of our whole portfolio. We're so diversified. We've got different systems for different markets, for different time frames, different directions. We're so diversified that each individual trading decision basically means very little. So we can just follow the rules without losing sleep at night. This is the systematic trader's secret edge. So how can you implement all of this in just 10 minutes a day? Because you probably look at that and go, wow, that looks like a lot of work. but in fact, it's really not. It can be done very, very quickly. So the first thing you've got to do to implement all of this in just 10 minutes a day is eliminate all discretionary trading decisions. Everything needs to be 100% systematic. Objective rules: if A and B and C happens, you buy. If D or E happens, you sell. It's objective rules that you don't have to think about. The software can just tell you that's a buy, that's a sell. You don't have to judge whether or not it's a buy or a sell. Second thing, buy or build trading systems that work. This says trading system. You can start with one, obviously, but I prefer a portfolio of systems. Use a backtesting software to build historical data to build confidence in those systems. Test all of your fears. Oh, what if I use a tighter stop loss? What if I use a long stop loss? Maybe I should put a profit target in. Maybe I should take profits so that I don't let it losing, so that I can bank a winning trade. Maybe I should move my stop up to break even so that I don't turn a winner into a loser. All of these ideas you test so that you get all of your fears and concerns out. You evaluate them objectively. You know exactly what to expect from the system. That way you can just follow it with confidence because you've tested all your concerns in advance. Step 4 is you find your signals using the Explorer or backtesting, depending on which software you're using. In Metastock, you would just use the Explorer in the Power Console. It takes about 30 seconds per system to generate your signals, and then you place the trades with your broker. Each system only takes a couple of minutes to run. So you've eliminated the vast majority of your work. You're making decisions consistently the same way each day. And you can diversify massively because it saves you so much time and it's so easy to run multiple systems. So what do you do next? What do you do from here? There's a journey. It's the Enlightened Stock Trader journey. There's 5 stages. Launch your systematic trading journey by going live with a trading system that you understand. Stabilize your journey by learning how to backtest and evaluate your systems deeply. Diversify by adding more systems to your portfolio. Maybe automate, stage 4, if you're interested in automation, and then stage 5, mastery, which is building a bigger and bigger portfolio and going deeper and deeper into the analytics. This is the journey that I take my students on through the Enlightened Stock Trader journey. So that's the end of the presentation. What I want to do is, if it's okay with you, share how you can get from launch to mastery fast. Would it be okay if I share just 2 things that might help you get, or that will help you get from launch to mastery fast? Would that be okay? I promise this will only take a couple of minutes. So there's 2 approaches to this. The first one is done for you, where we do the work. Second one is done with you, where I teach you how to do the work so that you can master this yourself. Done for you is the fast, easy way. We have the Enlightened Stock Trading Signal Service, which does all of the work for you. The first signal service is the Dolphin Trading Signal Service. This is a single ETF. Again, it's QLD. It has a maximum of 1 signal per day. The orders are all generated when the market is closed, so you don't have to watch the market during the day, and you get a single email to your inbox once a day telling you exactly what order to place. The signals are based on a very well backtested, robust system that has been trading live for many years. It went live in 2018 and basically unmodified since then. So you can see the vertical line here is when the go live date was. This is all hypothetical, and then this is live data. The system has a very strong long run return, 18% return per year, 89% winning trades, 2.4% average profit per trade. Max historical drawdown was 23% if you follow the rules exactly. The system is very robust. It has solid out of sample performance since 2018 and has been expertly designed and backtested by the team. The investment for the Dolphin signals is usually $62 US a month. All you have to do is join the subscription, check your email each day, place the order that the email suggests, and you'll be following the system. We have another signal service, Ultimo. This is based on 7 different ETFs, so you get a little more diversification. Stocks and bonds. Again, it trades when the market's closed. You've got daily email signals to your inbox again. It's diversified across small, medium, and large caps, medium and long-term bonds, long and short. Average return, 15% return per year. 66% of trades are winners. 1% average profit per trade, and a max drawdown of 12%. So this is it doesn't look smoother on this chart, but the drawdown is much lower on the Ultimo system than it is on the Dolphin system. And you can see here the annual profile. Now, important to remember, these systems are both very selective, so they're not invested all that often. They're both in the market only a small percentage of the time, so a lot of the time you've got cash sitting on the sidelines that you can do other things with. Ultimo is also $62 US per month to subscribe to. Now, for this event, what I thought I would do is combine these together, give you one offer, combine both the Dolphin signals and the Ultimo signals together. Instead of 62 each, it's 99 for both, so you save 20%, but I'm going to let you try them for free for 30 days. So chances are during that 30 days, hopefully you can make some money with the signals, at least see how they work. If you like it, keep them. If you don't, cancel it. It's not going to cost you anything. So that's the done for you approach. You can start trading systematically using my systems. Again, free for 30 days, then $99 a month, and that's a saving of 20%. Plus, if you subscribe to this, I'm going to give you 750% off our Done With You mentoring program, which I'll share with you now. So Done With You is only for a certain type of person. You have to be an analytical person. You have to have $50,000 or more to invest to take advantage of the diversification opportunities that I'm going to share with you. You've got to be comfortable with computers. You've got to be willing to ask questions, and you've got to want to learn fast and save years of pain. If that's you, then I can help you. Here's our guarantee. We'll have you up and running with your first system in 6 weeks, and we'll give you a portfolio of 3 or more fully automated trading systems that you're 100% confident in within 6 months, or we'll work with you for free for another 6 months to make that happen. All you have to do is attend one of our live sessions each week, complete our core courses and implement, and follow and use the discussion forum each week. Here's what you get in the Ultimate Trader Success Bundle. You get the core program, which is the Trader Success System, which includes the Knowledge Bank, which is courses that cover every aspect of systematic trading from launch all the way through to mastery. It's a very comprehensive program that covers all 5 stages of your journey. You get the Trading System Collection, which is 20+ proven trading systems, and you get those fully disclosed so that you can see how they work and test them for yourself. Code Vault, Rapid System Builder to build your own systems, and you get access to our community so that you can avoid struggling alone and work with other traders on the same journey. Our mentoring program also includes a success accountability as we guide you through that journey. Our community manager guides you through step by step, make sure that you don't skip anything, make sure you're doing the right things. 24/7 AI support. I have an AI clone of me. I put hundreds of hours of videos and hundreds of articles into the training this clone, so it answers like I would answer to give you instant responses. 6 months of mentoring, which includes 4 live sessions a week, and the smart automation engine so that you can automate your trading as well. Again, no risk guarantee. This program is not for everyone. As I said, it's only if you've got a substantial trading account so that you can justify the investment and also benefit from the diversification. The regular investment is $6,250 US, strictly by application only. You cannot buy this today, but you can apply, and we'll have a conversation and see if it's right for you. So the next steps for you is scan the QR code and get the Done For You, Done For Me service. This will give you 1 month free of access to the Dolphin and the Ultimo trading systems. Just make sure you also use the coupon code EST Metastock at the, oops, I've misspelled that there. If you make sure you use the coupon code at the checkout to get 20% discount. And if you want to apply for the mentoring program, just go to bit.ly/EST apply. We'll schedule a session, we'll have a conversation, see if it's right for you. So that's everything I've got for you today. Love to take some questions if there are any, Bobby, so I don't know if you want to help me out with that, if you can see any questions in the chat. I'm having a little trouble with the chat right now, so maybe you can feed them to me if there are any.
Yep. Hey, Adrian, great job on your presentation. Sorry, my unmute button moved to the other side. Yeah, I don't see any questions that came in from YouTube, and it seems like you kind of answered everything as you went with GoTo. So I think you covered it really well. You know, it was interesting to kind of watch your presentation. I like everything that you had to share. I liked seeing some of those Metastock charts, looked really nice, and I like what you're doing. So great, thanks so much for speaking with us. for speaking for us today. And, I hope we can have you on again in the future.
Absolutely. Thanks so much for having me. I hope everyone learned something, and go systematic, because it will change your trading world. When I did it, I shrunk my trading from 4 to 5 hours a night to 30 minutes a night, and then later to 10 minutes when I refined the process. It's so much less stressful. So I really hope people learn about this style of trading and really adopt it.
Yeah, that's fantastic. Yeah, thanks again. I'll go ahead and kind of just take over here. Share my screen. All right, guys. So yeah, that was Adrian Reed. That wraps up our presenters for the day. I have just a couple of final slides to kind of share with you all. And then, you have the rest of the Mondays to yourself, or the rest of Monday to yourself. Thank you all for kind of being here. I've been kind of looking through the audience list and see some of you have been here for most of the day. I know some of you kind of just joined in. If you guys are interested in accessing the recording to today's session, if you missed anything, you can find that at metastock.com/summit-savings. That link would also allow you to sign up for a trial of Metastock, and if you're interested in any of the programs that are available on Metastock that were shown today, you can also sign up for those there as well. We had a number of different programs. So you had the Market Edge Technology, Elasticity 2, Power Bundle 360, and the Paragon Toolkit. Those are all available at the metastock.com/summit-savings. You can tell it's been a long day of speaking for me here. Also, if you have any questions, though, that you didn't get answered now, visit our chat room, metastock.com/sales chat, and we can help you out with that. If you wanted to, get any more details from one of the speakers or something, reach out to us. I can personally help too if one of our sales team can't answer the question, or if you need to get in touch with one of the speakers or ask a question, I can reach out to them for you. But our chat room is probably the best place to start. So we did have, I'm not where I thought I was in my presentation. I thought we were way down here. See, this is kind of everyone that spoke. You can go back into the recordings. It's about an hour for each speaker, and that's what it's going to look like. You can also find this video on our YouTube channel, which is youtube.com/Metastock. And yeah, I think that kind of covers everything for today. I'm trying to keep my eye on the chat room here to see if anything else has come through. Oh, let's see. Okay, sorry about that. I was scrolling down through there. It looks like we got most of the things answered. So I think that's going to do it. Definitely reach out if you guys have any additional questions, and we hope to see you again in the future. For those of you that got the Market Edge Technology, we will be doing that bootcamp on the 30th, and you can just expect an email before then with your link to join. And I look forward to seeing you all during the next event. Thanks so much.